global SaaS players. They have a sprawling set of business suite which expands from finance to collaboration to developer tools. And now with the onset of
Stocks on Wall Street closed Tuesday session with slight gains, but the fall in software stock keeps gains in check. The Dow and Nasdaq both added 30 points. Major markets across Asia remained shut. GIFT Nifty is indicating a positive open for the D Street. US-Iranian officials hold second round of talks in Geneva. Iran's foreign minister says both countries have reached an understanding on the main guiding principles to resolve their nuclear dispute, but that does not mean a deal is imminent. US Vice President J.D. Vance also added that talks went well, with both countries agreeing to meet later. Oil prices declined nearly 2% overnight as US and Iran signaled progress in nuclear talks. Gold and silver prices, however, declined amid the ongoing talk between US and Iran. Gold slipped below $4,900 a month. U.S. Trade Representative Jamison Greer signaled that Trump administration is open to changing how its tariffs on steel and aluminum are enforced, as businesses have argued that calculating duties has been complex and costly. Rollback, if any, could have a mixed reaction on Indian steel and aluminum stocks. Prime Minister Narendra Modi hosts French President Macron in India. Bilateral talks covered cooperation in industry, defense, clean energy, space and emerging technologies. The two nations will also strengthen networks between startups and MSMEs, promote exchange among students and researchers, and establish new joint innovation centers. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. In terms of the Asian markets, most of the Asian markets are shut. Whether you look at the Korean index, you will see Singapore, Taiwan, China, all of them are on a holiday. So we do not have much volumes coming in on the Asian front. ASX 200 is the one that's managing to hold on to some bit of a green in the trading session. Nifty implied open, indicating a bit of a positive start for the Indian market. Last couple of days, we've seen a bit of a positive uptick. As of now, it's a 20-point uptick that the Nifty implied open is indicating. So let's move on and now talk about what are the overnight cues that have come in on the domestic front, on the global front as well, that could impact our Indian markets. We have a team of research here to set you up for trade, tell you which are the important stocks to watch out for, as well as cues in the world of F&O. First up, let's go across to Gaurav, who's here to tell us the important cues that we're keeping an eye out on in today's trading session. Good morning, Gaurav.
Well, good morning. If you look at Nifty, it was in a shade of green yesterday with 0.2% of gain, and it was led by Adani Enterprise, ITC, Infosys, BEL, and Adani Ports. If you look at sector-wise the performance, Nifty PSU and Nifty IT, those were the big gainers. But at the same time, Nifty Metals remained in that losing side. At the same time, what was a positive cue is that FIR turned positive once again, because if you look at the FIR net position, they were net buyers worth 990 crores in the market. So what are the cues that we are watching today? First is that if you look at Asian markets, as you mentioned rightly, many of the Asian exchanges are closed on the back of the Lunar New Year in the likes of Singapore, Taiwan, China, Hong Kong. But at the same time, let's not forget that the French President, Mr. Macron, is here in India, and he is going to visit the AI Summit as well. So that is something that we will be closely watching out on, as we are already seeing many deals flowing through across India and other nations as well. If you look at the global cues, FOMC minutes of meeting will be released today. So that is something that we will be watching out for. And at the same time, some key data points like building permits and housing starts. Now, this is something that we will be watching from the US market. From the Japanese market, we will be seeing what the balance of trade amount comes. And let's not forget that now there is also some deal which is going on between the US and Japan. So let's also watch out on that if there is any impact on the Indian market. And lastly, let's also not forget about the Iran and US talks. So that is also a crucial part, because that is not only impact the crude, but it will also be impacting the imports and exports market. So let's focus on all these events and see how the market performs. But all in all, GIFT Nifty as of now suggests some positive upside in the beginning of the day today.
Okay, Gaurav, thank you so much for that. But let's go across to Ria, who's here to tell us some of the stocks that we're keeping an eye out on this morning. Good morning, Ria.
Well, good morning. Let's start off with Dabur first. They have appointed Harjeet Bhalla as the India CEO, and they have elevated Mohit Malhotra to the global CEO role. Ola Electric will also be in focus. The Goa High Court has stayed the arrest warrant against Bhavish Agarwal issued by the Consumer Court, and the High Court has also observed that the District Consumer Commission had exceeded its jurisdiction under the Consumer Protection Act while issuing the warrant. So this stock will be in focus on the back of that. Dilip Bilkon will also be in focus. They have been declared as the L1 bidder for a 702 crore project, EPC project, which will be executed over the next 24 months. And lastly, BHEL has also been awarded an order from SAIL for a captive power plant. The order value is between 1200 to 1500 crores, and this will be executed over 39 months.
Okay, thank you so much for that, Ria. But let's go across to Sudarshan, who's here to give us the final update that we should keep an eye out on today. That's in the world of F&O. Good morning, Sudarshan. Today, a muted start as of now, slight bit positive start, we could say, for the Nifty. But what are the cues suggesting?
Good morning, Vinny. So, if you talk about yesterday's session, it was not a bad day of trade. Even if you take a look by the point-wise, Nifty was just up around 20 to 30 points. But good parties, Nifty has held on to the levels around 100 DMA of 25,690. Now, the broad range for Nifty is from 25,500 to 26,000 as per the options data. Another positive part is FIs have built positions on the long side. Now, flows, if you talk about in the index futures, they have bought off almost 700 crore, but they were sellers in select stocks. That's the reason the stock futures selling figure was around 1900 crore. Come to the exposure, longs exposure has seen a minor increase 21% because of the addition of long contracts of around 3600. On the short side, they have reduced positions by around 230 contracts. Now, the overall short exposure is 79%. Now, in the options data, 25,700 and 25,500 have seen maximum additions on the put side. On the call side, 26,000 and 5,700 were the most active ones. Now, support for Nifty would be 25,500. That's your 20 DMA. And resistance, first resistance would be around 25,756. That's your 50 DMA. Two stocks remain in the bank. Those are Sale and Samant Capital. I'll keep an eye on few stocks. Those stocks which have been seeing fresh longs are first Indian Bank. All the PSU banks have been were higher yesterday also, and most of them have seen fresh longs. Union Bank. And another one is PG Electroplast, has been seeing an up move for the last few sessions. On the short side, BSE, all the capital market plays have been under pressure for the last few days. BSE has been seeing fresh shorts. Wari, Hinzing, after the big fall that we have seen in precious metals, keep an eye on that. And PB Fintech, because there was some news flow as well. So all these stocks have seen fresh shorts in the yesterday's session.
Okay, thank you so much for that, Sudarshan. But on that note, we're actually going to slip into a very short break. Up next, we'll get you all the overnight developments from the White House in a special segment, Trump What? Stay tuned in. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's move on and talk about the US market. Wall Street indices ended with mild gains in yesterday's trading session. Software-related stocks continued to see that fall due to AI-related fears. Let's go across to CNBC's Steve Kowak, who's here to give us a wrap on what happened on Wall Street.
U.S. markets were up across the major indexes in Tuesday trading as Wall Street tries to mount a comeback after a losing week. The Dow gained 32 points, the S&P 500 added 7 points, and the Nasdaq was up 32 points. Warner Brothers Discovery said Tuesday it would restart merger talks with Paramount Skydance for a limited 7-day window. Paramount launched a hostile takeover offer for the media giant at $30 per share after losing out to Netflix in a bidding war. And Bayer said Tuesday its Monsanto unit is proposing a $7.25 billion class action settlement to resolve all current and future claims that its Roundup weed killer gave customers cancer. Under the terms, people who can prove they were diagnosed with non-Hodgkin's lymphoma after being exposed to Roundup could claim funds for up to 21 years. The plan still needs approval from a judge. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. Now, moving on, Ellen Zentner of Morgan Stanley Wealth Management says that U.S. economy is not performing well in terms of fiscal push and acceleration in the market. Adds productivity needs to be broadening out across sectors other than tech and AI. Listen in.
In the CPI report from last week, we sort of glossed over the fact that if you took out used vehicles, there were price increases for a lot of goods. And who hasn't opened up the paper? Sorry, I'm dating myself. Opened up your news app and read about price hikes that are happening at the beginning of the year as companies didn't do it last year and now they have to make up for lost time. Is that something that's going to derail the economy if inflation does reaccelerate here? I don't think so. What we want to see, though, is that productivity is broadening out across sectors and not just tech and AI heavy, or the results that we need to get that those efficiencies onboarded to businesses broadly, and that's how you get the other 493 companies in the S&P 500 to move higher. And we're seeing that. Yes. And we're seeing some nascent signs of business investment broadening out while still getting more capex in those heavy areas of tech and AI, which is absolutely needed.
Now, moving on, and in some important statements coming in from U.S. Trade Representative Jameson Greer, who says that Trump administration is open to some adjustments to steel and aluminum tariffs, even though they have been very successful. Listen in.
Well, on steel, remember, we've shipped 300,000 million metric tons more this year than we did the year before. We've produced more than Japan. There was some reporting over the week about adjustments there. I mean, you may want to sometimes adjust the way some of the tariffs are applied for compliance purposes. I'm not giving you double talk here. We've heard stories of companies that have had to hire extra people for compliance. We're not trying to have people, do so much bean counting that they're not running their company correctly. The president's tariffs on steel and aluminum have been very successful, shipping more steel than ever, opening up new steel lines, new aluminum smelters announced. So clearly those are going the right direction. They're going to stay in place. Even if the tariffs affected prices in the way people say, which they don't, right? All the studies are overblown. But even if they did, it's usually a one-time price effect, not a sequential price effect over 14 months. I mean, it's just crazy. If you look at inflation, the actual inflation for manufactured goods, right, which is the bulk of what's being tariffed coming in, was at only 1.1% over the past 12 months. So the idea that the tariffs are inflationary are totally belied by the data. And guess what? That's what happened during the first term too. When we put significant tariffs on China, inflation went down. So all of these studies, all of these things, they're just predictions. They have never come into effect. And this is real money coming in. The point of the tariffs is to reshore and protect domestic production, but all of that tariff revenue has a real effect. And I've had members of Congress who haven't historically been fans of tariffs come to me and say, maybe we can legislate this because that is actual funding that's going to come in to offset the deficit.
Now, moving on and getting you the latest on Trump-related developments, starting with the first commentary that came in. U.S. President Donald Trump has announced Japan's first round of investments in American energy and critical mineral projects, marking an early rollout of commitments made under sweeping bilateral trade agreement. Trump highlighted in a post on Truth Social, framing it as a major milestone in U.S.-Japan economic ties. He said that Japan is now officially and financially moving forward with the first set of investments under its $550 billion commitment to invest in the United States. Moving on, President Donald Trump has also been talking about tax refunds, and this year that will be substantially larger than ever before because of his signature of that one big beautiful bill which was passed last year. Now, he took to Truth Social and he said to promote the expected refunds ahead of 2026 filing season, saying that some taxpayers could see more than 20% returned. He pointed to the provision that will eliminate taxes on tips, social security benefits for seniors, and overtime pay, while allowing interest deductions on car loans, among other measures that were announced as well. And finally, the US-Iran talks that made progress in nuclear talks in Geneva on Tuesday, with Tehran negotiations scheduled to return with new proposals in the next couple of weeks. And this is as per reports. Also, Vice President J.D. Vance indicated the talks between US and Iran went well. That's all we have in today's edition of Trump Watch, but details on Iran and US nuclear talks after this short break as well. Welcome back to Power Breakfast on CNBC TV 18. Now, the second round of talks between Iran and United States concluded in Geneva, and the negotiations held at Oman's embassy in Swiss City were mediated by Omani Foreign Minister, who said that the talks ended with good progress towards identifying common goals and relevant technical issues. He added that much work is yet to be done and parties left with clear next steps before the next meeting. A report from Axios cited a US official saying that Iran is expected to return with detailed proposals in the next 2 weeks. US Vice President J.D. Vance also commented on the talks, saying that in some ways United States diplomatic talks with Iran went well as both parties agreed to meet afterwards. Listen in.
I think the president has a lot of options. We do have a very powerful military. The president's shown a willingness to use it. He also has a remarkable diplomatic team. He's shown a willingness to use that, too. And so what the president has been very clear with the Iranians, and actually I just talked to Steve Witkoff and Jared Kushner this morning about some of their negotiations, is the United States has certain red lines. Our primary interest here is we don't want Iran to get a nuclear weapon. We don't want nuclear proliferation.
Meanwhile, Iran's foreign minister Araghchi told Iranian media that the talks were held in a constructive atmosphere compared to previous round in Oman. He added that the Islamic Republic has consistently affirmed that it neither seeks to manufacture nor acquire nuclear weapons.
A new window of opportunity has opened, under which we had the second round of the negotiations with the United States earlier today here in Geneva. We are hopeful that negotiation will lead to a sustainable and negotiated solution which can serve the interest of relevant parties and the broader region. The Islamic Republic of Iran has consistently affirmed that it neither seeks to manufacture nor to acquire nuclear weapons, which have no place whatsoever in Iran's national security doctrine.
Okay, now let's move on and get Manisha Gupta, who's here to tell us what's happening in the world of commodities this morning. Good morning, Manisha. Commentaries coming in on US-Iran front. Gold seems like it's lost some shine today.
It is, yes. The US and Iran, as we just played out those bites therein, have reached a general agreement. But a document is yet to be signed here, and there is a belief that there could be another round of talks as well coming in there. For the crude oil prices, it also is about the US-mediated Ukraine-Russia negotiations, which also are expected to continue in Geneva. So we have seen some premium come off in case of crude oil prices, which have edged lower for a third straight day. Not just crude, natural gas is trading at a 6-week lows as well. With the kind of mixed comments that we are hearing from the Fed officials on rate cut, there is some decline that we've seen in precious metals also. So gold has declined overnight, silver fell 2%, platinum is trading at a 2-month lows, copper is trading at a 6-week lows, nickel at a 1-month low, lead at an 8-week lows. So that's exactly how the commodity market seems to be moving right now. From energy to precious metals to base metals, everything seems to be trading in a bit of a decline right now. The strength in US dollar index also seems to be weighing on.
Okay, Manisha, thank you so much for that. But let's move on. And French President Emmanuel Macron is in India for an official visit. Macron held bilateral talks with Prime Minister Narendra Modi in Mumbai and will be attending the AI summit in the national capital today. Both leaders also virtually inaugurated a light helicopter final assembly line at of Tata Airbus at Karnataka's Vemagal. While addressing the press conference in Mumbai, PM Modi said that Indo-French ties knows no boundaries. Macron also highlighted the collaboration between the two nations and called for deeper strategic partnership.
हमें गर्व है कि भारत और फ्रांस मिलकर माउंट एवरेस्ट की ऊंचाइयों तक उड़ान भरने वाला विश्व का एकमात्र हेलीकॉप्टर भारत में बनाएंगे और ये पूरे विश्व को एक्सपोर्ट भी करेंगे। यानी इंडिया फ्रांस पार्टनरशिप नोज नो बाउंड्रीज।
हमने ये भी आज निर्णय लिया है कि हम इस साझेदारी को एक विशेष स्ट्रेटेजिक साझेदारी में बदलेंगे। हम अलग अलग चीज़ों पर काम करके हमने एक नए रास्ते कई नए रास्ते चुने हैं, जैसे कि तीसरा रास्ता जो हिंद प्रशांत क्षेत्र का हो या फिर तकनीक का हो या फिर और जिसमें हम ऐसा रास्ता है जिसमें कोई भी हेजेमनी ना हो और हम पूरी तरह से कानून में रूल ऑफ लॉ में विश्वास करते हैं।
Okay, with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, a Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Hi guys, good morning and welcome to Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I am Reema Tendulkar. With me is Nigel and we're missing Prashant, who is in Delhi and all set to attend the India AI Summit. Hi Prashant.
Here for work, guys. Good morning. Reema, the way Reema put it, she made it seem like
India
I'm here
AI Summit.
No, but you know, it's beautiful here, guys. I must tell you, it's raining. It's raining. So, you know, there was some low pressure weather system. But it's actually raining in this morning. So the weather is cool, nice, crisp, chilly, whatever you want to say. So yeah, I mean, looking forward to it. So it's going to be an interesting one.
Yeah. Sorry, I was saying, I hope it's not
Sorry.
so beautiful that you decide to leave Bombay and shift to Delhi.
No, वो दिन गए. What can I say?
The missus has messaged me, make sure Prashant comes back, irrespective of how much he's enjoying himself out there. Let's get straight, Prashant, to the market action.
Yeah, no, I mean, I think we are picking up on the US market action after one day of holiday, guys, right? So Monday was shut. We have Qs last night. Nothing very decisive with regards to the Qs, but for what it's worth, US markets, I mean, actually, the bulk of the action happened right at the word go. The market sold off about almost 1% at the word go and then picked up in a V-shaped recovery from that point on. So the final close isn't very much to write home about. The S&P was up about 0.1. The NASDAQ was up about 0.14. The Russell, which is the small cap index, ended about, actually absolutely flat. So this is not in any way going to make a difference directionally when you look at things. Oil prices is another story, down 2%. And we were talking about this with regards to US and Iran, how the market perhaps at the margin has kind of given up on this, right? Well, there's news up and down, but nothing really ever happens in a decisive way. But looks like maybe things are happening in that decisive direction. So signs that US and Iran have made progress with regards to nuclear talks. There was the Iranian foreign minister who said that they've reached a general agreement with regards to a nuclear agreement. I mean, the framework, I mean, you know, in the trade parlance, we call it a framework agreement, and this sounded something similar. So it's a general agreement. The specifics have to be worked out. I think from the US side, there were some comments which Bloomberg carried that, you know, they are going to come back with, you know, specifics in terms of what they're ready to give and do for the US to agree to some sort of an agreement. So oil, of course, taking a cue there, as I said, down about almost 2%. On the back of it, you also have these assets which do well because of risk aversion, gold and silver, which also sold off. Gold was down 3, silver, I think about $4,800, above 48, but you know, we were at 5,000 2 days back. Silver prices were down about 5.5% this morning. They're sideways to stable. If you look at futures, both gold and silver. The other factor for precious metals, of course, is the fact that China is out, right, for New Year, for Lunar New Year holidays. So they are not there for the entire week, and that's a very large source of demand and activity and speculation, whatever you want to call it, for precious commodities. So I think that's the other factor. Dollar index was up about 0.25%, so 97 plus. Now I'll just come to the other area which has been the one and only focal point for the market here, which is IT services. And this all, of course, started 2 Wednesdays back in the US with regards to the sell-off in software services companies in US. And just taking stock of where they left off last night. So Infosys was up about 0.25%. But Wipro was down 2%. And the other names, right, they're all up on your screen. EPAM was down 2, Globant was down 2, Cognizant was down 2, and Accenture was down about 2% as well. So doesn't look like there has been very much by way of respite as far as US software stocks are concerned. Remember, Friday, of course, was the absolute low for the IT index. From there, we are up a little bit. There has been some short covering, some recovery, some lower level buying, etc., which has come through. And we'll discuss this. You know, for the first time, yesterday, we heard from IT companies themselves. So far, we've been hearing from, you know, analysts and the model companies and writers, etc., how this is gloom and doom, etc. But now IT companies are starting to talk. For example, Nandan Nilekani, Salil Parekh of Infosys. We had CVK from HCLTech speaking with Shireen. So I think, I think we'll hear more. Maybe TCS today, and others as well, in terms of how they're, and the message seems to be clear. This is hard work, and they are very much required. They need to adapt, they need to change, retrain workforce, etc. But this is not a done deal. What to do with regards to software stocks? I think with so much uncertainty at extreme levels, expect buying to come back. But otherwise, I think the market seems to believe that better to be hands-off right now. Let's see where this settles, where the debate settles, and then we'll start to come in at this point in time. I don't want to take too much risk. Maybe valuations come off more. As I said, at extremes, like, for example, that Friday, you perhaps get some buying interest starting to come back. Otherwise, maybe a little bit of hands-off. I'll just tie in the levels here. The Nifty, I think 25,780 is the resistance for the market. And we're not very far away from where we left off yesterday. Support is very much 25,450. It's still a range, and the market's been trading that range. So at the upper end, we'll see if the market's got enough steam to cross those levels. And if it's not, then you're basically looking at a retest of some of those supports from where the market bounced 2 days back. GIFT Nifty gives you a quick sense of how we're likely to start, and then we'll pick it up from there and take it forward. I think 12 points, so neither here nor there. F&O positioning and what the numbers tell us. Nigel has walked across to the wall with all of that. Nigel, over to you.
Well, in terms of flows overnight, both the institutions were buyers. The FI participation, though, was very, very low. So, yes, we had a positive number of close to 100,000 crores coming in from institutions. But the FIs, it's like, 5-a-side game in comparison to the normal 11-a-side game that you're used to. So that's an important point. Gross participation much lower than what we have seen on an average in February itself. The FIs, well, they added long positions in trade yesterday, but the country remained short with close to 79% of their positions on the short side. But as I said, in the cash market, the volumes itself, the gross participation was 50% lower if you compare it with the averages that we've seen in February. The FIs, well, they added way more shorts than longs on stock futures. And the Nifty PCR that a couple of trading sessions ago had gone down to around 0.64. That's come up to around 1.1. So that's more or less in the middle of that range that we've seen in the past of around 0.6 on the downside, 1.6 on the upside. And there was writing that was seen at the 25,700 strike. That's call as well as puts. Now that's known as a short straddle, which means they're pocketing a premium of close to around 300 rupees. That's the premium between the two. And if you're writing this particular strategy, if you're doing the short straddle where you're pocketing 300 rupees and 300 rupees higher as well as lower from around this 25,700 odd mark, which gives you the range. On the downside, the 25,400, on the upside around 26,000 odd mark. That's the important range you're looking at, going by the options data and going by the strategy on the options side. In terms of lower levels, well, the 20 as well as the 200 EMA, that's very important, between the 25,300 to around the 25,500 odd mark. So that range should not break on the downside. Extremely important, particularly this 25,300 odd mark. The tech index, that showed signs of coming back to life yesterday. So just a couple of trading sessions ago, it was at around 31,400. That bounced up to around 33,700, which is, the high that we saw yesterday. However, this level got rejected. If you pull up the intraday chart as well, you'll see this level got rejected. So till that lower level is protected, you'll be hoping for a bit of a bounce. But I think this is going to be a bit of a resistance zone, that 33,700 odd mark, because the way we came off from the highs in yesterday's trading session. I think after a couple of good trading sessions, maybe today the bulls will find it a little bit tougher to fight back. Let's see how that goes.
Got that. Thank you very much for that. Let's get to the equity calls then. It's Mahesh Nandurkar of Jefferies who says December quarter earnings performance was good, with pre-extraordinary earnings seeing an 8-quarter high growth of 18% and a small EPS upgrade. Sequential improvement in growth was seen in most sectors, with lending, financials and staples also recovering. Revenue growth of domestic companies improved to an 11-quarter high of 16%. MSCI India earnings growth for FY26 now stands at 10%. Employee cost growth improvement to 10% is also encouraging. Surendra Goyal of Citi believes potential acceleration in earnings growth from financials, consumer and industrial should more than offset the relative drag from any misses in IT services. Overall, he thinks the risk-reward is favorable due to multiple reasons. Earnings trajectory is improving, the US trade deal should remove uncertainty on exports, and valuations also relatively reasonable post the recent underperformance versus emerging markets in the last 1 year. He adds any moderation in the global AI trade could help India. He says the key risks are further slowdown in jobs, wages growth, although this has been at play in IT services now for some time, and you're seeing that volatility in the flow numbers. December 2026 Nifty target stands at 28,500. All right, let's invite Matt Orton, Chief Market Strategist at Raymond James Investment. Matt, once again, thank you very much for joining in. I need to start the conversation with what's happening around AI back home in India. We've got the India AI Summit. All the big tech titans are, coming here to India. But you know what caught my attention yesterday was Anthropic's update. They've now announced a new update, Sonnet 4.6. And what's remarkable is that it comes just 12 days after their prior update, which is what caused the sell-off in global market. The pace of AI innovation, as AI is getting smarter, that AI is used to build another AI, which is even smarter. It's absolutely incredible, right? That in 12 days, we've got another update, and everyone's watching this with microscopic attention. Take us through your thoughts on this.
Yes, well, good morning, Rima. It is amazing the pace at which things are moving on the AI front, but the speed at which it's moving should also be a reminder to investors that that pace is too quick to really come to brash decisions around what the overall long-term investment implications are going to be to a very large cohort of companies. So last week, I almost described as AI whack-a-mole across the market. I mean, literally, there were just drive-by shootings of a number of different sectors and industries, or anything that was perceived to be at risk of artificial intelligence coming in and taking away kind of future earnings growth for the market. And Indian IT companies were front and center in some of that action as well. But in my opinion, a lot of those reactions are overdone. A lot of high-quality investments have been thrown out with the bathwater. I'm not sure I want to be wading into a number of software names because, again, the pace of innovation is very rapid. It's too soon to know whose earnings are going to be potentially displaced. But a number of companies, and I would argue the Indian IT services names in particular, are really on the AI enablement side. They benefit from more companies, especially in the US and Europe, integrating and using a lot of this new advanced artificial intelligence. And I would also argue a lot of their own businesses can be enhanced for further margin by integrating artificial intelligence as well. So I think these dips are extreme. I'm a buyer on some of these dips once the dust starts to settle and we see a little bit of technical repair to the charts. But I like the setup long term from a risk reward perspective. It's overdone based on where fundamentals are.
Yeah. No, yeah, you mean, Matt, hi, morning. You mean Indian IT services stocks, right? That's what the comment was about.
Correct. That's right, Prashant.
Okay. Got it. Now, the US market itself, Matt, I mean, is what's happening there? I mean, I think NVIDIA did well. AMD was down last night. Some are starting to say whether are we finally starting to see on charts, etc. I've seen some started to talk about how these stocks are losing momentum. I mean, at least the large 7 names, 8 names. Is something changing finally, Matt? Yeah.
Something is changing. We're seeing a lot of dispersion across the market, and there's extreme dispersion intra-sector and anything kind of AI related versus those that are not. And I think the challenge, Prashant, with respect to where the market is that while seeing increased breadth and rotation is critically important to sustaining bull markets over the longer term, the challenge is the leadership also has to hold up as well. And where we are is we came from really strong earnings across most of those top 7 companies. And we're seeing significant weakness and a lack of interest in a lot of those names. And that keeps a lid on how high the market can go. And I can't help but think in the very short term that we're likely going to see a break. Something has to break. Either everyone realizes that AI is not going to eat everyone's lunch, and a lot of these market stalwarts, the biggest companies, are benefiting from these trends. Or what I think is more likely is we see a risk-off scenario in the very short term where that dispersion actually starts to narrow. A lot of the big beneficiaries that haven't moved up on fundamental strength, like consumer staples, for example, you start to see some weakness or reticence to start buying that, and you see a sell-off that comes across the overall market. that I think would be the opportune time for investors to start looking to buy the dip, because the fundamentals overall are strong. The macro backdrop is very, very strong. But I think we need to have some sort of shakeout to get investors to refocus on the underlying fundamentals and what are actually driving earnings going forward.
Hi, Matt. Morning. Good to see you in. Turning the attention a little bit away from equities, I want to talk about gold. Ray Dalio continues to sound very bullish on gold. But Bridgewater's latest 13F shows that they've actually exited SPDR gold shares. What's your interpretation of this? Is this the case basically of portfolio rebalancing, or do you think there's a bit of a shift in terms of conviction because gold from the recent peak actually has corrected a goodish bit? So your view on it.
Yeah, it has, Nigel. And I think it's similar to what I've been doing. I'm still very bullish on gold, both this year and longer term, but I've tactically reduced my positioning to gold. I still urge clients to hold at least, 1.5% to 2% in portfolios, if not more, just because of the diversification benefits you get. But gold rallied incredibly hard, incredibly quickly. And so I think it makes sense to take a little bit of chips off the table, allow there to be some repair. We're also in a very seasonally weak period for gold. Whenever you get to the Chinese Lunar New Year, it tends to be a very risk-off period for gold when you look historically. And so I think it's just a tactical play more than anything else. And once we get through the next month or so where we see this historical weakness, that's when I would look to start adding to positioning again, because there's still geopolitical risks. There's still challenges with respect to monetary debasement. We're still seeing central banks buying gold. And so I think that will keep long-term enthusiasm for the precious metal alive.
Matt, good conversation as always. Thank you very much for joining us and speak to you again soon. Thank you. Well, in some important comments coming in from U.S. Trade Representative Jamieson Greer, he said that the Trump administration is open to some adjustments to steel and aluminum tariffs, even though they've been very successful. Listen in.
Well, on steel, remember, we've shipped 300,000 million metric tons more this year than we did the year before. We've produced more than Japan. There was some reporting over the week about adjustments there. I mean, you may want to sometimes adjust the way some of the tariffs are applied for compliance purposes. I'm not giving you double talk here. We've heard stories of companies that have had to hire extra people for compliance. We're not trying to have people, do so much bean counting that they're not running their company correctly. The president's tariffs on steel and aluminum have been very successful, shipping more steel than ever, opening up new steel lines, new aluminum smelters announced. So clearly those are going the right direction. They're going to stay in place. Even if the tariffs affected prices in the way people say, which they don't, right? All the studies are overblown. But even if they did, it's usually a one-time price effect, not a sequential price effect over 14 months. I mean, it's just crazy. If you look at inflation, the actual inflation for manufactured goods, right, which is the bulk of what's being tariffed coming in, was at only 1.1% over the past 12 months. So the idea that the tariffs are inflationary are totally belied by the data. And guess what? That's what happened during the first term too. When we put significant tariffs on China, inflation went down. So all of these studies, all of these things, they're just predictions. They have never come into effect. And this is real money coming in. The point of the tariffs is to reshore and protect domestic production, but all of that tariff revenue has a real effect. And I've had members of Congress who haven't historically been fans of tariffs come to me and say, maybe we can legislate this, because that is actual funding that's going to come in to offset the deficit.
Well, let's tell you what we've lined up this Wednesday morning on our show today. So first up, 8:35, we put the spotlight on the IT stocks. Girish Pai of Bob Capital will join in even after the more than 30% correction, underperformance of the IT sector compared to the Nifty. He is still underweight IT. 9 a.m., Amit Anbani of PL Capital will join in on the recent defense deal wins and the outlook for the sector. 9:20, Kenneth Andrade of Old Bridge Mutual Fund will be a market master. 9:35, we'll bring you a discussion around IT, what it means for jobs with AI accelerating, with Quest Corp's Kapil Joshi and Ramni Datti of TeamLays. Following that, we'll bring you a conversation with Dr. Reddy's G.V. Prasad from the BioAsia conference. Towards the end of the show, Lata will discuss the rout in the IT stocks with Sunil Kaul of Goldman Sachs. Get into a quick break then. On the other side, we'll put the stocks to watch on our radar. CNBC TV 18's list of top stocks to watch.
Welcome back. There's 40 minutes to go for the pre-open session to kick off, and there is lots of individual single stocks we want to address. So our research team is here with the list of stocks that you need to be aware of, mindful of, and we're going to start with Ola Electric. Sud is here. Sud, good morning. I guess some trouble for the founder and now some relief.
Good morning, Prashant. So Ola Electric is in focus once again, and this time it's not because of the sales or earnings, but it's on the back of the court order. So yesterday, first the order came from the Goa District Commission Consumer Court, which had issued arrest warrant against the CEO, Bhavish Agrawal, and that was related to the plea filed by a complainant known by Pritish Chandkant Gadi. And he had said that issue persisted in his scooter despite the repair work was done by the company, and he had sought refund of 1.5 lakh and 50,000 for mental agony and harassment. But the latest update in that case is Goa bench of Bombay High Court has stayed that arrest warrant and has also observed that Consumer Court has exceeded its jurisdiction in issuing the arrest warrant against CEO.
Okay, all right. Thanks a lot for that, sir. The problem continues for Ola. Let's hop across to Ria. She's tracking a couple of names, Dilip Bilcon and BHEL. Morning, Ria.
Well, good morning, Nigel. Both of these stocks will be in focus today on the back of order wins. First up, Dilip Bilcon has been declared as the L1 bidder for a rupees 702 crore EPC project. This is for the construction of the Narmada flood protection embankment, and the execution period for this will be 24 months. Now, keep in mind that the order book of the company as of the end of Q3 stood at roughly 29,400 crores. For BHEL as well, they have been declared, they have been given an order worth rupees 1,200 to 1,500 crores from SAIL for a captive power plant, the execution period for which will be 39 months. But the order book of the company is quite large, in excess of 2.3 lakh crores as of the end of Q3.
Thank you very much for that. It's over to Sudarshan now once again for the brokerage call of the day. Sudarshan?
So I have few stocks. First one is LG Electronics. GS has initiated coverage with a buy call and target. Its given is of 1,750 rupees per share. It says company is well placed to grow faster than industry in near to medium term. And also it has mentioned few catalysts. First, shifting income mix and rising penetration, and that will lead to faster growth in mid and premium products, and consistent track record of innovation enabling the company to sustain premiumization trends. And also global south strategy should enable the company to improve export growth. Next one is Maruti, which had given the price of its electric vehicle e-Vitara yesterday, and had the price was 11 lakh rupees. That's looking very competitive, and Nomura maintains buy call. It has given target of 16,118 rupees per share. It says e-Vitara launched. It's launched at attractive pricing and competitively priced to boost EV penetration, but may not be profitable. It assumes 12,000 to 14,000 domestic volumes for e-Vitara and its Toyota variant over FY 26-27. Last one is ITC. UBS has written the note. It maintains buy call, but has cut target price to 395 from the earlier target price of 420 rupees per share. And this note comes after sales channel suggests that company, ITC and other cigarette companies have taken a price increase. So distributor checks indicate range of imminent price hikes is now arriving. 84mm cigarettes is expected to be priced at rupees 24 per stick versus rupees 17 earlier, and this segment has seen the steepest tax increase. 64mm is expected to be priced at rupees 7 per stick versus rupees 5.90 earlier, and pricing of 69mm Gold Flake, which is the volume driver for the company, is priced at rupees 9.50, and for that new price is yet to be known, but UBS is expecting the price to be around rupees 12 for the 69mm Gold Flake cigarette. Now it is clear that the price hikes have been fully passed on the premium cigarettes, and this pricing approach, UBS believes that it may keep ITC's volume and EBIT impact to the minimum because of the tax increase that company was expected to see.
Got it. Okay, all right. Thanks a lot for that, Sir. Well, turning attention away from equities, let's get in Manisha Gupta. She's here to tell us about the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, it's a couple of things that the street is watching out for. One, it's going to be the FOMC minutes that come out today and the GDP numbers as well. So gold and silver both have seen a decline overnight. Gold fell 1.5%, while silver fell 2.5%. The dollar index steadying above 97 also was putting some pressure into the markets there. it's not just precious metals. Energy also has seen a bit of a knockoff, especially with the crude oil prices down by nearly a percentage point in the overnight market. The U.S. and Iran conversation seems to have progressed well. We have heard statements from both of those countries' premiers, and the U.S.-led Ukraine-Russia negotiations also seem to be moving in right direction, is what we hear. And that has taken some geopolitical premium off the prices. It's the same case for metals as well, profit taking coming in for that one as well. Copper is trading at around, we have seen 6-week lows come in case of the copper prices. Nickel is trading at a 1-month lows. Lead is trading at an 8-week lows as well. Platinum has declined to 2-month lows. If you look at the last 1 week, actually, gold is down by 4%, copper and platinum down 5%. Zinc is down 4%, nickel is down 8%. So the last 1 week, including today, has been bearish for many of these commodities.
Manisha, thank you very much for that. So that is the commodity and the pressure side of it in focus there. More later. We'll take a quick commercial break here, and we're going to come back in just a bit from now to connect with Girish Pai of Bob Capital Markets. And Girish, of course, has seen the IT services space for a long time. We'll ask him what is his view with regards to these stocks now after the sell-off that we've seen. Stay tuned, coming up.
Welcome back. Tech top of mind, and the India AI Summit is underway in New Delhi. And from there, our team has been getting you a lot of big voices on the AI disruption, where the industry is headed. Yesterday, Shireen had a chat with C. Vijay Kumar, MD of HCLTech, and he shares that there will be a 2 to 3% annual deflation, but that is already modeled into their business plans. Listen in on what he had to say at the annual AI Summit on the way the industry and the company is headed.
We believe there will be 2 to 3% deflation at an overall level because of AI. And this is something we've modeled. But there are at least 5 mega opportunities that we are chasing, right? AI factory, it's $1 trillion capex will mean at least $100 billion of services spent, and at least a couple of $1 billion we should be able to get from that. Physical AI is again another big opportunity. The whole agentic implementation. See, there is a huge legacy install base. We had called out about $600 million annualized revenues, advanced AI, and once again, this is different from regular AI revenue a lot of companies are talking about.
This point about 2 to 3% annual deflation is important because the fear was that on account of AI productivity, clients will ask for more discounts or pricing reduction, which will result in higher revenue deflation, maybe 5-6% or perhaps even higher. But the management of HCLTech says that it is 2 to 3%, and that's already a part of their business model. But yesterday was also the Infosys AI Investor Summit, where the management outlined their AI-first strategy and how they're positioning themselves for the next technology cycle. Importantly, the company also announced a collaboration with Anthropic to unlock AI value across the complex and regulated industries. Listen in to what Infosys had to say about the AI opportunity.
There is no opportunity gap. If anything, the opportunity is bigger than ever before. So don't get distracted by that. You should still ask the question, what is the firm doing to take advantage of this? What is the firm doing to transform its talent for this new world? What is the firm doing to design the services and products for this new world? What are they doing to tell the customer in a way that it resonates? What are they doing to make sure that the front-end conversations with clients are done properly? These are all the issues, and I'm sure everybody will not execute the same way. So there is an execution risk in doing that. So it is not an opportunity risk, it's an execution risk.
Okay, and after that, we had a lot of brokerages that have come in there and written on Infosys. Rima, tell us, what are they saying?
Well, firstly, yesterday, they also for the first time gave an AI number. TCS was doing it, HCLTech was doing it, but Infosys up until now did not do it. What they said is that the new AI services, which is basically generative AI, is now 5.5% of their overall revenue. And the AI opportunity, the generative AI opportunity, is seen at $300 to $400 billion by 2030. That number was known yesterday because Salil Parekh had shared it, the AI opportunity. But the fact that AI is now 5.5% of their revenues is something new. Brokerages are largely positive, just running through the calls with the target price, starting from the top. The most bullish appears to be JP Morgan from what we've seen, with a target price of 2030. Then you've got Nuvama, 1900, Jefferies, 1880, HSBC, 1870. You go down the list, you've got CLSA, also an outperform rating, 1779. And then you've got a Morgan Stanley at 1760. So broadly, brokerages are still very bullish, and they believe that Infosys will be able to ride out the storm. But Girish Pai, research analyst, head of institutional equity research at Bob Capital Markets, is now joining in. Girish, thank you very much for joining in. You have a hold call coming through on Infosys. Your target price is down to 1414. But first, let's begin from the top. The call on IT, and what did you make from the Infosys Investor Day? What were your key takeaways?
Right. Thanks for having me, Rima. So basically, I would say what Infosys said yesterday during its Investor Day is very similar to what I heard from TCS 2 months back when it held its own Investor Day in mid-December. So basically, both are saying that there is a fairly significant opportunity ahead of them. At the same time, they're saying that this disruption is very different from the ones that we've seen in the last 20-25 years. My own sense is this disruption is very similar to the offshore delivery disruption that global IT services is seeing. So that's point number one. And I think that is very critical in the sense that this disruption could mean that there could be new winners and losers. That's something that we need to kind of watch out for. The other couple of data points I want to share with you is what Nandan shared in his presentation. So he talked about a deployment gap. So obviously tech has run away at a very significant pace, and enterprise adoption has been lagging. That is one. This is very similar to what we heard from various companies during the digital cycle, which happened in the last 10, 15 years. Very similar situation where cloud adoption kind of lagged the technology that was moving at that point in time. The other interesting aspect that he mentioned was 92 million jobs are going to be displaced and 170 million new jobs are going to be created. The issue here is you don't know the time frame. The 92 million jobs displacement could happen in a different time frame compared to the 170 million jobs, new jobs being created. So that could mean challenges. So when I look at the sector, why I'm underweight in the sector, while optically the sector looks cheap from a P multiple perspective, tier one companies are coming at on a 1 year forward basis, slightly below the 20-year mean. And from a free cash flow yield perspective, they're very attractive, maybe closer to like 5% free cash flow yield. But the issue is, what is the trajectory of this cash flow? What is the trajectory of the earnings going forward? It's something we're not very clear about at this point in time.
So the big gap or the big argument that Indian IT companies are saying that there is a difference between the potential of AI and where AI is deployed right now at an enterprise level. You know, as Nandan said, it's easy to get productivity gains when you're looking at it from a particular task. At that point, the productivity gains can be very high, 15, 20%. But when you have to do it, when you have to implement AI at scale at an enterprise level, it's hard to get that level of productivity. But don't you think with the way at which this may be true for the next 1 or 2 years, but you know, is it possible that 2 years down the line, the gap between the potential of AI and the deployment of AI at an enterprise level, the gap between the two gets bridged, and that's when we start seeing massive disruption? So maybe the earnings are fine for the next 1 or 2 years. We haven't seen EPS downgrades yet. All we've seen is a PE derating. But that changes 2 years down the line. Do you see the gap between the two getting bridged?
Yeah, that is the exact point I'm making, Rima, that we're not very clear about what could be the trajectory of earnings and cash flow growth from here on. FY27 earnings and cash flow is probably protected, but the way the fundamental models, the foundational models are kind of rapidly changing or improving. So if you look at the data that Nandan provided in his presentation, the foundational model improvement has been to the extent of 10x to 5 to 10x over a 2-year time frame. I'm not saying that pace could continue going forward, but that could, it could be a 2x, 3x improvement in the next tranche of releases that can happen. So I would say that the foundational models are improving, and including various tools that are kind of put in, they are becoming more I would say essential, or I would say important in one sense. So I would say the deflation story is yet to play out, and as I mentioned, the numbers, the jobs displaced are about 92 million. Around what time frame then the numbers are being discussed, I'm not very clear. And 170 million is the number talked about for new jobs. That could be over a longer time frame. So that is the basic call. And again, regarding deployment, the issue is that the current situation is, I mean, if you heard the numbers, it's about 4-5% of revenues coming from AI right now. This is after a 3-year time frame, and the ChatGPT moment happened in November 2022. All the companies have been working on it, but we only have about 4-5% of revenues coming from AI, so advanced AI, so to speak. So I think the enterprise uptake has been fairly poor, and I would say that that is dependent to an extent on whether ROIs are going to be generated. One of the issues is that there are surround servers out there which are very expensive, and I don't think the enterprises see it as a situation where they can get very quick ROIs on an enterprise level implementation of AI. In pockets, it could be interesting. And when you look at the presentations of both TCS and Infosys, what you hear is discussions around productivity gains and cost savings and stuff like that. It is nothing beyond that at this point in time.
Yeah. Girish, morning. So what's actionable here? Is there anything actionable for those who own these stocks and those who don't own these stocks? I mean, for both sets, what should one do?
it's a tough call, and as a sell-side analyst, it's my occupational hazard to kind of make these kind of one-year bets, one-year calls. So to that extent, I now have, as Rima mentioned, I have a whole lot of stocks which are holds at this point in time because they've corrected quite a bit. But I think we're probably going into a bit of a value trap here. Again, things are not very clear. This is a material disruption of the industry. We don't know what happens 2 years, 3 years down the road. Who are going to be the winners and losers. So very difficult to give a call out very specifically that X or Y stock is going to be the winner, and therefore you need to take a bet on them. I would say be underweight the sector, and we have some hold calls which are on Infosys, TCS, Tech Mahindra, and Wipro. So broadly, those would be the tier 1 bets that we would have. On the tier 2 side, I would probably bet on First Source and eClerx.
Yeah. First Source and eClerx are 2 buys right now in your...
No, only First Source is a buy. I would say eClerx is a hold.
Okay. Yeah, I mean, it's one of those times, right, where it's kind of hard. It's foggy and all of that stuff. But thanks very much, Girish, for that. Appreciate it. We're going to take a quick commercial break here, and we'll come back with more on the other side. About 15 minutes to go for the pre-open session. Stay tuned. Okay, welcome back. There's 14 minutes to go for the pre-open session, and I think GIFT Nifty is still indicating a flattish kind of start, neither here nor there. The big movers from yesterday, and there were quite a few, and what did delivery numbers, volumes, etc. look like? Let's go back to Sud. Morning.
Morning, Prashant. So some interesting names. So on top of the list is Unicommerce eSolutions. Yesterday's stock has hit upper circuit of 20%. And if you talk about the volume, it was 94 lakh versus 10-day average of just 13 lakh. And remember, on Feb 13th, the stock had hit 52-week low of around 95.40 and had fallen below the IPO issue price of 108. But the up move came after the company released Q3 earnings on Feb 14. And in that, it has one of the important, our main platform, that is Uniword. And now for that, company is expecting double-digit growth from Q4. And for the same platform, in Q3, the growth was in the range of 7 to 8%. Next name is Farm Equipments. So stock had hit 52-week low on Monday, that is Feb 16. It's still trading below the IPO issue price of 215. And after that, it has started seeing an up move. And on Tuesday, the stock has surged 16% and volume was 23 lakh versus previous 10-day average of just 6.6 lakh. The reason of up move, promoters have increased the stake. On Feb 13 and 16, promoters have gone ahead and bought shares from the open market. Next name is Gandhi Tubes. So yesterday it saw volumes of 6 lakh versus previous 10-day average of less than 10,000. If you talk about the stock, it was up 13% on Tuesday, and this month the stock is up 26%. But the interesting part is it had started seeing volume increase ahead of its earnings on Feb 10. On Feb 9, volumes were 10,235 versus previous 10-day average of just 3,000. On Feb 10, the day the company released Q3 earnings, volumes increased to 31,540 versus previous 10-day average of less than 4,000. And the reason of continued up move, company's earnings were good, revenue had increased by 20%, and margin was up more than 300 basis points. Last one is RACL Geopolitical. Yesterday also I did talk about this stock. So for second straight day, it saw healthy volumes, and the stock was up 13%. In the last two sessions, the stock has moved higher by 36%, and this month, the stock is up 60%. And volumes on Tuesday were at 30 lakh versus previous 10-day average of less than 24,000. But delivery percentage was low. Yesterday, it was just 5.6% versus last 10-day average of 42 to 43%.
Thank you very much, Sud, for that. So again, lots of movers, single stocks moving around with heavy volumes around. Devin Choksi is with us. Devin, good morning. Good to have you with us here. Thanks for joining in. So, I mean, where are you most focused, Devin? The new stuff, not what you already have owned, but new interest areas or new actionables. What's on your mind?
Yeah, Prashant, good morning. Well, I think given the kind of larger activity participation that India is doing with European nations and also with America, we have been looking at some of the businesses afresh, I think, including the companies which are there in the FMCG business as well. Some of the companies have their global parents sitting in Europe, and I think they have the possibility of integrating further into India. Currently, I think the about 5% or so to 5 to 10% kind of a business, I think, comes out of exports for them. We see a distinct possibility down the line 2 years, the export business could pick up for some of the Indian MNC companies and FMCG companies to around 15 to 20%. That is a possibility that we are seeing. And that too at a margin which is possibly higher than what India is producing. So the blended margin probably for Indian FMCG companies could possibly show relatively better performance. And that has started appealing us because I think if FMCG is one such area, I think there are many such other areas in which the businesses are getting integrated with the global players. Yet it is a little early to conclude that how much it is going to be turning out to be in the volume terms and the business revenue. But I believe that I think the initial moves as a green signal that we are getting from some of these companies, we see a possibility of some businesses doing well, including the companies which are providing the end-to-end solutions, say, for example, names like Tata Technology, where they are providing end-to-end solution to some of the European OEMs. And that's where probably the business is looking relatively more stable for them. The inflow of new orders probably, I think, showing some more positive directions. So selective companies, yes, I think we are looking at, given the kind of a larger environment change that we are experiencing right now.
Okay, hi Deven, good morning. Good to see you in. Deven, I wanted to ask you about the gold financiers, namely Muthoot. Stock did very, very well. Gold prices were in an uptrend, which was good for business, and cost of borrowing was expected to fall. Now the problem is that the cost of borrowing actually didn't fall in the past quarter, and as the management clarified, that will happen with a bit of a lag. In addition to that, gold prices have come down as well, which has hurt sentiment. Stock is not cheap, but what's your view on Muthoot Finance, since that's been the leader, that's done very, very well? And in the same light, would you actually look at Manappuram now?
Yeah, Nigel, good morning. Well, as a strategy, we find ourselves more comfortable with the NBFC companies, which are retail-focused NBFC companies, and which are not particularly vertical-specific NBFC companies like gold. Right? Even though I think we find that I think some of the housing finance companies as an exception to this rule, we believe that I think the companies which are catering to the larger part of the investors through the retail lending, they are relatively better off. And I think the story in companies like Bajaj Housing Finance or companies like Bajaj Finance, they appeal us more because they're using the technology to disperse the loan faster. They're using the technology to reach out to their customers faster. They're using the technology to, I think, underwrite the credit risk in a much better manner. So we like this kind of company who are using the technology platform to the core level. And that's where I think we do not end up necessarily focusing on a particular segment like gold as far as NBFC business is concerned.
Deven, have you analyzed some of these BPO companies? To gaining traction, generative AI, everyone thought that they would be the big losers. But actually, they've adapted themselves pretty well. And we were just talking to Girish Pai of Bob Capital, and he's underweight on Indian IT even after the underperformance. And he says the only buy call that he has is First Source. And even a couple of other people, like this entire BPO space, the Sagility, eClerks. What is your analysis of the KPO, BPO business listed here in India?
So, Rima, we believe that I think this particular business is undergoing a transformation understood fully. And I think they're using AI agents at the forefront in probably producing the solution. I'm not too sure whether these companies have actually started changing their revenue model. The revenue model, if it is becoming an outcome-based revenue model, which means I think the kind of KRs that they would assume from their clients, if they end up, I think, providing services in that direction, in my viewpoint, I think they could possibly be having a relatively better revenue going forward. But whether this transition is completely happening at this point of time or it is still in transition process, I'm not too sure. So we are not taking any fundamental call on these companies. Studying, I think, how the business model is changing at this point of time for some of them.
Got it. Any view, Deven, on some of these product companies? Yesterday's stock like Newgen was up more than 10%. The stock has seen a fair correction, but these product companies, in fact, could look a little bit interesting. Your view?
No, Nigel, immediately I think nothing that we have seen in this kind of companies. But we believe that I think many of the Indian mid-tier IT companies, which are actually providing the productized solution to their customers, they are relatively in a better position to win new contracts. That is what I think we are getting the understanding from some of these companies. But nothing on horizon as far as our recommendation basket is concerned.
Okay, thank you very much for joining in. We will slip into a break. On the other side, we'll get the pre-opening rates. We'll also be joined by Amit Anbani of PL Capital to discuss the recent defense deal wins and the outlook for the sector. We'll also get in our technical ideas for the day with Sudarshan Sukhani and Mitesh Thakkar. Stay tuned for that.
Welcome back. In the next few minutes, we'll be getting the pre-open rates. For the time being, let's find out how you should approach trade. Sudarshan Zakani as well as Mitesh Thakkar join us on the show. Good morning, gentlemen. Good to see you in. Well, last couple of trading sessions have been pretty okay for the bulls, but we need to note that FI participation was down by 45 to around 55% or thereabouts. What's your view on the index? Sudarshan, you go first. I think yesterday you had stay away from the index. Do you hold on to that, or do you believe now there is a trade?
Yeah, good morning. Well, yesterday again we went to and tried to test the lows that we made on Monday, but that was successful. The test was there. We did not go to Monday's lows and we bounced from there. That's the first suggestion that maybe, at least for the time being, a low has been made. I would suggest that today could be a choppy day, but we are willing to be buyers today, not at the open, not at current prices, but a small dip towards 25,650 is a buying opportunity. That gives us a lower price to enter. Your stops will be 25,550, a 100-point stop loss approximately. If you get a dip, go and buy. In the unlikely event that you don't get a dip, then there's no buying.
Okay, all right. Buy the dip, and the stop loss for the day is 25,550. Got that, Sudarshan. Mitesh, coming across to you. How are you feeling about the index?
Nandal, actually, I would be watching the upside level of 25,750, 780 closely. I would hope that the index manages to capture that. And if that happens, then I think a retest of 25,950, 26,000 would happen. The encouraging part in this entire scene is the Bank Nifty, which continues to close at higher levels and is showing good momentum. So broadly, that's the breakout level, about 25,780. And in case we fail to do that, then we are doing a range of about 300 points, 25,780, 750 to about 25,400, 450.
Gentlemen, morning. Good to see both of you. Mitesh, what about stocks? What would you trade?
Prashant, I have 3 buys to a sell today. On the buying side is Bank of India with a stop at 167 and 177, 178 here could be a good short-term target. Also buy on Adani Greens with a stop at 999 or just below it and a target of 1050 is what I'm looking at. Gas Authority has turned positive after a big correction. So GAIL is the buy with a stop at 163 for a first target of 171.5 and one sell call, that's MCX. It's close below all its short-term averages. Could see some more supply pressure. So MCX is a sell with a stop at 23.34 for targets of 21.85.
Okay, all right. Sudarshan, what about you?
Well, I have GAIL also. The same thing as Mitesh. GAIL is a buy with a stop under 160. BEL is a buy with a stop under 440. M&M is a short with a stop above 35.60. And Syngene is a short with a stop above 15.50. The shorts are essentially taken if you see the markets start sliding below 25,600.
Got it. Okay, all right. Gentlemen, thanks a lot for joining in and giving us your thoughts. We come back to you rather soon. Let's welcome Amit Anwani, research analyst at PL Capital, who joins us on the show. And we're turning the spotlight this time around on the defense space. Hi, Amit. Good morning. Good to see you, Ben. Plenty of news flow, right, with regard to the defense sector. Budget allocation was pretty okay, budget 2026. So that one fear got dispelled. Besides that, India has approved the purchase of 115 Rafale jets at a cost of around 3.2 lakh crore or thereabouts. The focus is to strengthen the air power dramatically. Who would be potential beneficiaries here in India? And you could give us rationale on that?
Right. Morning, Nigel. So if we talk about the recent deal, which is my stock, 114 Rafale, I think in the past also we did a couple of deals, 36 Rafale and the follow-on deal in 2025 for 26 more Rafale. So one thing which I would say the outcome of these deals definitely is the depleting squadrons with respect to IF. And we have seen MiG-21. There are multiple platforms which will be phased out, and probably few are already phased out, including MiG-21, MiG-29. We're talking about Jaguars getting phased out, Mirex getting phased out. So if you see in terms of requirement of fleet, in terms of squadron, we are probably have reduced to 30 versus the approved 42 squadrons. So I think this is also one of the kind of urgency which is driving even the government-to-government deals outside. But one thing which was notable even from the past deals, there's been a lot of emphasis on the technology transfer and offset clauses in the past. And I think the upcoming deal also emerging in a way that probably there could be 40 to 50% locally manufactured indigenous component even in Rafales going forward. So definitely this should benefit the private defense ecosystem and probably the MROs and the other services being talked about once the details of the deals are out. But quite interestingly, if you see the requirement of aircrafts in India is massive. So if you see, including just to meet these shortfalls which are getting phased out, you probably need at least 200 aircrafts over the next 7-8 years and probably 400 plus aircrafts in next 12 to 15 years. So I think this definitely will boost the domestic manufacturing ecosystem and benefiting probably many private defense companies plus defense platform integrators as well in the future.
Got that. You know, where are valuations at? If you can just kind of sort of, you know, there are so many names, right? So, and there's going to be growth across the board. Order books are bulging. But where are valuations now looking attractive? And, you know, you got to buy at the right price, right? Otherwise, you hang around a long time without, you know, and pay the price for it. So where are valuation and prices looking good?
If I kind of dissect the platform OEMs, including HCL, I think HCL valuations are a bit comforting to me. On my numbers, the stock is trading about 27x to forward on March 28th. And I believe, of course, there's been some delays with respect to deliveries, which probably I believe now the supplies have started next year could be better than today. But with the kind of book they have for multiple helicopter wins which they had and the follow-on order for LCA, I think the pipeline in terms of execution is robust for next 7-8 years. And currently valuations are a bit comforting for me in HL. But on the other end, we are seeing even shipbuilding, there's a very strong pipeline. I don't have the coverage right now, but probably the pipeline is upward of 1,50,000 to 2 lakh crores for next 2 years. GRSC seems to be, and MDL seems to be the beneficiary of this long pipelines, and their order books could probably see a significant increase once these orders are cleared. So this few shipbuilding stocks, which are a bit comforting, and HL, as I highlighted to you. Defense electronics, I think the stocks are trading between 35x to 45x. Still, there is no major comfort. I would
just, can I just come in? Sorry.
Yeah.
If I can just come in, yeah. Sorry, can you just the names, if you can run through the names that you mentioned so far, and then we'll continue. There was a bit of audio disturbance, so I'm not sure if viewers got all the names clearly, but just quickly, just run through the names again.
Yeah, so I said HL is something which is comforting, which is trading at about 27x to my 2-year forward numbers. So that is one stock we are comforting, considering the very strong order book. We believe that probably gradually the deliveries will start for LCA, and that can significantly increase the manufacturing revenue with multiple other helicopter platforms coming in. I said the pipeline for shipbuilding looks very strong. There, I believe GRSC, MDL could be beneficiary of this massive, strong pipeline. We're talking about at least 1,50,000 to 2,000 crore pipeline, including many projects like P-17 destroyer, Bravo, and the few submarine orders which are on the anvil to get cleared. I think the valuation discomfort is bit, I think, on the defense electronics side, where there are many private companies also, and even Bharat Electronics trading at about in the range of 40x 2-year forward. So this is an area where probably the valuations might command some premium to the platforms and shipbuilders, but still the comfort level for me currently is kind of wait and watch here. Yeah.
Yeah, and MTAR, etc. as well, right? In that electronic space, basically, and there are a few others as well.
Yeah.
Yeah, where you're saying valuations are a little on the higher side, but your clear picks are HAL and Garden Reach in that sense.
Yes.
Yeah, got that. What about names like Solar and there are a few others. Individual sort of companies really focused on, for example, Solar is Pinaka and good capabilities there. But again, valuations, I remember, used to be 100 times and all. So any sense looking at those names?
Yeah, if you see the valuation in the near term might look expensive because there's kind of J curve which is coming, the kind of order book all these companies have built. And once they have the base here where they're able to execute few of these orders, probably valuation might look normal. But speaking about solar industries, definitely, as you said, Pinaka, they won the large order last time, and their order book for defense is quite attractive. They're also looking for a few orders on the UAV side, plus the follow-on orders for the high range of Pinaka. And we have seen the AON approvals or the DAC approvals in the past includes a good proportion for missiles and UAVs. There's been a lot of focus on drone UAVs and missiles. Definitely, they should be beneficiary, and they have been talking big in terms of defenses. The orders have started coming. If I gather it correctly, they already have roughly about 13 to 14,000 plus defense book. But as you rightly pointed, even 2 years forward, I think the stock should be around 44x on consensus numbers, which is kind of discomforting at the moment. Yeah.
Thank you very much, Amit, for joining in. Let's get in some 9-10 calls. Sudarshan is back with us. Sudarshan, hi.
Hi, it's BEL, buy BEL with a stop under 440.
Okay, defense in focus. Mitesh, yours?
I'll go with a long call, and that's a buy on Bank of India for targets of 177.
Got that. Infosys should be on your radar. Yesterday, Infosys rebounded. The stock ended up in the green with a gain of close to about 2%. For the first time yesterday, Infosys shared how much generative AI or new AI services contributes to the top line, and that stands at 5.5%. Now, this is largely similar to what peers are reporting, large cap peers. For TCS, it stands at 6%. For HCLTech, it's nearly 4%. But the definition of what constitutes advanced AI or generative AI may differ. But largely, you can gauge that it's about 5% of the overall revenue today is AI for these large IT companies, and it's growing very fast. Now, the question is, should you be disappointed? And Girish said, because AI has been around for the last few years and it still is only about 5% of their revenues, or would you see it as a glass half full and say that, well, look at the headroom then for the contribution of AI, which also helps you get higher margins expanding from here on. There is significant headroom. Brokerages are largely bullish. JP Morgan's target price stands above 2,000 rupees, 2,050. For Nuvama, 1,900. For Jefferies and HSBC, it's about 1,870, 1,880. CLSA has an outperform call. Their target price is 1,780. And Morgan Stanley has an equal weight on Infosys, 1,760 is the target price. So largely, brokerages are still bullish on this IT major. But over to Mangalam now for more on Dabur.
Well, Dabur will be in focus because Harjeet Bhalla has been appointed as the India business CEO for the company. Their current leader, Mohit Malhotra, has been elevated to be the global CEO. So Harjeet will actually be reporting to Mohit. Importantly, Harjeet comes with experience from Unilever, the Hershey's company, and he's also worked at Metro, Cash and Carry. So what his channel strategy would be, what he tries to do with regards to category growth and how the company goes ahead and makes bets on digital with the Dabur ventures that they had announced a couple of quarters ago will be extremely crucial to track. For consumer companies, the change in leadership or addition of leaders coming in from companies like PepsiCo or Unilever, etc., is an important inflection point. So let's see the middling growth that Dabur has been reporting lately. with the consumer sentiment likely to improve and them having targeted mid-single-digit volume growth in FY27, can there be further acceleration or not is something that we'll be tracking.
Yeah, absolutely. And we'll keep an eye out on this one. Thanks very much, Mangalam, for that. I mean, I think we've got, little over a minute to go for market open. It's going to be slightly higher, 30 points up on the Nifty, the Sensex about 100 odd points. If we have time, maybe just put out a stack of IT stocks, right? IT software stocks and where they're in the pre-open, at the end of the pre-open, that is. So your Infosys is the Wipros and the HCL and the Tech Mahindra, the large cap, and of course otherwise as well. It's up, the index itself is up about 0.18%. Infi is up on your screen. TCS is up about 0.5%, and you've got HCLTech, and so there is small green. Wipro is up about 1/3% as well. Tech Mahindra is up. Maybe just look at Coforge and Persistent and others as well in the mid-cap arena. 1/3% higher on Coforge. Persistent is up a little bit. I mean, all these stocks, of course, 8-10% off the lows, absolute lows, panic lows that we saw on Friday. But, I mean, these are still feeble recoveries in that sense. So just first trades, and we look at the Nifty, the indices as we always do, the Nifty, Sensex, etc. And then we'll look at the heat map. And of course, individual single stocks. I mean, the earnings is behind, the earnings season is behind us. So you don't have, as we've had now for the last 1 month during the earnings season, a lot of earnings, that stocks that react to earnings. But there is other news flow, a little thinner though. What do we have? It is absolutely flat, nothing on the Nifty. Blinking red and green, undecided. Nifty Bank is up about 0.1. You've got the Nifty, the mid-cap index, which is up 0.04. Again, nothing. And the small-cap index, I guess, should be something similar as well. 850 up and about 540 lower. That is the advances to decline ratio. The heat map should give you a sense of where we are starting, and then we'll pick it up from there. So, I mean, I guess, given the state of the Nifty, it should be kind of split right in the middle. What do we have? Yeah, I mean, absolutely. Split right down the middle. Eternal, BEL, Hindalco are some of the names which are higher. On the other end, you've got ONGC, Infosys, and Tech Mahindra. So that's the start. 6-point change in the Nifty. Absolutely flat screen. Rima.
Well, profit booking visible in the large cap IT names after yesterday's mini rebound. Infosys down nearly 2%, so giving up all of yesterday's gains. That's one of the big losers. Tech Mahindra, HCLTech have a decline of more than 1%, so Tech Mahindra is sliding nearly 1.5%. For TCS and Wipro, the cut is about 0.5%. ONGC is your top Nifty loser. That's seeing a cut of nearly 3% now. Coal India is under pressure. Then you've got a lot of these IT names. Adani Ports is under pressure. Power Grid, Nestle, NTPC, Tata Motors, passenger vehicles. Across sectors, some of these stocks are opening in the red. But it's a flat start. On the way up, you've got BEL, that's the big gainer. Stock is now up 3.5% in the last 3 trading sessions. Hindalco, Tata Steel seeing some buying. Eternal is gaining. Trent, Ultratech Cement, ITC also up. But very, very quiet move. In terms of a sectoral trend, if you have to discern something, it's that IT once again is on the back foot and some profits are being taken off.
Well, that's right, Rima. You know, a few stocks in the broader markets, though, they're calling for attention. CE Info, well, that one's up close to 7%. So big move is what we're seeing on that particular name. And Cohance, another stock that's seen a sharp correction from the recent peak. Well, that one as well is buzzing in today's trading session. Besides that, a few of those gainers yesterday, they're continuing with their winning ways. Case in point being a Unicommerce Solutions. That stock is up. Easy Trip, a stock that's underperformed big time, that as well is up and about. And NetWeb, the products company, yesterday I think the stock was up close to 12%. Today as well, it's seeing some follow through with a gain of close to around 3%. And that's on rather good volumes as well. So just keep an eye out on that one. Dilip Bilcon's another stock that's doing pretty well in today's trading session. So keep an eye out on that name. On the flip side, your matrimony.com, well, that stock, in fact, has come in for some profit taking. That's down, I think, close to around 6%. GE Power as well, the stock had a good run, but that as well has come in for some profit taking in today's trading session. So, things are looking pretty okay, at least for the broader markets. On the headline index, it's as flat as can be. And NetWeb is a stock that's up close to 3%, but I think NewGen, that's the one that I was referring to with regard to a products company. It's seen a sharp correction from the recent peak. Yes, it was up 10%, and NewGen is up even in today's trading session. I think it's up close to around 4% or thereabouts. Rima?
Okay. All right, that's the state of affairs as we open trade unchanged on the Nifty and the Sensex. Kenneth Andrade, CIO, Brokerage Asset Management, is now joining on the show. Kenneth, great to have you this morning. Thank you very much for joining in. I suspect the first one of 2026. We're chatting with Kenneth, so it's been a while. Thank you for joining in. So let's begin with how you see the markets. It's been about 1.5 months. It's been extremely tough for the technology names globally and back home in India. And Brokerage, what is the analysis?
I mean, it's firstly on the marketplace, it's a very rotational market. And while technology has been holding steady for the last 6 months, it's their turn to actually take some money off the table. The question remains out here is, are these companies running to stand still? Or you will find a few businesses out there that could actually use the opportunity to scale up quite dramatically. I think that question is not very clear at this point in time. What is a question mark, which I think everybody out there already knows and understands, that this is not status quo. This technology change or this automation is not status quo for a lot of businesses. And I think that's what the markets actually are reacting to. So from a standpoint of just IT services, I mean, it's not very clear how companies will adapt and how fast they will be able to adapt, but there will be a lot of uncertainty on how these businesses will meet any kind of growth trajectory, at least in the near term. One thing I must say is completely in favor for these companies is that historically, they are quite comfortable in terms of where their valuations are. I mean, extremely comfortable in terms of where their valuations are. But with all the uncertainty around, I'm not too sure that will be the best part of the marketplace to be in.
Kenneth, hi, good morning. Thanks for joining in. Now, wear your mid and small cap specialist hat, Kenneth, if you will, and tell us where, because that is where sometimes stocks get thrown away because of whatever reason, and we've heard it from other veteran fund managers as well, that's the opportunity when people. Long-term investors get frustrated and say, I mean, it's idiosyncratic. I mean, it's not one sector which has a huge tailwind or anything, but good businesses which now have fallen quite a bit. So where are those opportunities, Kenneth? And let's talk stocks for a change, Kenneth.
Right. So let me try and put this together, right? It's an opportunity in the making, and you'll see all of it in 2026. Stocks are half from where they used to be. A lot of them are down from where they used to be, and some of them are 50% from where they used to be. Numbers are nice. Balance sheets are consolidating. So there's no debt. There's cash on balance sheet, and market caps are down. There is a lot of uncertainty on how these companies will meet any kind of growth trajectory. And I think you will get a handful of stocks, if I'm not mistaken, or even more that we can come across, which are already in that zone. So whether it is mid caps, small caps, large caps, I think this marketplace is opening up, or 2026 is opening up to be a great stock pickers market, or a great time to put a portfolio in place. Now, let me try and rewind this by a little bit of industry data that is out there. There are a couple of industries out there which are already through their capex cycle. Okay, the one industry that went through a massive spike post the pandemic was chemicals. A lot of capex came into play. And they are at the end of the capex cycle. Commodity prices are not supporting that capex, but none of them are losing money. The second one, I could also say very safely, is almost an adjacency of that business, which is pharmaceuticals, and especially on the chemicals and on the chemical side. There also, capex is behind a lot of large and mid-sized companies there. But the opportunity is still probably a couple of years away. I won't say a couple of years away. Some part of that is already showing up in balance sheets. So take those two sectors and park them. They have done nothing in the last, I would say, 4 years, or the last 4, probably 5 years. They've done nothing in the last 4 to 5 years. The other one that has done reasonably well, at least in the near term, has been automotive and that entire value chain. You've got some significant capex coming up in that sector, and it's an ongoing capex. If you take the large companies there from a OEM perspective, you will get reasonable amount of growth. Valuations we can obviously debate, but these are large companies, very well diversified, very well researched, and all data that has to be there is already out there. Then you break it down into a couple of the value chain, the automotives, etc. And I think you will get reasonable amount of growth there. Valuation also in some spaces are okay. And then the most important part of that entire value chain is the financials. Okay, the lending businesses. There, I think across the board, and we've been saying this for a while, is valuations are reasonably comfortable. But there is an absence of growth on the corporate lending side. Apart from that, I think we are cyclically all over the place as far as household lending, automotive lending, everything else that is concerned out there. But valuations are now capturing all of that is out there. So you're setting up for a nice 2026. But we're a little cautious that we're getting into financial year 2027 saying that that earnings growth will be double digit into year 2027. But that's always a narrative that's within the marketplace just before the new year starts or new financial year starts. So I'll be a little cautious of that kind of optimism because the market actually lacks a little bit of demand both domestically as well as for all what has happened internationally. I think the supply chains still have to get put into place. India still has to find its space in the international trade. So I think we're set up for a nice quiet 2027. But at the same time, the underlying opportunities that are there, look for companies where capex is behind us, look for industries as a whole subset which has faced a lot of pricing pressure, which effectively means no inflation that is there. And you should be able to put a portfolio together in 2027, 26 into 27.
Yeah. That's well explained. So chemicals, auto anchs, and financials, right, Kenneth?
Oh, the list goes on.
Three areas that you mentioned.
So the list goes on. There's something happening in commodities also. Okay, so the big distraction in commodities was the price rise in all the basic metals. I would say it's a distraction because all companies out there are putting enormous amount of capital to work. I think the largest zinc player is doubling capacity over the next 4 years. The steel manufacturers continue to plod on with capacity, which is equivalent to a 10% growth. They'll bring in 10% annual capacity every year. In aluminium, there's almost 60% of incremental balance sheet getting deployed out there. So I think we have started we are putting capital to work. Of course, it's not showing in corporate lending because there are other avenues to raise capital. But like I said, Prashant, it's quite broad-based this time compared to what we've ever seen before.
Hi, Kenneth. Good morning. Good to see you, Ben. Kenneth, in terms of cash, you were sitting on around 10%?
That's right.
And you all have started deploying that?
It's not a significant cash number. I mean, my point of view on cash is that I still have 90% invested, right? So that's where the focus is all about. If I get 90% right, 10% is not going to bother us. But just the case on that 10% of cash, we had an exit. So we run a 25 stock portfolio out there, and there's an exit and we've had an exit of one company in that portfolio last month, which is showing up as cash. That should get deployed over the course of the next month or two.
All right. Kenneth, since you briefly spoke about metals, I just wanted your view. I look at your portfolio. Hindustan Zinc has been a decent size holding for you all. You have Hindalco as well in there. So non-ferrous, I think, has done relatively better in the recent past in comparison to ferrous. Since you all have both the ferrous as well as non-ferrous names, do you think it's time actually to lean towards ferrous in comparison to non-ferrous? As a fund, how are you all viewing it?
I think it's more stock driven than it's actually portfolio driven or everything driven out there, right? So the ferrous company that we own is basically spanning multiple countries out there, and there's something and there are reasonable opportunities at both extremes of in both the continents. In India itself, volumes have been reasonably good. In Europe, volumes have not been great, margins have not been great, but then cost savings are coming in significantly. There's also a lot of pricing pressure in Europe. Getting into the next couple of years, I think volume growth in domestic market and some element of pricing should help in Europe, and you will see a sustainable growth in cash flows coming through in the Fed this business. When it comes to the non-ferrous business, each of them have their own dynamic, but largely the way we calibrate our understanding of these business of these two companies is the amount of capital that they're putting on the ground, and how monetizable is their cash flows.
Okay, all right. And I think you were talking about the conglomerate that's going through the corporate action, right? That's the one that you'll have a good chunk. You'll play the demerger.
No, we're not out there. We basically, in ferrous, we are in Tata Steel. The portfolio will remain in.
Okay, the silver play is what you're
into charging, and we got into charging as far as
yes,
the zinc and the silver manufacturing.
Okay, all right. The other one I'm looking at is, the capital marketplace. And if I look at your portfolio, I think in terms of exchanges, you'll have gone in for IEX. I'm not sure whether you'll still have it or, that's part of your portfolio, I think. So the coupling issue had crept up, which has caused the stock to come down. Your view on this theme on the whole?
So without making a comment on what's happening from a regulatory standpoint, it's a company that dominates that space. Today, I step back to Prashant's question on where do you find value in some kind of these spaces. I think it's a huge opportunity out there. It's an option value on the electricity market, and at the same time, it's traded. If I'm not mistaken, it's about 11,000 crores of market cap with 1,500 crores of cash on book, with 500 crores of incremental cash out there. So this stock is in the portfolio. Most of the numbers are in public domain. But when you talk about value and valuation at this point in time, I think we will overlook the macros in most sectors, because the macros can be a little bearish. But that's what also gives you a valuation opportunity in some of these names.
We leave the.
Sorry, I don't know if we have like maybe 30 seconds. Kenneth, on leave us with your pick in the chemical space before you go, if you can.
We've got a front-ended chemical name out there, which is a large international name, but that's a front-ended name out there. We will come back, and you will see some part of that translate into our portfolio over the course of portfolio of portfolios. Now that we'll have two funds on the ground over the course of the next couple of months.
I see. Got that. Thank you very much, Kenneth, for that. Really appreciate your time and good sort of thought process in terms of how things are shaping up in a good way. So 26, 27, interesting time, and of course, look for companies where bulk of the capex is kind of behind. The big talking point, of course, remains the IT services space, and I think we've got a couple of companies waiting by. Rima, take it away.
Well, indeed, Ramani Datti, CFO of Team Lease Services, and Kapil Joshi, CEO, IT Staffing, Quest Corp, are now joining in on the show. And before that, I just want to put out one data point. In the first 9 months of FY26, the top 4 IT companies, TCS, Wipro, HCLTech, and Infosys, have seen an overall headcount decline of more than 700 employees, largely on account of TCS and the restructuring that they did. But in the first 9 months of FY26, the large 4 IT companies have not added any headcount. If anything, it is declined. And clearly, there is a lot of worry, because we've seen so many top CEOs, like Anthropic CEO had warned that AI can eliminate about half of the entry-level jobs, white-collar entry-level jobs. So let's find out what the situation is. Ramani Datti and Kapil Joshi are now with us. Ramani, let me begin with you and what you are seeing when it comes to Team Lease, the extent of IT hiring, new jobs versus the number of people perhaps who've lost their jobs, and the number of vacancies.
Yeah, good morning, Rima. As far as IT services is concerned, whatever job losses that we have seen in our industry happened, in fact, much before. by end of 24 and early 25, we have seen job cuts in IT services. And since then, it's been kind of stable as far as contract staffing is concerned. But overall, if we look at IT services, the trend that we have seen is that at entry level and early mid-level jobs, absolutely there is no net hiring that is happening because of the AI impact that we are seeing. Mainly the jobs that are into testing, coding, debugging, and IT support, low-end IT skills. So these are the areas typically where the freshers and mid-level talent will be there. So those jobs are, I mean, we are seeing the disruption already happening because of AI. But the good news is that at high-end skills, niche skills, there is increasing demand and disproportionate increase in salary pay by both IT product companies as well as GCCs. So overall net impact on the IT investments by the companies is still at a very good level. But if we see only the number of net new jobs that are getting created, since the vast majority goes into entry-level jobs, there we are seeing definitely a dip.
So no job openings for entry-level and mid-level IT jobs, Ramani. Is that clear, or is it down? Is there some number?
It's much lower than what it used to be 2 years back. And we are seeing that number consistently coming down. And at least last 2 quarters, we haven't seen a net increase at the entry and mid-level jobs in IT services.
Okay. Is it possible to share the number of job applicants for entry level and mid level? What you have shared is from the company level, that they don't have a requirement for coders, manual testers, etc. But we still churn out so many engineers who are looking for jobs at the entry level. So is there a way to match the demand and supply in terms of numbers? Ramani, and then Kapil, if you could come in on that.
At least on this point, Rima, I don't have any concrete data point, because the way that the skills are also shifting so quickly in terms of the fungibility that is expected by the companies. And also, like, whenever there is an attrition, instead of backfilling, say, there are 5 open positions, companies are not backfilling all the 5 open positions. Thanks to AI, the backfilling is happening only for 2 or 3 positions. So obviously the supply is much higher at this stage across all the jobs, except for the top talent niche skills. But the demand is very much restricted. I would say it's only 30% is the demand in comparison with the supply side.
Yeah. So what are the skills? So when you get demand, right, Ramani, morning, from companies looking to hire, what are the skills they're looking for now in this space?
Yeah. So right now, the top skills that are in demand are the AI engineers, AI analysts, the forensic analysts, and AI leads, data annotators, as well as cloud cybersecurity. So these are the top 4-5 skills that we are seeing as they're in high demand across all sectors, be it IT services or GCCs or product companies.
These are skills, Ramani, where you know. So, for example, the way we say, well, you know, there are lakhs of IT engineers who pass out every year out of colleges, right? You know, what's the preparedness at that level when you get out of you know, educational institutes, Ramani, compared to or I mean, that's not changed yet. So it's all going to be it's all going to be retraining once again. What's happening? Yeah.
Yeah, at this stage, the preparedness of entry-level talent, the freshers on AI-related skills, I would say is very, very low. Maybe to some extent on certain roles like data annotation, since there's still low skill and training of AI models, there we are still seeing some level of demand. But at least at the mid-level and AI analyst level, we are not seeing any kind of fresher hiring that is happening at this stage.
No, because that skill that is not there, Ramani, or it's very hard to find at entry level, or you'd want experienced people with some base of knowledge and these skills as well.
Yeah. No, this skill we can't expect it from the freshers and entry-level talent. Obviously, companies have to invest in upskilling their existing talent, be it entry-level or at mid-level. And that's what we've been seeing now. Like most of the IT services companies and as well as GCCs, they're all investing heavily in their L&D. They're also talking about upskilling their existing talent in AI models, AI engineering, and related areas. So it's definitely at entry level. Right now, there is no skill set that is available on the AI level. But at the same time, upskilling them is also not that difficult. What we have seen is, especially in GCC segment, with 3 to 4 months of upskilling camps that these companies are conducting, they're able to use the existing talent for the new projects that they are taking up.
Kapil, thank you for waiting by patiently. Jump into the discussion. First, tell us what is it that you are seeing in terms of Quest Corp. We understand that specialized AI jobs are in demand, not just in tech companies, but even outside in other services. But at the entry level and mid level, what is it that you're seeing? And also, in a way, if you can help understanding the demand versus supply for entry and mid level. Because as we were discussing, there's so much supply. Engineers are saying who graduate that we're not finding jobs right now. But IT companies are saying, that we don't have enough talent. We're not able to match the talent. So if you could give a sense of the demand and supply, I think Ramani gave a number of 30%, that only 30% of the supply is being met, is being matched with the demand.
Yeah. So, Rima, let me give some statistics because we recently published our annual demand supply gap report. See, I tell you, in India, we have seen almost 1.8 million, 18 lakhs job opening last year. Okay, if you see 50% of them was refilling, still there was 9 lakhs new job got created. But what is happening that demand are shifting, and scoot towards the emerging technology. These are the technology like AI, data, cloud, cyber security, where we see the most of the demand. 2 years back, this emerging skill used to contribute 38% of the total demand. Now they contribute more than 50% of the total demand. Second thing, we see the demand from GCC side. Now GCC plus product company together contribute almost 48% of the total demand. So that piece is growing really, really well. On Ramni's point and your point, yes, we see the demand, overall demand mix. Then earlier it used to be 20% at entry level job, but now it has come down to 15%. But surprisingly, the mid level hiring has increased, contribution from 40% to 65%. It means organizations are looking for highly talented people who are experienced and those who have experience in the emerging technology. Third thing which we have seen in our report is that tier 2 are also emerging very aggressively. Almost 15% of total demand is coming from the tier 2 cities.
Okay, so tier 2.
And as long as AI is concerned, let me tell you, India has roughly 500,000 workforce working on AI and data, which is expected to reach at 1.2 million by end of next year. But still, we expect there will be 1 million job will be, vacant job will be there. So there is a huge demand supply gap, especially in the GenAI, ML ops, LLM ops. Okay. Some of the AI skills, we have seen 30 to 40% demand supply gap. It means for every 10 open jobs, there are only 5 to 6 job seekers available in the market right now. And reskilling is the only way forward.
You said there were 18 lakh job openings. Is that related to tech only? Kapil?
Sorry, can you repeat your?
Yes. You started by saying 18 lakh job openings. This, I presume, is in tech?
Yep.
Okay. And how much would be the supply of talent?
See, demands are skewed towards, there are two angles to it. One, demands are skewed towards the mid-level. Mid-level hiring has gone up from 40% to 65% now. And second thing is the demand earlier, used to be 60 to 65% for your plain vanilla entry-level job, L1, L2 support, infrastructure, testing, business analyst. Now, this is just opposite. Whatever demand you see right now, 50%, more than 50% are, in emerging technology where we see the demand supply gap. And that is where we also observed that, the fulfillment time to close this position has increased from 45 days to 90 days.
Yeah. I have a question, slightly offbeat, off tangent rather, not offbeat question for both of you. Kapil, if I can ask you, there is, because IT jobs and job creation there has been such a big pillar of, supporting other industries as well, because these have been traditionally better paying jobs, well-paying jobs at a higher end. There is concern that if net hiring is already negative for some of these companies, large companies, for the last 1.5, 2 years. Given what you're describing, is there reason to be worried? Outside of software, I'm talking about the demand signal for some of the other industries, real estate, for example, and hubs like Bangalore, etc. Any thoughts, Kapil? I'm sure it's a question which comes up, and you've thought about it, discussed, etc. What can you share?
So, I not there is some audio problem, but what I understand, you want to understand the AI impact on the entry level job. See,
no. Sorry. My Kapil, my question. Let me. I think there is we'll fix that talkback issue. I think it's slipping in and out of you. Yeah, Ramani, if you got that, would you want to take that?
Yes. No, definitely. The urban India and the consumption and many other related industries which are urban based are still driven by the tech talent. And whenever there is a slowness in overall IT hiring or job cuts in IT, we see that directly reflecting in urban consumption as well. And as you rightly mentioned, real estate can be one of the industries that can be hit. And we have already seen that being hit over the last couple of years because of the overall slowness in IT hiring and IT jobs. And having said that, as I mentioned earlier, while the net new jobs are getting impacted, the overall IT spending is not coming down substantially. So we are still seeing, especially the niche skill, cutting edge technologies and niche skills. So their companies are willing to pay 2x, 3x higher than what it was maybe a couple of years back. So the salary levels are still much higher at top talent level. The biggest hit that we are seeing right now is at entry level. And we are still seeing more and more GCCs coming in, setting up their shops in India, as well as the existing GCCs expanding the number of jobs will to some extent give cushion to this aspect. Because now with the EU deal being signed off, we are also seeing more and more European-based companies setting up GCCs in India. Historically, the majority of the GCCs that we have seen are all US-based. Now we are seeing a lot more discussions happening on the European-based GCC front.
We'll leave the conversation here. Kapil, Ramani, thank you very much for joining in and sharing the insights on this particular issue. We will slip into a very short break. On the other side, we'll get your conversation with Dr. Reddy's G.V. Prasad from the BioAsia conference.
Welcome back. A couple of stocks actually are moving around. Vari Energy is actually that one selling off on decent volume. So it's moved to the low point of the day. Keep an eye out on that one. And the mid-cap tech companies actually have come in for some selling. You look at Persistent, you look at Coforge. These stocks actually the last couple of days have bounced off the lows. But today they've come in for some selling. But moving on then, the 23rd edition of the BioAsia 2026 International Summit is currently underway in Hyderabad. This year's theme, Tech Bio Unleashed, AI Automation and the Biology Revolution. On the sidelines of the summit, my colleague Ekta Batra spoke to Dr. Reddy's co-chairman and MD, Mr. G.V. Prasad, and began by asking him about the company's FY27 outlook and the expected timeline for the launch of its generic semaglutide in Canada. Let's listen in to what he had to say.
There is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be a timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch. There's
So
nothing stopping us from
sort of
launching.
the outstanding issues you would say are resolved at this point?
More or less, yeah.
Okay. Any kind of site inspection?
So usually they may want some information, things like that. There's no inspection outstanding. It is just more information. Information requests we get, and then we submit the information.
How big or how lucrative a market would Canada be?
So Canada, for the initial time when we will be alone in the market for a few months, will be very significant. After that, competition will come in, like any other market, and then we'll start seeing price erosion.
Okay, so let me understand this. When you enter the market initially, assuming...
We are assuming. That's an assumption, and we could be wrong. But as far as we know, we believe that we are close to being the only one being approved in the next few months. Somebody may follow after that, and then new approvals may come in. But we believe that we will have some time alone. That would be a nice period for us.
Could you quantify that?
I can't, because it's very difficult.
Okay. What about, what are we working with when it comes to the emerging markets? Turkey, Brazil, China, all of them?
So we plan to launch in whichever market we have access to, where the patents allow us to launch, and also where we've registered the product or where we have a partner who's registering our product. So we've done a number of registration submissions. We are awaiting approvals, and as soon as they get approved, we'll start launching.
If you had to prioritize the markets at this point in time in terms of how lucrative they are for semaglutide, what would they be, including India?
In the near term, Canada is the biggest opportunity, but that's subject to many things.
Yes.
So if it works out, if it plays out, it could be a sizable market. India, the sheer volume will be high because of the number of people in this country. But at the same time, India will be a very competitive market. There are at least 25 others who are going to launch on day one here. In the other markets, it won't be so crowded at entry time. So in that sense, I think India will be an attractive market in terms of numbers, but it will also be highly competitive. It's also an opportunity to innovate a little bit in the device, things like that. So we don't know how it will turn out. But this category is a large category. The other thing is the life cycle play is also very big in this area. A lot of follow-on drugs are coming from Novo itself, as well as other innovators. So I would say the life cycles of products may be shorter than we anticipate.
Any in-licensing deals that you would then look at in order for newer novel therapies?
If companies are open to work with us and they are not launching directly, we'd certainly love to partner.
Okay. That's one of the strategies that you've taken for your India market, which has grown 19% in the quarter gone by. You've in-licensed products, and that's possibly what's helped the market. Is that correct?
Absolutely. We have started working with innovators around the world. Small to medium-sized innovators who don't have local marketing teams here. And we are bringing access to patients, products which they otherwise would not have access to through these partnerships. And some of them are really unique and address a big unmet need. And like our toripalimab, which we launched here, is doing well. And it's also addressing an indication which was underserved in this country.
Are you guiding or are you working with this kind of 15%, 20% growth in India going forward?
No. We generally don't give guidance, but our goal is to, at a company level, be a double-digit growth.
Okay. And what about the US? Because now we have a Revlimid going off.
Gone already.
Gone. So what does it look like in terms of launches and in terms of price pressure?
So there is pricing pressure. That's a reality of that market. Also, we see a lot of increased competition from India itself. Earlier days, we used to see 5 ANDAs, 3 ANDAs. Now it's 20 ANDAs on NCE minus 1 date. So the severity of competition has eroded the attractiveness of that market. But there are still opportunities, there are still niches, there are still exclusivity plays. So we'll do our best to bring products with less competition to the market. But that depends a lot on the competition also.
But you have a couple of biosimilars in your pipeline for the US.
We do have.
Yes.
Some of them are late now, but we also have some very attractive first-to-market opportunities. They'll start, being meaningful 27, 28 onwards.
Denosumab and rituximab have complete response letters on them.
Yeah.
Would FY27 be when you could probably hear back?
Yeah, rituximab is likely to be launched.
In FY27?
FY27, absolutely.
Okay. Talking about the US, we have Section 232, which the US government has said they're still exploring when it comes to pharmaceuticals. Is that a threat considering that generics play such a huge part there?
The generics is a large portion of the medicines the US patients take. So pricing will be impacted if duties are imposed on that, tariffs are imposed. So my guess is it's less likely to have tariffs because it affects a lot of people. And in the end, the manufacturer doesn't have enough margin to absorb duties today. So in that sense, I feel, and I hope they don't impose any tariffs on generics. And if they do also, I think it'll be absorbed by the market.
Are you rethinking your US strategy considering Section 232 and maybe even MFN, onshoring is becoming quite a big initiative?
MFN is applicable only to innovative branded products. We don't operate in that segment. But we are looking hard at the product mix, portfolio mix in the US to bring up our margins.
A lot of companies have evaluated M&A. Indian pharmaceutical companies, they've at least evaluated large-size mergers. Is that something that Dr. Reddy's is looking at? What is your M&A strategy?
So our M&A strategy is to look at longer life cycle products, stable margins, and something that can be easily integrated with our existing businesses, more like tuck-in acquisitions. So it will be largely in the space of brands, branded generics for India, for emerging markets, significant emerging markets. And we've also put a stake in the ground in terms of our presence in consumer health. So we are open to branded consumer health opportunities anywhere in the world.
Okay. But US would not be a priority?
We do have a US business also. So if there is a branded consumer health opportunity in the US, we will take a look at it depending on the valuations.
Interesting conversation there, but back to the India AI Summit. Shireen is in conversation with Cristiano Amon, President CEO of Qualcomm.
Laptop to buy things online, not anymore. The majority of the world uses phones. The laptop's the exception. So I think what's going to happen is you're going to have those new classes of mobile devices. We see smart glasses. We see things that people wear, like jewelry becomes smart. Of course, wearables become smart because now you carry the agent with you all the time, and the agent see what you see. In case of glasses, hear what you hear. And workloads are going to shift from phones to those new devices. So the phone's not going to go anywhere in the same way that the laptop didn't go anywhere, but it's going to change its usability. It's going to be doing a lot of processing for multiple devices. It's going to do phone things, but some workloads are going to go to like personal AI devices.
I thought you were going to be wearing your Meta glasses powered by Qualcomm.
I should have. I actually got it with me. but I should have.
But, let's talk a little bit about India. And I think the objective and the mission that the Indian government has stated very clearly is the idea of democratizing artificial intelligence in India. How do we make that happen? And what do you believe the road ahead needs to look like for that to truly be a reality?
Yeah. Look, I am incredibly optimistic about the opportunities here in India. And I think just to be consistent with everything I said, I think in this conversation, I go back to the past. If you just look when the smartphone, revolution has started here in India, if you look at the amount of data that is consumed by user, India is probably among some of the top in the world. And if you look at how fast the internet developed and how things leapfrog, into the future, especially when you think about digital payments and everything that is now happening with smartphones. When I look of AI, that's going to repeat itself in India, but it's going to be more powerful. The reason it's going to be more powerful is because AI has an incredible ability to empower people. The same way that connecting to the internet has fundamentally changed, I think, people access to information. I think AI is going to take that to the next level. How you get access to information, how you train yourself, how you get instant feedback about things, how you learn about things, how you do different things augmented by an agent, and how the entire economy of agents is going to get developed. I think India has an opportunity to be one of the fastest growing AI nations in the world.
The fastest growing AI nations in the world, because there are questions being asked about the fact that we're just about getting into the LLM race. We don't have the kind of compute capacity that other countries have at this point in time. We do have the talent. That's our biggest advantage. But do you truly believe that AI is going to be the fastest AI nation?
Look, let's kind of zoom out, right, and see how this is really is going to play out. If you think about the phone today, right? The phone is the most cloud-connected device in the world. And, it's also the biggest development platform ever created. And if you look about how, you have services, there are some global services, some India services going to the cloud, and you have this thing through phones really democratize and reaching everything. The way I think about AI, and going back to the conversation about agents being very contextual aware, I think you're going to have different models going to be developed. There's going to be global models. They're going to be Indian models. They're going to be available. But then the real value is how quickly can you deploy this across industries? How many people can you reach with the technology? How many different things? And I think that's the opportunity for India.
Okay, well, that is the Qualcomm management with my colleague Shireen, and we will go back to it. It's an interesting day of conversations on the sidelines, of course, of the AI Impact Summit. Actually, talking about the AI Impact Summit 2026, let's bring in Ashmit now, who is joining us from Ground Zero with just a kind of sort of preview of what we should expect from there. Ashmit, take it away.
Well, we're coming to you from the CNBC TV 18 Edge AI studio. We're right here at the AI Summit at Bharat Mandapam at the Expo area. Clearly, the big focus, the big talking points have been, as Shireen was pointing out, a lot of the conversations pertain to what the road ahead looks like with respect to AI application, what it means in terms of disruption, not just for jobs, but also for industries. That's only one part of the conversation. The other part of the conversation, and in fact, we're likely to see announcements along those lines later today, will be India's own sovereign tech. We're likely to see India's own sovereign models. Sarvam, the Indian AI company, is likely to launch its own LLM. It's likely to be a 100 billion plus parameter LLM, large language model, that is likely to be launched later today. That is something that we will be keeping an eye on. Not just that, and here's some quirky bits as well. India could very well be landing up with the Guinness World Record for the highest number of people pledging to use AI responsibly. That's something that's expected later today as well. The announcement expected around 11:30 in the presence of the IT Minister Ashwini Vaishnav himself. Those are the two takeaways that we're expecting today. But in the course of this week, as we move forward, a key focus area that we've been hearing repeatedly from the ministry, from the government, from the IT Minister himself is expect big announcements with respect to data infrastructure here in the country. We've already seen the likes of Google, Microsoft, Amazon commit large amounts of money. Between them, over $70 billion. That figure, through the course of this week, is likely to climb higher than $200 billion. Those are the figures that are being estimated, that are being put out by the government themselves. And of course, one key aspect to watch out for will be the inaugural session. That inaugural session is tomorrow. The AI Impact Summit will be launched officially by the Prime Minister, and he will be in the presence of very senior officials from various companies. We're talking about the likes of Sam Altman, Sundar Pichai. They will all be here. They will be present. They will be giving their keynote addresses and hopefully share some color, some insight on what the road ahead in 2026 looks like, not just AI in terms of as a technology, but also in terms of disruption that it's likely to cause, what it means for jobs, what it means in terms of governance, in terms of regulation, and of course, in terms of applications and deployment across industries. Key questions that hopefully will unravel, will get unpacked as we move forward in the space of the AI Impact Summit week.
Thank you, Ashmit. It's an action-packed, and Indian IT is truly at a crossroad. AI for disruption or AI will be an enabler. We will slip into a very short break. On the other side, Manisha Gupta will join in and talk about commodities. Stay tuned. Welcome back. Let's talk commodities now. Manisha is joining us here. Manisha, you're looking at coal, and it's been a while since we've spoken about coal, but it's been steadily creeping up.
Oh, it has been, yes. We haven't had time to talk about coal because we've been talking about gold and silver and copper and various other commodities. But coal needs a mention right now because it has been surging higher. It is up 9% in 2026 till time. It is trading at a one-year highs, and it is inching very close to that $120 a ton mark therein. Well, there are various reasons for the support that coal prices seem to be looking at. To begin with, it is the Chinese regulators saying that they are trying to move to streamline the coal industry. China, remember, is the largest consumer, producer of coal as well. And when China wants to make it efficient and align the overall supply chain, you are looking at support coming in for prices from there. And then it has been about the US as well, directing $175 million in federal funds to upgrade plants and to aid coal-fired power sector as well, especially when it comes to electricity, defense, etc. And that has been supportive. When you look at the supply side issues, well, that is another thing that seems to be contributing to price rise. Australia is looking at weather concerns, a lot of rain there as well. And then you have Russia also facing logistic issues supporting prices. In the Indian markets itself, we are looking at a stronger growth when it comes to coal. There is rising electricity demand. The total demand is projected at 1.5 billion tons by 2030, which would be a record number going forward. Also, when you look at the Indian power sector demand, well, that contributes nearly 73% of total demand, and that has been surging higher. The non-power sector, which is steel and cement, the demand therein also is seen as 470 million tons by 2030. So whichever way that you look, you're looking at growing demand at least until 2030. So it's not peaked yet, as earlier reports were suggesting. Take a look at the numbers herein. In FY 2025, we've seen coal production in India hit a record high of 1.05 billion tons. FY 26 is estimated at 1.15 billion tons therein. So we're looking at higher number in this year, back to back in that sense as well. When you look at import numbers, well, yes, India does import, and India imports various other grades like coking coal and low ash thermal coal. In that sense, 243 million tons of an import also is estimated there. My final chart should show you on what we have seen in sense of countries' production numbers and what their estimates are for 2026. So when it comes to China, another increase of a percentage point is what is anticipated in the next year therein, that is this year. India, while of course but a second number in sense of production for coal, is also looking at a growth in production by nearly 3%. When it comes to Indonesia, that could decline by 10%. US production could decline by 9% as well. And when it comes to Australia, because of the weather concerns there, it is going to be a slow recovery going forward into that one there. The markets are anticipating strength continuing in case of the coal prices going forward. There are various reports suggesting that it is going to be between $100 to $140 a ton that you could be looking at coal prices for 2026.
Thank you very much for that. We will slip into a break on that note with the news that it's lower now for the benchmark indices. The Nifty and the Sensex down about 0.25%, and IT is selling off once again. Infosys is now the top Nifty loser, extending its fall to nearly 3%. So all of yesterday's perhaps optimism is now being washed away. Tech Mahindra, Wipro also down in excess of 2%. So it's getting quite weak out there. We will slip into a break. On the other side, we'll talk more about the rout seen in IT stocks, not just today, but over the last fortnight or so. Sunil Kaul of Goldman Sachs will join in.
Welcome back to Market Masters. After some relentless sell-off in global and Indian IT stocks, we are seeing some respite with IT companies like Infosys saying that they actually see an opportunity of, 300 to 400 billion dollars in helping legacy systems, legacy companies adapt to and use AI. So are IT companies bottoming out? Are they good to be bought again? Joining me now is the Managing Director and Head of EM Equity Strategy at Goldman Sachs, Sunil Kaul. Sunil, thank you very much indeed for joining us. Well, that really is the first question. The big crash of IT stocks we saw in India and some respite over the last couple of days, with this very strong argument coming from Nandan Nilekani and Salil Parekh of Infosys that there is an opportunity gap. It all depends on how we execute. Do you buy that?
Sure, Lata. First of all, a pleasure to be back on the show. Listen, I think you're right. If you look at what has happened in the market in the last few weeks, I think there has been a relentless selling and indiscriminate selling of the software companies because global investors are basically questioning the terminal value of these companies. And as we know, software adoption at the enterprise level is pretty complex, right? There are winners and losers and different cohorts, and somebody has to provide the cleaner data sets for these AI models to work. Somebody has to drive the enterprise adoption, as we were just discussing. And so there would be companies that will benefit from that, including software companies. But I think in the US market, the real issue is not just the terminal value, but the margins for these companies are also at record highs. And so in the next few quarters, until we figure out who is kind of winning, how the business modes are, what the pricing power for these different sectors are, probably there are still going to be uncertainties around this. And so we are not advising clients to buy into the global software companies yet. I think having said that, if you look at the Indian software companies, obviously they have also been under pressure, down 15% or so over the last month or so. Over the past year, given the selling we have seen in Indian equity markets, software companies are down 30%. So we are not expecting absolute sort of large downside from current levels. And in that sense, you can say maybe the stock prices are bottoming out. And given the news flow in terms of Anthropic's announcement on one of the large IT companies driving adoption, I think that's a welcome sign. And maybe that sets a floor on the stock prices for the sector overall. But our general sense is that, look, the Indian software companies, when you look at it from a relative perspective, they are still a bit more expensive than the global peers. And if anything, that valuation gap has widened because the global peers corrected more than what the Indian software companies recently have corrected, right? And so relative returns, they may still be underperformers. And when we look at the Indian equity market relative to other sectors, we still think some of the domestic pockets are much more compelling. So we're still underweight the broader sector on a relative sense. But I think agree with you that the absolute stock prices might find a bottom, especially given the recent announcement on that.
Okay. Well, I just wanted to start with IT companies because it's so much top of the mind. But let me zoom out. The third quarter results are out in India. And what has that given you in terms of earnings growth indications? And what are the good sectors right now?
Yeah, look, I think as you may sort of recall, Lata, we turned positive on India back in November, so yes, a couple of months back, taking it back to overweight within our broader Asia and EM allocations. And that was after being cautious for more than a year. And so I think the main sort of core view there was that we were expecting all the policy easing both from the RBI and the central government to show up in the numbers and drive earnings recovery. In terms of what we are seeing in the December quarter, I would say, look, I think numbers are moving in the right direction. MSCI India, which is what we sort of track, the profits there were up 11% year on year. The expectation was about sort of 8%, so 3 percentage points ahead of that number. But more encouragingly, I think it was the top line that has been driving the growth as opposed to margins. That has been the case for past many quarters. And so the revenue growth was at 9%, which is at a 3-year high. And that obviously that's kind of backward-looking data, but in terms of the forward-looking sort of guidance and indicators also, whether you look at the credit growth numbers, you look at the auto sales numbers, you look at some of the commentaries from defense companies, the consumption companies, we are getting more and more hopeful that the earnings recovery is coming through, and we are anticipating earnings growth to go back to sort of mid-teen earnings for MSCI India, which is what our Nifty or broader market return expectations are 29,300 on Nifty, which is roughly that mid-teen return expectation. So we are not baking in any multiple expansion from current levels, even though multiples have derated from peak levels. But we think just as underlying earnings come through, market should do much better over the next 12 months.
Oh, well, that has been my reading as well when I look at, as you say, credit growth, SBI's guidance, very strong. As well, as you say, auto sales, some of the food FMCGs posting double-digit revenue, double-digit volume after a very long time. But what are your pockets? Would it be consumption or would it be financials?
Yeah, look, I think both of those things. We have been overweight financials, as we were discussing. Credit growth is picking up. RBI has done a bunch of easing measures. Some of that is still yet to come through this year and next, and we think that will cumulatively release about 2 percentage points of non-food credit into the system, and we are expecting credit growth to continue to improve, and therefore, I mean, balance sheets, as we all know, for the banks is still very strong, and we think profitability can be sort of 15% plus for the banking sector over the next couple of years. So banks is one of the overweight sectors. We still continue to like the consumption cohorts. We have been overweight autos, still like that pack, and as we just discussed, we are seeing recovery across the different sort of pockets in the auto segment. We have been overweight staples as well, both volume recovering and margin tailwinds from some of the input costs there. And so I think consumption plus financials are where we are expecting the leaders of this recovery. And we are, as I said, we are seeing more and more signs of both urban and rural pockets improving. Out of the broader industrial capex sensitive sectors, I would say we still like defense. I mean, the current reporting season still shows that some of those names are printing very strong earnings growth, and that's obviously a broader thematic pocket we like across the region, given the geopolitics. Power is obviously a theme as well that is gaining from the strong power demand everywhere. And so, barring a few capex pockets, I would say financials, consumption, and then defense power is where our most overweights are.
Okay, let me just quickly ask you about metals. We did see fairly strong earnings from the steel companies and, of course, the non-ferrous even more, but they've quietly sold off.
Yeah, look, I think metals pack, we're kind of more neutral that camp, just because, I mean, we do expect metal and precious metals to be sort of having a strong momentum relative to the oil, but it does feel like some of the rally in metals was more sort of technical driven because of sort of tariff issues, because of hoarding in US, and so there was an artificial scarcity in the metal markets in London and elsewhere outside of the US, and so some of the price appreciation we saw in the metal prices was more sort of technical in nature, and I think it's not. I mean, and near term that momentum could extend. But our sense is that as we go sort of to 6 to 12 months at the back half of the year, you should see some of those metal prices come back in, which is why we are not sort of as bullish on the metal complex relative to domestic.
Fair enough. But, you know, even after the announcement of the Indo-US deal, even if the final signing is due, the, punishing 25% tariffs are off, we haven't seen foreign funds return. There was a bit of positive buying, but then again, punctuated with big sells. What's holding foreign funds back? Is it the rupee?
Not necessarily. Look, I think I'll come to the flows in a bit, but just to tackle the question on rupee, I would say, look, I think the weakness we saw in rupee earlier this year and in the fourth quarter of last year, to us, I think that was sort of a policy choice, right? I mean, obviously you know that as well, but I mean, the starting point of rupee was overvalued. You had weak equity flows. You had the balance of payment, which was worsening a little bit because of the gold prices and imports there, and trade uncertainties were still lingering, which means it makes sense to have a little bit weaker currency. I mean, where we are now, we think the peak underperformance is behind us. And we'll come to the capital flows, but certainly from over the last 2-3 weeks, we have started to see capital flows improving. We also think that the exports should get a boost with the removal of the with the coming of the trade deal. The lower tariffs or the removal of tariffs on Russian oil should also help. And I think all of that means that your current account going forward should look better than what it was previously. And we have actually raised or improved our current account numbers a tad for the rest of the year. And so I think with that backdrop, we do think that, I mean, you may not see a lot of spot appreciation because RBI may still want to sort of keep it more stable. But our sense is that the peak underperformance is behind us. So in that sense, I don't think necessarily that's a big worry for clients in the recent conversations. What I can tell you, and I mentioned this to Prashant as well a couple of weeks back on the show, is that there has been a noticeable pickup in client interest, especially in Europe and US, after the trade deal. And I think many of these clients viewed this as a major overhang for the Indian equity markets. And so interest levels have clearly picked up. We see that a bit in the flows. We see that in the conversations. I mean, for what it's worth, at least since the trade deal was announced, we have seen cumulatively 2 billion of foreign inflows in the market relative to sort of 30 billion of the selling from the peak September 2024, right? So I think directionally that's better. What's also important to keep in mind is that if you look at the broader emerging markets, we are seeing very strong inflows in EM equities as a pack, not just sort of passive, but also in active funds. And those trends are really accelerating. In fact, I think year to date, emerging market funds, the GEM funds have seen close to 40 billion US dollars of inflows, which is the strongest pace of inflows that we have seen in EM in the last 2 decades. And so in terms of narratives, in terms of flows, I think the sentiment around EM has been very positive coming into the year, and some of that money will obviously trickle into Indian equities as well. So there is a broader sort of positive backdrop for EM that will be helping India, in addition to India's kind of idiosyncratic drivers in terms of recovery that should be helpful. And I think the last thing I would say is that given all the tech volatility we are seeing, what we discussed at the top of the call, I think at the margin, people are also realizing that it makes sense to diversify a little bit away from sort of tech-heavy markets to more domestic pockets, and Indian equities is one of the best diversifier in that context, right? And so I think if you put all those 3 things together, our sense is that looking forwards, foreign flow should improve into the Indian equity market.
Oh, Sunil, that's the most cohesive, comprehensive, convincing argument that perhaps the bleakness that we saw in the equity markets earlier in February is perhaps behind us. Thank you very much for joining us with your sense of where EM funds are headed and what you like in the Indian market. Okay, well, that's it on this edition of Market Masters and this edition of Bazaar. Thanks so much for watching. Chartbusters coming up after a break.
Iran and the US inked a general agreement comprising of guiding principles to resolve disputes over Tehran's nuclear program. Brent crude cools off on rising hopes for de-escalation of bilateral tensions, lowering supply risks. Oil India and ONGC, as a result of which, under pressure.
Shares of Bilateral spike in trade. The company emerges as the lowest bidder for a 700 crore EPC project. The order book continues to swell, now nearing the 30,000 crore mark.
Board of Engineers of India is set to mull a second interim dividend for the fiscal on February 26. This follows a strong show in December quarter, stock marginally higher.
Goa bench of the Bombay High Court stays arrest warrant against Ola Electric CEO Bhavish Agarwal, issued by the District Consumer Commission. The stock snaps its 4-day losing streak, but is off the morning highs.
Rally in Paytm continues. Brokerage house Macquarie flags a discount in valuation for Paytm versus PhonePe's proposed valuation in its DRHP. The stock is up nearly 5% in the last 2 trading sessions.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, and with me as always is Mangalam Malu. The markets are lower. The problem is the tech index, after seeing a relief rally in the last few days, it's coming for profit-taking yet again. So it's back closer to around the 32,200 odd mark. But the good news, Mangalam, is on top of your head. The green, the Nifty Bank as well as the mid-cap index not looking too bad.
Not looking too bad. They're holding up. And the tech index, obviously, after that bounce back yesterday, the question was whether that sustains or not. Turns out there has been some selling. And for the Nifty itself, as we move towards 25,750 thereabouts, there is a fair amount of selling that takes place as well. But we also have with us the management of TVS Supply Chain. And this after the company has gone ahead and written, or done an agreement with an Italy-based company. But we'll get to the management in just a bit. Meanwhile, look at, a couple of these stocks which are moving around. We do have TVS Supply Chain, which was a gainer yesterday, but saw a bit of a drop today, profit booking. Today, we have a lot of these metal names. After underperforming yesterday, they did well today. So we have Hindustan Copper, which is high by about 4%. Jindal Stainless is the other one, which is up by around 2.5%. We did see, SAIL, all of them coming for some bit of decline yesterday. But now, they perked up, so that's something that we will monitor. And as we do that, let's get you some ideas for profit coming in from our colleagues at Money Control. Let's go across to our colleagues. Jitendra Gupta joins in with a stock that he's tracking closely.
Coal India is facing near-term pressure as weaker demand and softer realization impacted earnings. But this is temporary. We believe things could improve. During Q3, production remained flat at 200 million tons, down almost 1% on a year-on-year basis. Dispatches also fell by 3% due to lower power demand and high inventory at power plants. On an operating front, EBITDA dropped almost 24% on a year-on-year basis, led by lower realizations and pricing in its e-auction segment. However, now a cyclical recovery is quite possible. E-auction premiums have shown sequential improvement, demand recovery and inventory drawdown at plants could support volumes going ahead. The other key point is GST restructuring. The rate hike from 5% to 18% has corrected the inverted duty structure, enabling utilization of close to 2,634 crore of accumulated input tax credit, which will, of course, strengthen cash flows. Moreover, Coal India is diversifying into rare earth mining and accelerating renewable investments. Overall, some improvement in coal offtake, better realization and benefits of GST and revenue diversification should support overall earnings. Moreover, if you look at stock valuation remain compelling at 7 times its FY28 estimated earning with a dividend yield of close to 7%, offering huge value valuation comfort.
All right, thanks a lot for that, Jitendra. I'll tell you what, slip into a short break, come back. The management of TVS Supply Chain is waiting for us. Stay tuned.
Welcome back. As promised, let's get chatting with the management of TVS Supply Chain. The stock was a buzz in yesterday's session because the company went ahead and wrote an agreement or signed an agreement with an Italian company, Ala Group, to actually enter the Indian aerospace and defense supply chain market. Ravi Vishwanathan, who's the managing director at TVS Supply Chains, joins in now. Obviously, Ravi, we will discuss with you the investment for an outlook from Ala Group under the MOU. We'll also talk about the order pipeline from defense supply and also revision in any sort of growth targets that you have for the next couple of financial years. Ravi, you said that this market in India is $28 billion. Well, that's the overall market. What proportion of this market actually goes into logistics spends? And if you could give us a sense on, how will Ala and you share this revenue and what's the kind of investment that you will make in this deal?
Yeah, good morning and thanks for having us. Yes, it's about a $28 billion industry, and typically supply chain is anywhere between 8 to 12% of the overall size of that market. So we're talking of a significant play here, and this is an evolving area, you want to say, and we want to be pretty early, given the fact that we have very strong strengths in the defense sector. We've been working in the UK and the European defense sector for over 10 years. We have an annual revenue of about $140 million US. So we have a strong play here and the expertise, and coming together with a group like Ala, which is focused on defense, and they themselves are about a $340 million defense player. I think we have a great opportunity in front of us to address this evolving market.
Noted that point, Ravi, and good to see you in as always. Could you quantify the opportunity? What's the total opportunity? How would both of you and the group share revenues, some percentage share, and what it could mean for the listed entity?
Right. Right now, it is an MOU, and the idea is to look at how we can deepen this over the next coming few quarters to see what kind of structure it can be formed into, given all the regulatory and other compliance. But I think the market itself, we are looking at anywhere in the next few years, even at the tip of the iceberg, it should be upward of about 2,000 plus crores. So it is a very attractive market, given that today India is about 2,500 to 3,000 crores revenue for us as TVS SCS. The defense itself would be about that range over the next, I would say, 4 to 5 years. So I think the opportunity is huge in terms of the play. And of course, India is one of the largest spenders in defense, all of us know, and therefore the opportunity.
Right. Ravi, just hold on to that thought. We'll just come to you in a second. NVIDIA has gone ahead and announced a collaboration with a couple of Indian companies. E2E Networks is one of them. Blackwell Group GPU cluster is the other one. And we have L&T and Yota as well. What they'll do is they'll collaborate with these companies for advanced AI factories. We don't know the scope of the revenue. We don't know the scope of the business. We don't know the scope of the order, whether it's come by or not. But AI is the buzzword, right? You name a company, you announce an agreement, you go ahead and there is a stock which has been bid up very sharply.
That's right. I think it's just being announced and these statements are coming in there. But I'll tell you what, looking at some articles, and in the last couple of months itself, they have done some acquisition. E2E Networks, they've acquired 1,000 NVIDIA B200 GPU cluster for the Chennai data center as well. So I think the tie-up, or, they were as doing some business, but reiterating that. And that's why the stock has seen a sharp spike. And I'm not wrong, I think E2E Networks had already seen a sharp correction. So because of that, the street is excited that these comments are coming in there. But, we'll have to see exactly what it means in terms of revenues. But a month and a half ago, there were a couple of newsprints as well that did mention this.
Which explains why in the last 1 month or so itself, the stock is up around 30%. So this is not necessarily new information, but something that the street was sussing out for over a month or so. But let's get back to our conversation with Ravi. Ravi, you did say that the opportunity is large. Yes, 10 to 12% of the $28 billion sort of market, that makes it a near $2 to $3 billion opportunity. But what we want to understand, and because this is an MOU, from a listed company standpoint, how will Ala and you share this revenue? What are the investments that you will have to make? And at the same time, what are the immediate visible orders or the tenders that you are bidding for, just based on the announcement that you made yesterday?
Right. So, like I said, this is an evolving space for us. We will work on it. The reason why it's an MOU is because we will look at it from an opportunity to opportunity perspective. We are looking at opportunities both in India and in the Middle East. So we are looking at how we can work together. And the way we work is really there is a sourcing, there's a procurement, there is a systems integration, and there is a distribution, right? So this is the chain in which we will operate. In India, we think that we will have a very significant play in the sourcing, procurement, and distribution space. And we will lean on the expertise, especially on the aerospace side, from the domain side with ALA. So there is no specific revenue sharing agreements. It will be based on each of these engagements, each of these solutions. I would expect that TVS SCS will have a majority share of revenue when it comes to working in India, and we will evaluate the opportunity, especially in the Middle East, depending on the level of joint engagement that we would have. But for us, clearly, India is the market. India is a place where we believe that there is a significant opportunity, and the recent signing of the Rafale only further strengthens our belief that this is an opportunity in the aerospace and defense that we should capitalize, given the experience that we have. So, specifically to your question, we will probably have a majority share in the India business. As far as investments are concerned, it depends really on the solution. What kind of structure, what kind of facilities we need to have, what kind of transportation and distribution mechanisms that we need to build. And each of these are solutions that we will create based on the requirement from the tenders and so on. So I would say these are early days, but clearly we have a first advantage given the experience and the strength of having worked on similar engagements outside of India and bringing that know-how from UK and Europe into India, which we have been focusing on.
Okay, all right, Ravi. Final question. Will this be a margin accretive business? I'm looking at a business assets. You're doing around 7.5% to around 8% of margins. Will this be actually better margins?
I would say, given our portfolio today, the defense definitely has a better margin profile than the rest of the business. We expect that to continue. And that is the whole focus of the company is converging towards that 4% PBT. So anything that we do is we're looking at margin accretive businesses that we want to engage in so that we can get convergence on that 4% PBT quicker than our original plan.
All right, take that point, Ravi. Thanks a lot for joining in and explaining to us that still in early stages, still evaluating projects, still evaluating the immediate revenue accretion that would happen to you. But for now, it is a step in the right direction and there is a business opportunity out there. The street will attune itself to those comments that you've just made. We take a short break, come back on the other side. The management of Wakefit Innovations joins us to discuss their business outlook after their third quarter numbers. Welcome back. Let's get chatting with the management of Wakefit. Wakefit, the stock is up 17% this month. In fact, from its post-listing low, it's recovered about 30% and now above its issue price of 195 rupees. Chaitanya Ramlingegowda, who's the co-founder and executive director, joins in. We'll obviously be discussing their third quarter numbers, but more importantly, the outlook for the fourth quarter and the year ahead as well. Thanks a lot, Chaitanya, for joining in. First 9 months, your revenues are up 18%. When you joined us during the IPO, you said that 20% plus is a given in terms of revenue growth. So the fourth quarter, are you on track for 20% plus revenue growth this entire year? And will that continue into FY27 as well?
In the furniture sector, we are consistently growing about 24-25%, in the mid-20s actually. But in mattresses, there has been a little bit of a competitive intensity with younger brands raising funds and trying to be innovative on the online market. So there we will have to drive up our marketing spends. So that is the reason the guidance also was that we will come back to historical averages of 8-9% of net revenue as marketing spends. But yeah, we think that at a company level, aspiring for a number that's close to 20% is the right ballpark.
Okay, all right. Hi, Chaitanya. Good to see you, Ben. Well, in line with what you had guided for, the margins have been improving. How much more headroom do you have on that front? And what should the broad range we should be working with?
So when you say margins, I'm guessing you're referring to the Ind AS operating EBITDA.
Right.
So in terms of that, we consistently see that there is headroom for improvement over the next 6 quarters, and most of the juice coming from the furniture category, which is relatively new and where the greenfield project has a lot more capacity to be utilized. So as the demand is going up, both the utilization of the machinery as well as utilization of the warehouses in our middle mile and last mile across the country that we have set up, they go up, and that enables us to drive more margins. So we believe that in furniture, there could be at least 4 to 5% of margin improvement to the company possible over the next 6 to 8 quarters.
You don't give specific EBITDA margins and the revenue performance of the furniture segment and the mattress segment. Can you tell us where they stand at right now for both mattresses and furniture when it comes to margin contribution?
Yeah, we don't do segment level EBITDA primarily because it's very hard to segregate the costs below contribution margin, because it's the same people across the central teams working across the same 3 categories of mattress, furniture, and furnishing decor. But if you look at the overall contribution margin level, mattress is the most profitable, followed by decor and living, followed by furniture, given their age. It's exactly in the decreasing order of their age. Mattress is the most mature, so the most profitable, contributing more to the company. Accessories, which is furnishing, decor, they're the second oldest. They've been around for 7 years or so. And furniture is barely 3.5, 4 years or old. So they are still on that journey of contributing more. But all of them are largely close to, all of them are above break even from a margin perspective.
Okay, all right. If I look at a store addition and compare it with last year, I think the addition is close to around 30%. So is SSG negative for this year?
No, triple SG is actually more than 20% as we speak. It's that if you remember, the way we look at the business is own channel versus external channel. And own channel comprises of our D2C website and our company-owned, company-operated EBO stores. So the revenue moves between these 2 channels internally. But what we worry about is own channel number, which is currently about 2/3 of our overall revenue. Nearly 65% of our revenue comes from these 2 put together, and only 35% comes from external channels where we don't have much control. So store EBITDA, store triple SG, all of them are trending fairly healthy, but customers may transact on D2C or EBO depending on their frame of reference.
And how is your revenue mix likely to evolve from here in favor of furniture? Currently, it's about, 29% coming in from furniture. Where does that go?
Over the next 3 to 4 years, we feel that it will come close to mattress because furniture is growing in mid-20s and mattress is growing in mid-teens. So over the next 3 to 4 years, we feel that it's going to catch up to mattress in terms of revenue.
Okay, all right. Final question from my end before we let you go. In the coming year, profit number, the net profit number comes in at around 100 crores. Is that possible?
We are aspiring to, but last quarter there
Can it be more than that, sir?
No, I think we are a company that always thinks a little long term. So if we worry about stock price and don't take the right call for the company, it come back to bite us later. So we want to make the right investments in people, right investments in marketing. So we don't want to squeeze out every rupee just for the sake of that.
Got that. We let you go on the PAT number, but at least revenue growth aspiration, what it could be for FY27, going by what you're saying, what can a margin band look like? And ultimately, we'll derive the PAT number.
So you somehow want to get the number, but yeah.
If you can give it to us, why not, right?
Yeah, for FY27 at least, we still foresee that the company can continue to deliver late teens kind of a growth number. Margin expansion though, although a lot of the margin will come up, will we let it accrue or will we reinvest back into the business? We will only have clarity once the annual operating plan is approved by the board. So maybe next quarter I'll be able to give you more details.
All right, we will press you once again next quarter and ask you for better clarity on what you're going to do with that margin expansion. At what level will that be capped? Because during the IPO, you said that you will leverage some of these ad spends, but now the unforeseen competitive intensity has come back from some of the new age players who've raised funds. So how does that impact your business in the mattress space is something that we'll be tracking going forward. Thank you, Chaitanya, for joining in. Good luck. With that, we will take a short break on Chartbusters, wrap up on this edition, and stay tuned. The team of Trading are up next. Morning, you're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu, with me Sonal. Well, the market is flitting between red and green for the frontline index. It's been lowered by the IT pack, which actually buoyed the index in yesterday's session. A couple of these upstream oil companies not doing too well as well. The broader markets, again, split right between red and green. So not particularly made its mind up. Still in range. So let's see how that goes.
Unable to make up their mind, but metals, they've made up their mind today. The top gainers on the Nifty as well. That index is up 1.3%. Banks are not far behind, because while the bank index is up around 0.1%, it's the PSU banking index which is lending it some support. So that index is the second biggest gainer in trade today. FMCG pack doing well as well. We'll of course discuss what's happening with ITC in just a bit. But other than that, it's few and far stocks which are buzzing on the upside. We have the likes of Tata Steel, there's JSW Steel, Hindalco, Apollo Hospitals, the stocks which are on our radar. And Nifty has seen that recovery from the lows in last couple of minutes as well. But ITC is one of the top gainers as well in trade today, 1.3% higher. Mangalam, what's happening here?
Well, over the last few trading sessions, if you notice, ITC has been doing well from its lows, and that's largely because the company has now started to affect those price increases, that the tax increase that happened, which was announced on the 1st of January with effect from 1st of February, and no relief coming in the budget. So all these companies, including the likes of Godfrey, Phillips, etc., should come up for you on the screen. And we have all these names doing well, largely because the companies are passing these price hikes. Remember, the tax hike was upwards of 30%, which would imply a price hike between 17 to 25%, which would mean that these companies will have to do it in phases. And now, as every phase progresses, the street reacts to that. UBS one has written, they've cut their target price from 420 to 395, but because of the stock having corrected so much, they still hold their buy call. And they're saying that distributor checks indicate that a range of imminent price hikes is now being implemented. 84mm cigarettes have seen a price increase from 17 rupees to 24 rupees per stick. 64mm cigarettes from 6 rupees to about 7 rupees. That's a 15% price hike. And you have the pricing of 69mm Gold Flake, which is yet to be announced, is expected to be around 12 rupees per stick as well. They've been fully passed on premium cigarettes, kept minimal in the price-sensitive cigarettes. That is to basically minimize the impact on both volumes as well as the EBIT. So that's something that the companies are dynamically doing, and that's Brokerage is taking note of that as well, which explains why the stock is up 1.5%. But again, after this kind of correction, the street is finding value here as well. So not necessarily linked this move to just price hikes.
Okay, take that point. Thank you for explaining that. But Orubindo is the other stock on our radar. It has received a number of observations for its Unit 7. Ekta has accessed the observations, the note as well, and is here to tell us more. Ekta.
Well, yes, the observations to Unit 7 have been made public now. Just to give you a background, this particular plant was inspected from 28 January to the 10th of Feb and was issued 9 observations in total. Now, in terms of a couple of the observations which stood out, for example, they have pretty much, spoken about how the equipment and the utensils were not cleaned at appropriate intervals, which means that that's more drug-related cleaning. And appropriate controls were not exercised over computers or related systems. Complaint records were deficient. Now, it is interesting because some of the analysts have brought up concerns for the 6th observation, particularly in this particular Form 483, where they say that there could possibly be data integrity concerns there, and where the microbiologist potentially has falsified sample collection data. And that's basically what is indicated in that particular Form 483. So the street seems to be quite divided in terms of what the observations or what the route would be in terms of the observations going forward, if in case it would possibly escalate to an official action indicated status, or maybe a possible warning letter as well. They don't see a escalation beyond that at this point in time. On the other side, some of the analysts are of the view that the observations are procedural, and this is something that the management has told us as well. They don't see any serious data integrity, patient safety concerns. However, an official action indicated status cannot be ruled out, but they don't see it escalating beyond that. They see a voluntary action indicated status, which means that they can produce from the plant quite freely, and there would be no escalation clause likely as the likely outcome in this particular scenario. Now, just to give you a background, Unit 7 manufactures oral solids, and this is not the only plant which has been under the scanner. The Unit 3 was also just about recently inspected by the US FDA and issued 11 observations. That already has a warning letter. The company said that totally, or analysts say that totally these two units comprise of around 33% of their ANDAs or outstanding drug applications in the US.
Take that point, Ekta. So the stock is at the day's low, down 4%. Thank you so much for explaining what's happening with the stock as we speak. But let's talk about Dabur, because there has been a management change there. What does it mean? Tell us more, Mangalam.
Well, for FMCG companies, typically it's the management change that can cause a bit of an inflection point. For Dabur, the whispers were there for a very long time that they are looking for a new India CEO, India business CEO, and Harjeet Bhalla's name was also doing the rounds. Now, it has been made official where Harjeet S. Bhalla, who has been announced as the CEO of their India business, with that Mohit Malhotra has been elevated to global CEO. So Harjeet will now be reporting to Mohit. At the same time, Harjeet has experience from Unilever. He has worked at Hershey's, prior to which he was with Metro Cash and Carry India as well. So one assumes that maybe, by virtue of his prior experience, the focus will be on acceleration of growth, on channel strategy, and what it is that they will be doing when it comes to some of their innovations and investments in the digital ventures as well, especially after the company announced its Dabur Ventures arm, where they would make investments in some of these digital D2C sort of brands. So the stock is currently lower, largely because of this having been in the works for a while, and the street now would await and see whether he makes a difference to the India business when it comes to increasing volume growth or not, because the company is guided for mid-single digit volume growth and high single-digit revenue growth in the next few quarters.
Okay, that's about Dabur. So a lot of stocks which are on our radar today. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll focus on the bond market with Manisha Gupta on the other side.
Fly Emirates, fly better.
TV 18 and India Bonds presents Bond Street.
Welcome back. You're still tuned into Trading Hour. As promised, let's shift focus to the bond market. Manisha Gupta is joining in now. Manisha, what do you have for us?
Well, thank you for that. In Bond Street, we're talking about the overall bonds, which have opened steady for a second straight day this time around yet again. Well, this is after RBI announcing a second debt switch. Well, with it, this is an expectation that the government will buy back nearly 25,000 crore worth of government securities. What this is expected to do is that this will ease supply concerns, one, and markets also is talking about on how this could perhaps also bring down the gross borrowing number for the FY27 to rupees 16.2 lakh crores as well. The other thing, the other cue really seems to be coming in from the international market, where you have the tepid US Treasury yields that also seems to be supporting the Indian bonds therein. But going forward from here, it really is going to be the focus on the US FOMC meeting minutes. Well, that comes in today. And then you have the US GDP data that comes in on Friday. So between these two data points is where you will see Indian markets reacting as well. Interestingly, since the budget and the SEBI official, everybody talking about the Indian bond market, the debt market that is, the mutual fund investors post-budget have seen a lot of market focus come back in case of corporate bonds, also short duration funds and money market funds as well. I've been talking to various treasury heads as well, and they tell me that the spreads on corporate bonds in the 1 to 3 year segment has remained attractive, and they have seen a lot of money flowing into that direction too.
All right, Manisha, thanks a lot for that. We'll take a short break on that note. On the other side, market technicals with Sneha Seth of Angel One joins in. And we'll also discuss their top trading bets. Right now, the Nifty holding around the 25,700 mark. Sneha Seth will probably give us some direction.
CNBC TV 18 and India Bonds presents Bond Street.
You want to talk business? Meet me in the on-board.
Around 25,700 for the Nifty. Just look at the cues coming in from the F&O space. The Nifty is around the 25,700 mark, but at the same time, if you look at the Nifty Bank, it's not yet made up its mind. The mid-cap index is marginally the green. It's the IT index, which did well yesterday, is now dragging the frontline index, and alongside that, we do have a bunch of these oil majors as well, the likes of ONGC, etc., which are lower. For the Nifty, though, a technical range has been established so far. If you look at the Nifty intraday along with the 20 and the 50-day moving average, the low of the Nifty around 25,500 is where the 20-day moving average is, and the high of the Nifty is around where the 50-day moving average is, which is around 25,755. So if one was to make that broad range and those two lines come up for you with the 20 and the 50-day moving average, you would see that the Nifty is positioned itself in that range itself. And the option writers, as a result of which, are looking at just those levels. So we have the 25,700 call and the 25,700 put. Both of them are equally active in trade. So the 25,700 call comes up for you. Alongside that, we have the 25,700 put that will come up for you as well. Both of them combined premium of almost 250 rupees. Again, telling you that between 25,450 to 25,950 is where the entire range of the market is. And this is for options that expire next Tuesday. So we have enough time for the next expiry as well, which is why the range is broad. In terms of individual stocks, a lot of them are fairly well bid today. Metal names are doing well. So Tata Steel has a lot of long positions being added. BSE is the other one which has a lot of open interest built up as well after some decline that we saw earlier. With that, what we'll do is we'll get to Sneha Seth, who joins in. Sneha, the Nifty has been range bound. What's your sense? Is it consolidating at a higher range, or is it waiting for a bit of a breakout or breakdown?
So overall, I believe it's in consolidation for now. After some wide swings, we are seeing some consolidation in Nifty. At present, I believe the support zone is placed around 25,550. And on the higher side, I believe the resistance is placed around 25,800. So once we see a move above this range, then only we may see some buying interest coming. Interestingly, if you see the banking index, that has been performing. So looking at the banking index specifically, I believe Nifty may head on the higher side instead of going, breaching the support zone. So a bit positive looking at the overall chart structure for banking index and Nifty. So I think one should be, not need to be very aggressive, but use dips to go low.
Take that point. Any individual stocks on your radar, Sneha?
Individually, I like Axis Bank from the banking space. Now, this counter has done quite good. There was a resistance placed around 1360, and today we are seeing this counter surpassing those levels. So I feel that looking at the overall chart structure, one can go ahead and long this counter with a strict stop loss of 1335, and the upside potential will be around 1410. Apart from this, Dr. Reddy looks quite good. Now, if you see the overall chart structure, the falling trendline resistance was acting as a hurdle, but now this counter has surpassed those zones. So I believe we can see follow-up buying over here. Looking at the options activity also, we are seeing decent unwinding in out of the money call options. So I believe one can go ahead and long Dr. Reddy as well with a stop around 1249, and upside potential is around 1340.
All right. Do you have a call on ITC? The stock has seen some bit of bottom formation, and from there it's recovered a bit. So from its 52-week low, it's up around 9 to 10%. Do you think this is tradable?
So far, yes. Last 3 sessions, we are seeing some buying interest coming in. It has also managed to surpass the 20-dem on the daily chart. I believe one can expect this counter heading at least towards 345, 348 as the level which I'm watching for this counter, looking at the volumes for now. So overall chart structure looks good, and yes, one can keep a stop loss of today's low, that is around 380, and go long for the target of 345.
And Sneha, thank you so much for joining in with those individual names and stock checks as well. But let's do one thing. Let's now cut across to the AI Summit in Delhi for a conversation with Tech Mahindra's Chief Technology Officer, Shyam Arora.
From AQ. As enterprises are moving from AI pilots to scale deployments, the real test is now in execution. The focus has now moved to real-world integration, responsible AI, and what it does for IT companies. So the challenge for IT services firms here is twofold. First is how they help their global clients adopt AI at speed while also future-proofing their own growth with the onset of artificial intelligence. Joining me now to decode all of this is Shyam Arora, CTO at Tech Mahindra. Thank you so much, sir, for joining us at the CNBC TV 18 Edge AI studio here at the India Impact AI Summit. I'd first like to start by asking you that enterprises, like I said, are now moving from experimentation to execution. How are you future-proofing your clients and helping them adopt AI at speed?
Well, first of all, Rachna, thank you, and thank you to CNBC for having me here. I think that's a very, very fundamental and a very good question. And you know, as you probably know, I come from Standard Chartered Bank, where my entire work was towards building scalable technologies. And if you look at our brand, which is you know, scale at speed, right? And that's exactly what we are doing. So we have built platforms to adopt the responsible adoption of you know, let's say technology like agentic AI across multiple different processes that our clients want to transform. So our agentic AI platform is called Orion. Similarly, we built a platform to train the language models, and it's called Indus. And you probably have seen that as a part of the AI Summit here, we are launching Indus 2.0, which is a language model built for you know, Indian context and Indian languages for you know, college, for the kids' education. So I think the best way to create scale and you know, scalable advantage for our customers is to really deploy platforms which allow you to do multiple things or multiple processes or start solving multiple use cases using the same technology or the same platform. Of course, our platform has a lot of flexibility. It allows you to use different models. It allows you to be able to define your own flows. It allows you to start creating your own agents and, you know, start giving context to the agents, etc. So that's I would say one way of doing it, or I would say the right way of doing it. But of course, underlying that is, of course, there's a lot of work that you need to do in terms of how you know, modernize your technology platforms lying underneath, how you expose the data so that that's available for the AI to consume also underneath. So there's aspects of architecture that you need to look at across the enterprise. But of course, how do you adopt these technologies responsibly and properly is by way of platforms.
Right. Responsible AI is truly the theme that we're seeing unfold here at the India Impact AI Summit also. But first, I'd like to understand, in terms of making it all accessible and possible for your clients, where are you guys on the journey there? Because the speed at which AI is changing every day is probably more faster than the light speed. But how do you adopt to that speed? At the same time, where are your clients on this?
Right. So I think, again, as you said, there's a lot of innovation going on in the space of AI, and I would say specifically in the way the models are evolving, there's a lot of innovation going on in that side of you know, AI, etc. And if you think about it, the models are helping you do some of the tasks, typically, you know, let's say code creation tasks, in a slightly better manner or in, you know, a more assisted manner, in a manner that you're able to use quite a lot of the, you know, components of code that is being generated by these agents, as long as the right context was provided to these agents. So overall, if you see the other part of the AI, which is, you know, if you think about AI also allowing you to transform experiences, transform businesses, or create new innovations, I would say those parts of uses of AI are yet to pick up at speed or at pace. We have done, I would say, huge number of work with a number of our clients solving very specific problems for them. And these are not, let's say, tasks that we are displacing. This is just, let's say, you know, inefficiency that sat in the system. So, you know, systems used to have a greater downtime, or it used to take, you know, huge amount of time to understand manuals written in different languages so as to be able to interpret and then start fixing the equipment, or, you know, leave alone doing any preventive or predictive maintenance. So there are all kinds of aspects of experiences which were broken or value that didn't exist, which is now being created by use of AI. But I think that journey in terms of what the possibilities might be, where the experiences can get transformed or life can get much more convenient, those are the types of values that enterprises will exploit and explore more and more in times to come.
Right. What we saw unfold in the month of January with what was happening to IT services firm across the world sort of led to this fear of a SaaS apocalypse. How much of that do you think is true? Because experts here I've seen argue that SaaS is the foundation for artificial intelligence and that it's a layer that gets added on. But what's your take on it?
So first of all, I think SaaS is a too general a term, right? I think the systems of record are always going to stay. So if you look at a SaaS as a system of record of, let's say how an ERP is, chained, or how, your client data is being recorded, or how anything else, those systems of record are always going to remain. The workflows on those are going to evolve, right? The experiences on those are going to evolve. And that has always evolved, even in the past. It's just that now the possibilities of that evolution have gone up much more significantly. So that's the way I see it. And I think you also spoke about the disruption overall to the industry. And I think that was more because I would say when people look at AI as a very small portion of the work, or what it's doing to a small portion of work, they start thinking about, oh, what's happening here? But if you think about AI, it's absolutely like a layer cake, right? Starting right from energy to infrastructure to data to models to application to orchestration, and then the experience layer. Now, if you look at let's say Tech Mahindra, we are doing work across all of these layers, right from infrastructure to creating models to creating an orchestration engine, which is Orion, as I spoke about, to the applications and the experiences, which the transformation of that was not really possible earlier, and that's what the enterprise is exploring today. So I would say the work using AI is getting richer, it's creating better value, and the ROI of the investment going into IT is becoming better. And that's the reason I think this industry is going to continue to grow and continue to attract more money from the enterprises to create even greater value for their clients.
All right, that's the word coming in from Tech Mahindra from the AI Summit. With that, we'll slip into a short break now. When we come back, we'll discuss the market fundamentals with Amisha Vora of PL Capital.
Welcome back. You're still tuned into Trading Hour. Amisha Vora, Chairperson and MD from PL Capital, is joining in now to discuss some market fundamentals. Amisha, good morning. Thank you so much for joining in. Well, I have to start by asking you about the IT pack. This the buzzword AI, which is leading to that sharp fall in stocks. We did see a recovery yesterday, but that was sold into today. So many conversations, so many partnerships happening at the AI summit. What do you make of that? Is this something which could be a threat to a future threat to Indian IT, or you think valuations are reasonable now for that pack?
I think that, this also offers an opportunity because across the world, organizations will have to adopt to IT. And in that, our IT services company, those who can really reskill their workforces to be useful for these organizational transformations using AI. Because see, now the corporations will have to use AI, agentic bots across all their functions. It will not be restricted IT as one function, be it their sales, marketing, be it their operations, be it their logistics, be it their supply chain, be it their reduction in inventory. I think the opportunities for using AI and making AI usable and agentic for different industries, different corporations itself is a big opportunity. So I feel that there will be winners and losers who really make their workforces more capable of offering solutions. And in turn, the requirement of number of people by the IT companies will reduce because the coding, which will involve much lesser human effort, but other things will. So I feel, there will be winners, but at this valuation, coming back from portfolio perspective, particularly, I would feel that these companies are valued very fairly and there is no crackdown, which I see, frankly, both because of the fact that March 26, they posted about 4% growth on an average. That is what Street is expecting. And based on their total value of contracts, March 27 Street, including my analyst, is at 6 to 7% plus growth and bottom line growth to be double digit. So with this valuation, I think that it will find support till it emerges how the growth over next 3 to 5 years is really panning out.
Right. Growth is middling. Actually, the street is worried about multiples derating, and that's for not only the IT sector, it's also for the FMCG sector, because for the last many quarters, growth has evaded them. And the street then believes that if there is no growth, then what's the point of 50, 60, 70 sort of multiple? And that's exactly the thing that's perhaps playing out in both these counters, and maybe the street is not looking at them as defensives anymore. Would you concur with that, Amisha?
So first I will talk about IT. See, IT is suffering because of the fact that within the technology, globally, the growth is in the vicinity of quarterly 30 to 50%. When we come to services model, which India currently has of some of the large IT companies, we are annually at 4, 5, 10%. So there is a huge disparity and dislike. But when we see the way things and models will evolve, I think the markets, particularly Indian markets and analysts, are not figuring that there is a huge possibility of margin uptick. Because if a lot of work is getting done coding by putting the bots or agents, I'm sure it will be margin accretive over a period of time for Indian IT. And beyond that, the current contracts which have come, which will be implemented, say, for example, in 27, there is no rate change which has happened till now. And we have Rupee also going a bit in our favor. So I think somewhere market might get a little surprise, both in terms of top line and bottom line growth. Coming back to your valuation theory, I think, yes, we need that visibility emerging that with AI, how partnering AI for developing enterprise-specific models and also industry-specific models is a big work, translating into orders, translating into workforce, reskilling. Once markets start seeing this, I think that they will start believing in the long term and start giving valuation again. So that is going to take a little time.
Okay, Amisha, last question before we let you go. Which are the sectors which you are very bullish on now, considering the fall that we saw in markets? They're reasonably valued, other than IT and FMCG pack that we've been talking about.
I'm extremely bullish on power. Power showing itself by way of both the power generators, power savers or battery storage, power transformers, whatever, wire cables, transmission, the whole chain of power, renewable, but also largely the fossil fuel power also, I think is going to be a big beneficiary of the entire AI move which is happening. And they are available at a very reasonable valuation. If you take a stock like NTPC, I think it's available at a very, very reasonable valuation with good growth, good cash, good dividend. And of course, you can further percolate down in the sector, as I mentioned. So I think apart from the fact that we are bullish on defense, we are bullish on financials, we are the news and metals, now we are very bullish on power.
All right, bullish on power along with metals. NTPC is a stock that you like. Amisha, thank you so much for joining in and giving us your views on IT, the valuations, what the street is making of them, but at the same time, some investable ideas as well. But since you spoke about AI, the disruption is the buzzword for the IT sector. We'll tell you how it's playing out for the sector after this short break. Keep it with CNBC TV 18. Welcome back. If you look at, the IT pack, that's been disrupted by artificial intelligence, conversation around that, and it's been the buzzword over the last few weeks, with Indian IT stocks taking a hit over growth concerns, companies announcing a host of tie-ups to develop the AI opportunity. The stock's doing well yesterday, but now selling off once again. How much does it contribute to the sector? What are brokerages saying? Why are they still bullish? Rima has all the details. Rima.
Thanks so much for that. As you said, generative AI may be dominating the narrative. It may be the buzzword, but the actual revenue contribution from advanced AI or generative AI is still in early stages. Now, yesterday, Infosys at the AI Investor Day said that advanced AI, generative AI, contributes about 5.5% to their overall revenue, in line with, say, a TCS at 6% or an HCLTech at nearly 4%. But remember, the definition of AI may vary across companies, making direct comparisons a bit tricky. Now, how will you read this number? Will you be a bit disappointed because AI has been around for some time, but you can still say that the contribution is only 5%? Or will you look at it as a half glass full and say that, well, the AI contribution is only 5% and therefore look at the significant headroom for expansion? Brokerages are fairly bullish. A lot of notes came out on Infosys overnight, and out of the 52 analysts tracking the company, 38 are a buy, 12 have a hold rating, and only 2 of them have a sell rating on the stock. Global brokerages like JP Morgan, Jefferies, UBS, HSBC, CLSA have all reiterated their bullish stance. For JP Morgan, the target price is 1,020. For CLSA, it stands at about 1,790. Now, why are these brokerages bullish on Infosys? Well, the bullish stance, or the constructive stance, rests on 5 key drivers. One, the AI opportunity. Remember yesterday, Nandan Salil Parekh spoke about how the AI services opportunity is $300 to $400 billion by FY30. So that is creating a very large total addressable market for the Indian IT companies. Secondly, and this is a big one, data modernization is emerging as a key driver because enterprises need partners like Infosys to clean, organize, and modernize legacy data before you can actually deploy AI at scale. Third, Infosys' collaboration with Anthropic is also seen as a big positive towards developing the AI ecosystem, staying relevant, and using these highly productive tools. Fourth, for the near term at least, the macros are looking better. So FY27 growth is likely to be better than FY26. And fifth, valuations for Infosys at least are 18-19 times, which is cheaper than the long-term average of 20 times. So in that sense, there is valuation comfort. So while the message from the brokerages may be clear and positive, it's still disconnected with what's happening in the market because the IT index once again is under pressure. In this month itself, it's fallen close to about 15%, and it's not a global story because even if you look at the global ETF, it's called iShares, it's a software ETF, that is down more than 20% on a year-to-date basis. And the other big worry, which is on the economy front, on the jobs front. Yesterday, Nandan Nilekani said that 92 million jobs may be lost because of AI, but 170 million may be created. But as of now, this is the picture for the first 9 months of the year. Across the 4 large cap IT companies, the net headcount is down. It's down, 700. It's on account of TCS, but you still get the message, right? There is to some extent a AI jobs decoupling. What would take 10 engineers before is now taking 5 engineers plus AI. So in a world where there is a decoupling taking place between AI and jobs, what happens to job creation is also a big economy worry point. Back to you.
Thank you so much for joining us with all those details. Earlier today, we spoke to Cristiano Mon, who is the president CEO of Qualcomm, and he said that India is going to be the fastest growing AI market in the world. Listen in.
And if you look at how fast the internet develop and how things leapfrog, into the future, especially when you think about digital payments and everything that is now happening with smartphones. When I look of AI, that's going to repeat itself in India, but it's going to be more powerful. The reason it's going to be more powerful is because AI has an incredible ability to empower people. The same way that connecting to the internet has fundamentally changed, I think, people access to information. I think AI is going to take that to the next level. How you get access to information, how you train yourself, how you get instant feedback about things, how you learn about things, how you do different things augmented by an agent, and how the entire economy of agents is going to get developed. I think India has an opportunity to be one of the fastest growing AI nations in the world.
All right, and CK Vijay Kumar, who's the MD at HCLTech, also told us yesterday that there will be 2 to 3% annual deflation, which they've modeled in for due to AI. Let's listen into what he had to say.
We believe there will be 2 to 3% deflation at an overall level because of AI. And this is something we've modeled. But there are at least 5 mega opportunities that we are chasing, right? AI factory, it's $1 trillion capex will mean at least $100 billion of services spent, and at least a couple of $1 billion we should be able to get from that. Physical AI is again another big opportunity. The whole agentic implementation. See, there is a huge legacy install base. We had called out about $600 million annualized revenues, advanced AI, and once again, this is different from regular AI revenue a lot of companies are talking about.
All right, with that, we'll slip into a short break. When we come back, we'll get you more on the markets on the other side.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Welcome back. Absolutely flat on the Nifty, but with some negative bias. Even the mid-cap index is struggling to be in the green for now. The Bank Nifty is outperforming, but the markets have come off from the highs of the day. The IT pack continues to be on our radar. But with that, we'll take your leave on this edition of Trading Hour. Halftime report is up next with all the market action. Range trading in the US and uncertainties over impact of AI keep stocks in check. Metals and PSU banks seek out gains while IT and realty drag.
Dr. Reddy's MD GV Prasad tells CNBC TV 18 most regulatory issues for its weight loss drug in Canada are resolved and a launch is likely by the month of May. He adds that consumer healthcare is an area of focus for acquisitions.
Midcap outperforms select stocks seeing sharp moves. E2E Networks jumps after Nvidia announces a tie-up for AI factories, while Orubindo Pharma slides on serious US FDA observations after inspecting one of its units.
IT staffing firms TeamLease and Quest Corp say entry-level hiring has shrunk, but hiring spends remain robust as firms are willing to pay top dollar for experienced AI, ML and cybersecurity professionals. They add that reskilling is the only way to bridge the big demand-supply gap in new technologies. Very good afternoon. Welcome to Halftime Report on CNBC TV 18. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we're seeing an absolutely quiet session, at least for the frontline indices. But the banks seem to be doing a smidge better, you'd have to say today. So higher by around 100 odd points currently for the Bank Nifty. IT continues to dominate in terms of headlines. So we have the IT index, which is seeing pressure in today's trading session as well, despite all of the headlines coming out from the AI summit. But separately, we do have a lot of stocks which are buzzing in the broader markets, and what stands out is a positive advance decline ratio. So around 2,000 stocks advancing to around 1,891 stocks declining on the Bombay Stock Exchange. So that's how things stack up in today's trade.
Hi, Ekta. Yes, interesting there. We'll keep an eye out on that advance decline line as well, right? Which is also on the screen right now, because, they are going to flip-flop. Is it going to be more declines versus advances second half of the trading session? That's what we'll watch out for. But metals, PSU banks, FMCG among the top sectoral gainer today. And obviously, Ekta also said a lot of individual names. Let's not forget Netweb Technologies. That's buzzing in trade up almost 12% as well. But on the show, we will focus on buzzing stocks and big movers in the trade today. Stay tuned in for that. Then we're going to be putting the spotlight on the latest developments in our segment, What's Trending, and Sunil Kaul's view on AI's play as well as its effect on the markets. We will bring you a conversation with the management of Intellect Design on AI trends from the India AI Summit, and a little later we'll connect with the management of BHP in our Commodity Corner segment as well. But first up, let's go across to Gaurav, who's here to tell us which are the important stocks that are moving around in today's trading session. Good afternoon, Gaurav.
Well, good afternoon. If we look at the stocks and the movement, first let's talk about the Nifty Metals segment and specifically the stocks like Hindustan Copper, Jindal Stainless and Tata Steel. If you look at all these stocks for the last 2 days, we saw there was some kind of pressure, but today we are seeing some bounce back from that pressure point. And if you look at the index itself, the Nifty Metals index is up more than 1% in a trade today. Other than that, look at PSU banks. If you look at the past history as well, there have been some rally which was seen in PSU banks, and it is continuing even in this day as well, with PNB, Indian Overseas Bank, Maharashtra Bank, Union Bank as one of the key contributors and key leaders in this rally within the sector. If you look at the cigarette stocks like ITC and Godfrey Phillips, there also we are seeing some kind of uptick. In fact, Godfrey Phillips is up more than 10%, and the key reason being that there are talks that the price range of cigarette is increased, and that is something that market is appreciating, and that is what we are seeing in the stocks as well. And at the same time, let's also not forget about the stock called NDL Venture. Now CCI they have given an approval for the stock to merge with Hinduja Leyland Finance, and this is something which is keeping the stock in buzz. On the losing side, if you look at Nifty IT, despite the AI summit which is going on, we are seeing some kind of pressure in the Indian IT segment, specifically the companies like LTIMindtree, Persistent, Infosys. All of these companies are down more than 2%. And lastly, let's also not forget about the paint segment, because there was a note from Macquarie which suggests that there will be some moderate pace of recovery in second half of FY26. And at the same time, if you look at stocks like Asian Paints, Kansai Nerolac, Berger Paints, all of these stocks are currently under pressure. So all in all, we are seeing some losers as well as the winners in a day. So let's see how it ends for all these stocks in a day today.
Okay, all right, Gaurav, thanks very much for that. So yes, definitely quite a buzzing screen you have. But let's in fact welcome Jay Thakur, who's joining in for a tech check on the markets today. Jay, hi, welcome to the show. Well, it's turning out to be a quiet day, you'd have to say, but specific stocks stand out. So first, how would you approach the key indices? Do you think that maybe the mid caps are going to see pressure as the second half goes on?
Hi, good morning to you. Good afternoon to you, rather. And Vinay, I would say that, definitely, Nifty is
quite range bound, and the range has been broad as well. I mean, it's 2% kind of a range, 25,500 on the downside to 26,000 on the upside for this monthly series, I would say. And 26,000 is key going forward. I mean, beyond that, you would really see the upward momentum, in fact, gaining, and you would see further fuel to the markets. Probably, thereafter, Nifty heads towards the lifetime high against. Else, it's likely to consolidate within this range. Only what has happened is one thing which has happened is the India VIX, which recently last week had gone up. On account of some correction which we saw in the markets, and thereafter markets have gone sideways. But then somehow India VIX has somewhat formed a base around the levels of 11.5 and 12. So unless we don't see it falling further below those levels, there could be some volatility as well around the monthly expiry. But having said that, I would say that Nifty IT continues to be a laggard, and we see continuous short build up there, and that is one index which is likely to weigh some pressure on Nifty. But on the flip side, why Nifty is getting range bound is that since IT is negative, it's weighing pressure on the index. On the flip side, the bank Nifty, the metals, they are in fact supporting the Nifty. We have seen the PSU banks leading from the front, and out there within the NBFC and the life insurance space as well, we are seeing a good upward momentum. So that's 40% of the market which is helping the Nifty to go upside. And there is some bounce back or some support from the FMCG names as well. Now, if you see Marico, in fact, Colgate Palmolive also bouncing back from these levels, ITC bouncing back rather since past couple of trading sessions. So I see that this range is likely to be held at least until the monthly expiry, and unless we don't get a clear breakout from this 500 points range. It's rather to be stock specific, and on the long side, it would be metals, PSU banks, and selective FMCG names is what I would say one can focus on, at least in the short term.
Okay, selective FMCG names are some of the names that one could see in the short term as well, or look out for in the short term. Jay, good afternoon. Any specific names, whether would you say FMCG names that you would suggest, or any other names as well?
Definitely, among the FMCG, I would say that Marico, which has clearly seen good long build-up, the stock had actually consolidated since quite long, and finally now we are seeing a good breakout on the upside. So I think 820 to 850 could be a good positional target for Marico from the long perspective. The data is quite positive out there, and within the same sector, I would say Colgate Palmolive, which is absolutely opposite. I mean, this is one stock, Marico, which you see at 52-week high, whereas Colpal is at 52-week low. But why that is looking positive? Because out there we are seeing some positive divergence, and there has been a lot of shorts which have got accumulated so far. And since the stock has formed this base around the levels of 2100, the risk reward is quite favorable from the point of view of short covering, Vinny. So this would be from the point of view of short covering, wherein one can target 2350 to 2500 until March. These are the two names. And from the metal pack, I think that Jindal Steel, which has definitely seen a good long build up, and this is one stock from the ferrous names, which I think can inch towards the levels of 1300 positionally. So Jindal Steel for a target of 1300 with a stop loss below 1190. I mean, 1200 and 1220 as far as Feb series is concerned, that is where we saw a good call base. And the stock is trading quite well above those levels comfortably on a closing basis as well. So I think there is a good chance of call unwinding, and which can help the stock to inch towards 1300. So these are the three stocks I think within the FNO space one can look out for.
Okay. All right, Jay, we're going to leave it on that note. Thanks very much for joining in and giving us all of that perspective on the technicals of the market. We need to take a short break with the news that the Nifty is absolutely flat. But as you can see, the IT stocks continue to remain under pressure in today's trading session as well. We'll be back with more. Stay tuned. Welcome back. Well, for the markets, it's extremely quiet, but let's talk about our What's Trending segment and halftime report. We continue to track AI as the dominant theme. This is even as IT stocks wobble, with the Nifty IT index down nearly 15% this month. And despite the correction, the AI Impact Summit underway in Delhi continues to drive headlines. More importantly, deal momentum with partnerships such as Infosys and Anthropic dominate Mindspace. Joining us now is in fact, is going to be the management of Intellect Design Arena, which has launched HR Teamspace, which is extending its Purple Fabric Enterprise AI on Tap model. We'll understand more of that in just a bit. But before we get to that conversation, let's listen in to Goldman Sachs' Sunil Kaul and what he had to say on the Indian IT and artificial intelligence opportunity. Listen in.
If you look at what has happened in the market in the last few weeks, I think there has been a relentless selling and indiscriminate selling of the software companies, because global investors are basically questioning the terminal value of these companies. And as we know, software adoption at the enterprise level is pretty complex, right? There are winners and losers and different cohorts, and somebody has to provide the cleaner data sets for these AI models to work. Somebody has to drive the enterprise adoption. In the US market, the real issue is not just the terminal value, but the margins for these companies are also at record highs. And so in the next few quarters, until we figure out who is kind of winning, how the business moats are, what the pricing power for these different sectors are, probably there are still going to be uncertainties around this. And so we are not advising clients to buy into the global software companies yet. If you look at the Indian software companies, obviously they have also been under pressure, down 15% or so over the last month or so. Over the past year, given the selling we have seen in Indian equity markets, software companies are down 30%. So we are not expecting absolute sort of large downside from current levels. And in that sense, you can say maybe the stock prices are bottoming out. But our general sense is that, look, the Indian software companies, when you look at it from a relative perspective, they are still a bit more expensive than the global peers. And if anything, that valuation gap has widened because the global peers corrected more than what the Indian software companies recently have corrected, right? And so relative returns, they may still be underperformers. And when we look at the Indian equity market relative to other sectors, we still think some of the domestic pockets are much more compelling. So we're still underweight the broader sector.
Okay, that's the word coming in there from Sunil. But let's move on and bring on board Intellect Design Arena's management right now. And let's welcome on board Arun Jain, Managing Director of the company and Chief Architect at Purple Fabric, joining us now to talk to us about AI impact, as well as in terms of the launch that they've made as well. He's joining us from that India AI Impact Summit as well. Mr. Jain, good afternoon. Thank you so much for joining us on the show. We want to talk about three important points: AI opportunity, launch of this HR team space, as well as the strategy now you have for Purple Fabric. So let's start by talking about your the launch that came in yesterday, the HR team space launch. That's through Purple Fabric, and it's in tie-up with Adrenaline E-Systems. Mr. Jain, one, what will this mean for the company in terms of a revenue opportunity? How is the growth that will mean for Purple Fabric as well, and your AI strategy here?
Yeah, so if you have seen that Anthropic has launched Co-work. Co-work is for individual player. So like a co-pilot and co-work, they work for individual efficiency. Now, if you want to look at it, a team has to work to get more efficient. And we launched Teamspace as a product, and we tie up as a first partner, Adrenaline. We'll be partnering with many more companies because our core product is Enterprise Teamspace. It is the outcome of Purple Fabric agent designing system, but putting into Teamspace where they get all sets of agents well organized, with an entire team which is working to improve the productivity of overall team, because we are moving from individual efficiency to team efficiency to drive the productivity metrics. And individual productivity to us is a myth because it doesn't drive the overall enterprise productivity. And that's what Adrenaline is the first partner when we are doing it. Revenue potential is large because HR space, Adolin is a leader in HR space. Last 20 years, they are working in HR space. So we partner with them as a first player. We'll be partnering in marketing space. We'll be partnering with other companies in various team spaces. So now we have a team space for government. We have a team space for banking. We have a team space for IT services company. So IT service company can have a team space, and we are launching at a very attractive price of 99,500 for 50 user license. So our belief is that every team should have one set of team space with them.
Okay. All right, Mr. Jain, just hold that thought because we do have an important conversation we need to cut across to. Shireen is in conversation with the IT minister and the TCS MD and CEO. Let's listen into that.
Hello and welcome to CNBC TV 18 special broadcast here live from the India AI Impact Summit. I'm Shireen Bhan. We're broadcasting from our studios. As you've been noticing, we've been live streaming here for the last several days. It is my pleasure to welcome to our studios here the minister himself, Ashwini Vaishnav, also with us, K. Krithivasan, the CEO of TCS. Gentlemen, thank you very much for joining us. Mr. Vaishnav, let me start by talking to you about the milestone that's just been clocked. A record has been created in the Guinness Book of World Records. Please tell our viewers about that.
Our Prime Minister inspired us to involve the students in responsible use of AI. So that's why we reached out to the colleges and spoke with the faculty members as well as the students. And they all came out in large numbers to take a pledge on responsible and ethical use of AI. Guinness was expecting a number of 5,000 for a record. We finally came out with 250,000, 2.5 lakh students taking pledge. And just now Guinness gave us the world record certificate for largest number of people taking pledge to use AI responsibly and ethically.
Well, the certificate is on its way and we should hopefully be able to show it to you by the end of this conversation. But Mr. Vaishnav, you know, speaking about the ethical use of AI, and while this milestone is a significant one, the government has also brought in regulations, including more recently the labeling norms for AI for synthetic content. I want to start with that, sir. That's the first step. How far do you believe the government needs to move on regulation to try and address this issue?
This is very important because when people look at a video, should they trust that video or should they not trust that video? Is that a real video or is that a fake content? That choice in people's minds has to be clearly an informed choice. That's why it's very important that any video which is generated using AI and it's a deep fake, in that case, that label should be there so that people can make the choice whether they want to believe it or not.
Well, you know, moving away from AI and labeling norms and regulation, let's talk about the big theme here, one of the big themes here at the India AI Impact Summit, and that is building out AI infrastructure. And I'll get Kriti to come in on that as well. I know that you've firmly believe that the amount that's been committed to India by the likes of Google, etc., that's only the tip of the iceberg. You expect much more to follow. On the back of the conversations that have happened here, sir, you know, the number you gave me in Davos was about 90 billion. What does it look like for the road ahead?
Over the coming 2 years, we can expect about $200 billion investment in the AI infra layer. And simultaneously, we can expect more than $17 billion in VC funding for the startups and deep tech, especially deep tech startups, in solutions, in applications, in the way AI would be used.
The Qualcomm CEO, and they've just committed $150 million as part of a venture fund to invest in India-led AI startups. The question, though, is will India be one of the fastest growing AI nations from a consumer point of view, or is it also going to be a developer's nation from an AI standpoint?
I think India will be a developer's nation in the sense that we have today a very large IT industry which understands the enterprises very well. We have seen how our IT industry basically solve global problems in the Y2K situation. This one is a much bigger opportunity in my opinion, where all the global enterprises would be looking up to industry partners who can come into the enterprise, understand the enterprise, look at the potential applications of AI-based solutions, and have that trust which basically is needed for every enterprise, and create those solutions. And that's where our IT industry stands very strong.
Well, you believe the Indian IT industry stands very strongly, so let's get the picture from the Indian IT services sector itself. Your ambition, Kriti, is of making TCS the largest AI tech services provider in the world.
Absolutely.
And in that context, I want to address the issue that was raised by the minister. Many believe that this is going to be a crisis for India's IT services sector, but the minister says it's going to be an opportunity. We've seen what has happened through the month of February. It's been a pretty brutal correction that we've seen from a market point of view. But do you believe that this is an opportunity for Indian IT to capitalize on and not so much of a risk as it is being made out to be?
Absolutely, Shireen. Like, I agree with the minister. We believe sometimes the bigger the disruption, the bigger the opportunity for us. And so there is some amount of fear-mongering, some amount of lack of understanding. But if you unpeel what happens, there are three broad layers in which AI is impacting the IT industry. One is what we traditionally do. The second is what industries or enterprises have to do to enable themselves to leverage, adopt AI or accelerate their AI adoption. Third is what they can do more with AI. If you look at all these three, the first one, what we traditionally do, there is some productivity being brought in. Like it can vary from 20%, 30%. But even there, if you talk to the CIOs, they would tell you that this productivity, they are not going to reduce the headcount. Most of the CIOs would say there is so much of backlog they have not handled or catered so far. They would probably try to use the buffer available to cater to the backlog. So even in what we traditionally do, we don't expect a reduction in demand. Then for the enterprises to use AI, they have to get the data estate right, they have to reduce the tech modernization, they have to get the workflows right. There is so much of work to be done. And the third area is that they have to get the models right. Somebody has to build their models, train the models, orchestrate the model, build the agents. And the fourth is the most important. With all that, what new they are going to do. For instance, some of our clients, we are doing a drug discovery using AI, or claims process automation using AI, or ADAS development. There's so much happening, and there's no need to panic. You have to think, sit back, relax, and think properly. There's so much of more work to be done. Every time there's a disruption, the work expands. And the good companies will participate, take a forward-leaning approach, invest in that, and they should be able to increase the pie.
Well, there is no need to panic. That's the word in from K. Krithivasan of TCS. But I also want to talk about what we are seeing Indian IT services companies like yours do. Forge new partnerships. You've just announced a partnership 24 hours ago with AMD to bring the Helios rack to India. And I want to understand from you the rationale for that. And is this going to now mean a pivot for TCS from software also to infrastructure? You've also got the TPG data center.
Yeah, so it's again based on a larger scheme. We believe that you will be able to participate more in the AI ecosystem if you operate across multiple layers. Like Minister eloquently put together, you were there in Davos, the 4 layers, right? The more layers you participate, the more revenue, more value you can add to your customers. So we are looking at participating right from the infrastructure layer. There's the infrastructure layer, there's a model layer, there's the application layer, then there's the intelligence layer. We want to increase our participation in each one of those layers. That's why you see we participating with TPG, then signing up with AMD. We also signed up with some of the design companies. So that's the overall plan.
And in this pivot to infrastructure, how do you see this changing the complexion of TCS going forward?
Definitely it's a pivotal moment for us also. Not only we are investing in infrastructure, we are also getting more acquisitive because this is the area where we have to acquire capability and competency at speed and scale. So we are looking to be more acquisitive as well. So this is fundamentally going to change in a way, how we approach infrastructure, how we are looking at capex and.
So more acquisitions likely.
Absolutely.
That is certainly the call. Mr. Vaishnav, I want to also address the issue of sovereignty, and I think that is being linked very closely to what many countries are doing, including India. We, of course, have our frontier model being launched with the support of the government. Sarvam is on course with that. But as you see more and more of this becoming critical to a country's security, to a country's economic security as well, what do you believe the way forward will be? What will our national priorities be?
Sovereignty has multiple dimensions. One of the dimensions is models. Another one is having the infra within the country. And third is having the legal framework. On the legal framework, we have a very balanced legal framework as a part of the Digital Personal Data Protection Act. And on the infra, which has to be in India so that we cannot be switched off. So that is right now building up very rapidly as part of our common compute, which is one of the major initiatives under the AI mission. We already have 38,000 GPUs. Another 20,000 GPUs is going to be added in the coming 6 months, and that will substantially increase over the coming months. So that's the second part. And of course, the models have come out very well on so many parameters. They are better than the frontier models coming from big labs, whether they are from whichever geography those labs come from, those models come from. Our sovereign bouquet of models has really turned out to be very good.
Well, sir, speaking of use cases now, and I think that's where the question is, that all of this technology is great, but what are we actually going to use it for? Specifically from a government standpoint, from a citizen's perspective, what can we see? When we talk about UPI, we've seen the benefits accrue to citizens. When we talk about AI, what do you see as being the next wave forward from a citizen's perspective?
So as part of the AI mission, we are creating practically a UPI kind of structure for AI, UPI of AI. And what we are doing there is we are creating a platform or an orchestration layer where multiple models can provide the framework out of which new solutions can be created. Just like the UPI platform provided the opportunity to startups to create the solutions. Similar structure we are creating. Multiple models can be used for creating solutions. We see huge potential in healthcare. In healthcare, we have seen how the Western world basically has very high cost healthcare models. Some countries have even more than 10% of the GDP going into healthcare. Can we create a quality healthcare which is affordable? So that's the objective with which we have approach this topic, and lots of innovative solutions are coming up. Many of them have been displayed in the exhibition here. Then education is another very big focus. Can we have personalized education tools, in a sense AI tutors, specifically for a particular student's needs? That is another thing. Agriculture is a big area in which AI will make very big difference. MSMEs is going to be a big focus. As part of the AI mission, in the next version of it, we will be launching solutions which can then be adopted free of cost by a large number of MSMEs and other citizens, all citizens, which can be then used to improve their lives.
Kriti, speaking of the AI movement, so to speak, one of the critical aspects is going to be the data center build out, and TCS is playing a role there with TPG. Give us a status check on where things currently stand, as well as the road ahead on being able to achieve the kind of targets that you've set out.
Absolutely. See, we have been in advanced conversation with multiple hyperscalers, and we, of course, made the AMD announcement, and we have made discussion with few other AI native companies. You would get to hear them as and when the final agreements are signed. But I can tell you that it's actually moving much faster than what we anticipated.
Much faster than what you anticipated?
Absolutely.
How soon before we hear the next set of announcements from you?
Wait for some time, you'll hear.
Okay, we shall wait. But let's talk about the addressable market, because if you believe that this is an opportunity that companies like yours will leverage on, what are we talking about the addressable market for Indian IT services companies like yours?
See, just the infrastructure, Minister just now mentioned. See, we believe like what we have the committed capacity is just about 5 gigawatts. But India can by 2030 will need a capacity of at least 10 gigawatts based on what today's projection. But also considering the fact India's power is cheaper, about 30%, we believe India can become a very important location for global training of models, not just necessarily the inferencing. So the demand will be very high. And the interesting thing is like AI data center, we believe each gigawatt of AI data center can bring up to almost 40 billion of investment. Okay. The trick is in how much you indigenize this investment, like how much you import, how much you progressively indigenize. The opportunity is huge.
Well, you know, that's an important aspect that Kriti's mentioned there, sir. And I know that the government is focusing on this. We just saw the budget announce that very significant tax holiday to draw in investments into this space. But the indigenization aspect, you know, what can we now expect on the back of what Semicon is doing, coupled with the measures that the AI mission is taking forward?
Already we have interest from various companies. I cannot take the names. They have requested not to take the names at this point of time. They will be making the announcements where many of these companies now want to set up AI server manufacturing facilities in India. So that is one very clear outcome of this budget's announcement of incentives. Second, a large number of world's data will basically come to India to be processed here, and using that data providing the solutions. So that is another very major outcome that we are expecting from this budget announcement. On the indigenization, of course, the semiconductor mission is progressing very well, and we should be seeing one of the plants going into commercial production in the coming weeks itself, which will be basically serving the AI data centers on the memory side. On the logic side, a lot of work is happening. Of course, there are some innovative startups who are looking at providing a solution which can be a game changer in the coming months and years. But still, it's a bit away. But I think that's a very, very encouraging step.
Well, sir, let me ask you, you know, the headlines are screaming that code is being generated by AI, that we're likely to see a white-collar catastrophe and so on and so forth. Industries are going to be disrupted, jobs are going to be disrupted. As a policymaker, how concerned are you about this? And how do you believe we are prepared for this kind of a future, you know, whether we actually see a complete erosion of jobs or we see a replacement of jobs is the question. But as a policymaker today, what concerns you and how do you believe India needs to respond?
Every major technological transition requires very synchronized and very harmonious response from the industry, academia and government. And Kriti and other industry leaders, they are working on a framework by which the existing workforce can be reskilled and upskilled, and we can create a new pipeline of talent, new pipeline of AI-trained students who can then take the opportunity which is coming up in front of us. So from our perspective, it's very important that we take the right steps in skilling the, getting the right skills, getting the right upskills, and both METI and the industry and the academia, we are all, three of us, we are working in very focused way, and of course along with the Ministry of Education, to make sure that we get the right skills and we get the right framework for upskilling and reskilling our workforce.
You know, the decoupling of headcount and revenue growth has been underway for a while now, and it is only likely to accelerate in an AI-led future. How do you address this challenge, and do you believe that we are going to see an even more significant decoupling going forward?
See, it's not a challenge. Like, it's the way the industry is moving towards, and we have to adapt. And as I said, we are taking all the steps. Like, if you have to look at what is the outcome the customer is looking for, as you pivot to the outcome and you price your product to the outcome, there would be a decoupling. But as I said, we believe the pie will increase. Okay, there will be much more work to be done. And I just want to add to what the minister just now said, like because pie will increase, we believe that more and more people have to be trained in using AI. Yesterday, we conducted a hackathon with the Honorable Minister, and we had 1,500 students who have not done any coding in their life, who have not done any technical background. They came, sat for 1.5 hours. They developed 1,500 apps yesterday in a matter of 2 hours. And we believe this is going to increase. More and more apps will be created, but more need will be generated. It's the increase of overall pie for everybody.
And
Okay, an interesting chat coming in there from the AI India Impact Summit, which is taking place in New Delhi. Words coming in from TCS as well as Ashwini Vaishnav. But on that note, we're going to take a very short break. We'll come back with more on the news and updates, stock-specific action on the other side.
Fly Emirates, fly better.
Welcome back to Halftime Report on CNBC TV 18. Nifty as of now 25,720 levels. Not much of a move that is coming in there for the Nifty as of now. But moving on to what's happening in the world of commodities. We have BHP, the biggest copper producer and mining company, says that they are planning a 3-stage $18 billion investment and that the company expects 5% growth driven by 4 global mega projects. My colleague Manisha Gupta caught up with Ragnar, Chief Commercial Officer of the company, and began by asking about the company's outlook. Listen in.
If you look at our copper growth over the last 3 years, you've seen a 30% uplift in copper production through organic options in terms of more productivity at our sites. Obviously, the acquisition of Oz Minerals over the last few years, which has timed very nicely with a rise in copper price to high $5, low $6 a pound prices. Now, moving forward for ourselves, we have such an exciting portfolio. 4 mega projects established globally. One in Argentina that we've announced a lot of details today on Vicuña, with the potential to grow to 800 million tons a year over the next decade. Escondida, major growth plans in place in Chile, options in South Australia, and also options in America. What that means is potentially a 5% CAGR for the next decade in our copper business, which, given the supply-demand fundamentals for copper, and particularly given that demand seems to be ubiquitous in terms of mega trends around urbanization, trends around decarbonization, trends around technology, this is an excellent commodity and well placement for ourselves.
Rag, when you talk about Argentina, it's not just about copper. We're looking at gold and silver mining projects there as well. What is the multi-year investment number that you're looking at in Argentina, and what really are the plans in that country?
What we've announced today basically is a 3-stage investment, with the first stage actually being about $7 billion. That would contribute to us producing just over 300,000 tons of copper from a deposit called Jose Maria. Stages 2 and 3 would cost an additional $11 billion, taking it to $18 billion all up, with the potential to take that deposit to over 800,000 tons of copper a year, and sizable copper, gold, and silver contributions coming from that as well.
Rag, just coming back to copper yet again, and we've seen record high numbers onto that one on COMEX in Shanghai, in the Indian markets, and LME as well in this year for the month of January. How are you looking at copper prices going from here? What are the demand estimates that you're putting? A lot of this seems to be AI driven. What's your sense?
I think that demand for copper is a thematic that is ubiquitous across just about every growth trend. So whether it's urbanization, which we continue to see across the globe, whether it's electrification for decarbonization, we're seeing incredible demand levers in that area. And you're right, we see AI and data centers starting to contribute to more demand for copper as well. What that means is we believe that copper demand will continue to grow somewhere between 2 and 3% for the foreseeable future, against a world market where supply is looking a lot more difficult to find. It doesn't matter what jurisdiction you're in, it is difficult to actually bring on these copper mines, whether it's through access, permitting, or actually discovering the deposits. And so for BHP, why this is such a differentiator is we have 40 billion tons of copper ore, greater than 0.5% copper, the largest global endowment of copper. For us to bring on those options in organic methods over the next decade or so sets us up very, very well to meet that demand need.
Rag, what would you say is the BHP's copper production forecast from here on for this year, for the next foreseeable future, that is?
So over 2 million tons a year this year, and basically, as I mentioned, about a 5% continuous annual growth rate beyond that, out till 2035.
How are you also looking at iron ore? I mean, while copper prices have done very, very well and the markets are looking at a strong potential growth in sense of demand, as you mentioned as well, iron ore has been a bit of a spoiler, would you say? Not too much of a movement there. And suddenly, previously we've seen very strong higher prices and volatility. Would you say the last 12 months didn't really do a lot in sense of performance?
I think that's a bit harsh. If I take a look at iron ore prices, $100 a ton is actually a relatively healthy market, and actually higher than what we saw going back 12 months ago for the same half period. Now, what I believe is going to transpire over the future is we continue to see China producing at about 1 billion tons of steel production a year. We also see India growing. So India is such an exciting jurisdiction in terms of steel production, producing just over 160 million tons last year, potentially growing to 500 million tons by 2050. That's against basically supply where, yes, we are seeing additional supply starting to enter into the market. But as I've mentioned in the past, the reality is this: as new supply comes in, we expect depletion will address some of that new supply coming in, one. And then secondly, we expect high-cost producers to actually come out of the market as well. Now, for BHP particularly, we are the world's lowest cost iron ore producer, with our C1 cost sitting just under $18 a ton. And what that means is that we, in a market even with $100 a ton revenue source, we are just making a significant margin above our next nearest competitor. In point of fact, the differential between ourselves and our next nearest competitor is about $10 a ton in terms of free cash flow.
You want to talk business? Meet me in the Onboard Lounge.
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Well, just pull up the Nifty PSU Bank Index because that seems to be the one which is really outperforming at this point in time. If you look at it, it's up around 1.3% currently for the Nifty PSU Bank Index. And a lot of the stocks are doing well within that entire space. So if you just look at a couple of the Nifty stocks in terms of the banks, we have, SBI, which is managing to hold up with a gain of around 0.5%. If we extend it to the private banks, that too is doing well. So Axis is up around 1%. But there's a clear divergence or outperformance which is coming in for the Nifty PSU Bank Index as compared to the Nifty Bank at this point. But on that note, we need to wrap up and business lunch on the other side. Stay tuned.
Range trading in the US and uncertainties over the impact of AI keep stocks in check. Metals and PSU banks eke out gains while IT and realty drag. Dr. Reddy's MD GV Prasad tells CNBC TV 18 most regulatory issues for its weight loss drug in Canada are resolved and the launch is likely in May. He adds that consumer healthcare is an area of focus for acquisitions. Mid-caps outperform with select stocks seeing sharp moves. E2E Networks jumps after Nvidia announces a tie for AI factories, while Orubindo Pharma slides on serious UFDA observations after inspecting one of its units. IT staffing firms TeamD's and Quest Corp say entry-level hiring has shrunk, but hiring spends remain robust as firms are willing to pay top dollar for experienced AI, ML and cybersecurity professionals. They add that reskilling is the only way to bridge the big demand-supply gap in new technologies. Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra, and at this point in time, markets are absolutely flat when it comes to the benchmarks. Mid-caps have picked up, though. It is outperforming the benchmark with a gain of around 0.2%. We are seeing that recovery come by on the back of Bank Nifty moves, and that index is up around 0.3%. Metals continue to shine in trade today as well. So Tata Steel, that's your top Nifty gainer today, followed by HDFC Life, which has also picked up some pace. ITC is the other one on the back of some price hikes. We have Axis Bank, which is doing very well. Tata Consumer is the other stock which is doing well. However, we do have oil producers like ONGC, which are lower in trade. We also have Eternal, which is seeing some cuts, 2.5% gone there, and IT continues to be on our radar because Tech Mahindra, Wipro, Infosys, HCLTech, some of them are the top losers in trade today. In fact, talking about IT, it has to be all about the AI Impact Summit. It is day 3 of that summit in New Delhi. Let's go across to my colleague Rachna for a mood check at the venue. Rachna, tell us more.
Well, it is day 3 of the India AI Impact Summit here in New Delhi, and it is turning into a story a bit of both big breakthroughs and big reality checks. But at the center of the buzz here has been the idea of responsible AI. We saw India make a successful attempt at a Guinness Book World Record of having most number of pledges for the usage of responsible AI in the 24-hour period. We just saw the IT minister unveil that and felicitate. Apart from that, speaking of the big reality checks, we saw what happened to the Galgotias University when they tried passing on a Chinese robot as their own innovation. The booth has now, they've been asked to vacate the booth from here, from the summit, and additionally the expo has been extended by one more day. So we're right now at a perfect 50% mark of what is now a 6-day event for the expo. Originally it was supposed to be till the 20th, but now the expo has been extended by one more day, that is till 21st, and that's because there will be some commitments here at the 19th, because of which expo will be shut. But coming back to the big headlines that we're picking up from the summit, the first and the foremost is Nvidia. Nvidia has doubled down on its India commitment. It has now announced partnerships with Yotta, L&T and E2E Networks to expand sovereign compute capacity. Apart from that, they're also partnering with venture capital funds because Nvidia now believes that VC funds trying to tap into startups who are excelling at AI will be the way forward when it comes to taking India's AI story to another level. So they've partnered with Peak 15, Elevation, Accel India and many more. But with 2 more days to go with the summit at the Bharat Mandapam and 3 more days for the expo, now all eyes are on what further policy signals and big ticket collaborations we're seeing. We already saw multiple partnerships roll out here, but it is still a long way to go and many more things to pick up from here.
Okay, interesting updates there. Thank you so much, Rachna, for joining in. So extended by a day. That's the update coming in from the AI Summit. We also spoke to IT Minister Ashwini Vaishnav and TCS MD and CEO K. Krithivasan on the potential and likely impact of AI on the industry. Listen to what they had to say.
Over the coming 2 years, we can expect about $200 billion investment in the AI infra layer. And simultaneously, we can expect more than $17 billion in VC funding for the startups and deep tech, especially deep tech startups, in solutions, in applications, in the way AI would be used.
There's so much happening and there's no need to panic. You have to think, sit back, relax, and think properly. There's so much of more work to be done. Every time there's a disruption, the work expands. And the good companies will participate, take a forward-leaning approach, invest in that, and they should be able to increase the pie. It's again based on a larger scheme. We believe that you will be able to participate more in the AI ecosystem if you operate across multiple layers. We are looking at participating right from the infrastructure layer. There's an infrastructure layer, there's a model layer, there's an application layer, then there's the intelligence layer. We want to increase our participation in each one of those layers. That's why you see we participating with TPG, then signing up with AMD. We also signed up with some of the design companies. So that's the overall plan.
Okay, well, AI disruption has been the buzzword over the past few weeks, with Indian IT stocks taking a hit over growth concerns. Companies have also announced a host of tie-ups to develop the AI opportunity. But how much does AI contribute to the Indian IT sector right now, and why are brokerages still bullish on the sector? Reema has all the details.
Thank you very much for that. Indeed, generative AI, advanced AI may be the buzzword right now, but the actual revenue contribution from these technologies is still in very early stages. Now, yesterday, Infosys at the AI Investor Day said the generative AI contribution stands at 5.5% for the company, which is pretty much in line with TCS at 6% and HCLTech at nearly 4%. But remember, the definition of AI revenue may vary across companies, which makes direct comparisons tricky. But the question is, how will you read this number, AI contribution at 5%? Would you be disappointed because AI has been around for some time, but still the revenue contribution is 5%? Or will you look at it as a half glass full and say, well, it's only 5%, which means look at the significant headroom for expansion from here on. Now, brokerages is still bullish on Infosys. In fact, overnight, a lot of calls came through. We analyzed them. There are 52 analysts, out of which 38 have a bullish call, 12 of them hold, and 2 of them have a sell call. Global brokerages like JP Morgan, Jefferies, UBS, HSBC, CLSA have all reiterated their positive call. For JP Morgan, the target price stands at 2,050. For CLSA, it's 1,779. And the bullish stance by these brokerages rests on 5 key drivers. 1, the AI-first services opportunities. That is expected to expand sharply. Yesterday, Infosys said it's a $300 to $400 billion opportunity by 2030. Secondly, data modernization is emerging as a key growth driver. Enterprises need partners like Infosys and others to clean, organize, and modernize their legacy data before you can actually deploy AI at scale. Third, even Infosys' collaboration with Anthropic, the strategic partnership, does show that the company is taking steps to remain relevant in the AI ecosystem. Fourth, just talking about the near term, here and now, FY27 macros are looking better, which means FY27 in all likelihood is going to be better than FY26 for all the IT companies. And finally, fifth one, the valuation comfort. For Infosys in particular, it's trading at 18-19 times forward multiple, which is cheaper than the long-term average multiple of about 20 times. So the message from the brokerages is clear. They're bullish, but it is disconnected with what's happening in the market. The Nifty IT index continues to see pain. It's down 15% in the month of February alone. And it's now very close to its 52-week low, less than 5% away. And this is not a domestic story. If you look at the global ETF for software, that is down 22% on a year-to-date basis. But that's about the numbers and the markets. The other worrying thing is on jobs. Now, yesterday, Nandan Nilekani said that on account of AI, 92 million jobs will be lost, but 170 million jobs will be created. But if I just look at the Indian IT companies, in the first 9 months, more jobs have been lost than created. The headcount for the top 4 IT companies is down by 700 plus in the first 9 months. It's on account of TCS and the restructuring that they did. But the question for the economy remains that if on account of AI, we do see a decoupling of revenue and jobs, then what happens to job creation? Back to you.
Okay, all right. Thank you so much for joining us with all those details, Reema. Earlier today, we spoke to market experts Sunil Kaul of Goldman Sachs and Kenneth Andrade of Old Bridge Asset Management to understand their views on the IT sector. Listen into what they had to say.
If you look at what has happened in the market in the last few weeks, I think there has been a relentless selling and indiscriminate selling of the software companies because global investors are basically questioning the terminal value of these companies. And as we know, software adoption at the enterprise level is pretty complex, right? There are winners and losers and different cohorts, and somebody has to provide the cleaner data sets for these AI models to work. Somebody has to drive the enterprise adoption. In the US market, the real issue is not just the terminal value, but the margins for these companies are also at record highs. And so in the next few quarters, until we figure out who is kind of winning, how the business modes are, what the pricing power for these different sectors are, probably there are still going to be uncertainties around this. And so we are not advising clients to buy into the global software companies yet.
This is not status quo. This technology change or this automation is not status quo for a lot of businesses. And I think that's what the markets actually are reacting to. So from a standpoint of just IT services, I mean, it's not very clear how companies will adapt and how fast they will be able to adapt, but there will be a lot of uncertainty on how these businesses will meet any kind of growth trajectory, at least in the near term. One thing I must say is completely in favor for these companies is that historically they are quite comfortable in terms of where their valuations are. I mean, extremely comfortable in terms of where their valuations are. But with all the uncertainty around, I'm not too sure that will be the best part of the marketplace to be in.
All right, that's some expert opinion coming in on IT space. Take a short break then. More news and updates on the other side.
Fly Emirates, fly better.
Welcome back. Let's go across to the latest update on Iran-US nuclear talks. The second round of talks between Iran and the United States concluded in Geneva. The negotiations held at Oman's embassy in the Swiss city were mediated by Omani foreign minister, who said that the talks ended with good progress towards identifying common goals and relevant technical issues. He added that much work is yet to be done and the parties left with clear next steps before the next meeting. US Vice President J.D. Vance also commented on the talks, saying that in some ways the United States diplomatic talks with Iran went well as both parties agreed to meet afterwards. Listen in.
I think the president has a lot of options. We do have a very powerful military. The president's shown a willingness to use it. He also has a remarkable diplomatic team. He's shown a willingness to use that too. And so what the president has been very clear with the Iranians, and actually I just talked to Steve Witkoff and Jared Kushner this morning about some of their negotiations, is the United States has certain red lines. Our primary interest here is we don't want Iran to get a nuclear weapon. We don't want nuclear proliferation.
Okay, with that, we'll slip into a break. But before we do that, here's a quick sneak peek into the stocks that we will address on Your Stocks today. Do not forget to catch fundamental and technical experts give their views on these stocks at 2 p.m. today, only on CNBC TV 18. Welcome back. You're still tuned into Business Lunch. India is set to sign an MOU with the United Nations World Food Programme on Wednesday to supply 1 lakh tons of rice for humanitarian operations. Earlier, UN's resident coordinator in India, Stephen Prisner, told CNBC TV18 that the United Nations looks at India as a strong partner with over 20 events scheduled in the next few days. Listen into what he had to say.
India can lead the South, but also the world, in terms of actual solutions that can make impact for people's lives. We are already having a very, very large collaboration in issues such as environmental protection, climate change, disaster risk reduction, nutrition and food security, in economic development, social protection, in health, in decent work. So we have a very robust memorandum, a very robust framework document together with the government of India.
In fact, we also spoke to the Food Secretary on India's sugar production metrics. Listen in.
Sugar, we were expecting actually 343 lakh tons of sugar production this year, but the numbers are going down and we are now estimating about 330 lakh tons of production of sugar. But even that number is very, very comfortable because our consumption in the country is roughly about 285, 90 lakh tons of sugar. We still have surplus. We allowed about 20 lakh tons of sugar we were allowed for exports, but because of some issues with export parity, the exports have not happened to the extent that we thought. The brokens which are in the surplus now, which the entire operation generating, rather than now transporting them to my godowns, storing them over there for maybe a year or two, I'm able to dispose them quickly, and I'm tying up now with the Ministry of Petroleum and the oil marketing companies that this broken rice which we'll be generating can be used for the production of ethanol.
Okay, with that, let's move on. A minor controversy has broken out at the AI Summit. The government has asked Galgotia's university to vacate their pavilion after it was found that a robot they claimed was built at the university's Center of Excellence was actually a Chinese import from Unitary Robotics being sold under the name Geo2. The imported robot dog was being exhibited at the event by the institution as Orion. The faculty member who made the comments, however, maintains her statement was misinterpreted. Okay, all right. With that, we'll take a leave on this edition of Business Lunch. Mid-Cap Radar comes up next. Market recovers from morning lows with the mid-cap index up nearly 150 points, while banking stocks lead the charge to drive the benchmarks. Metals and PSU eke out gains, while IT and realty drag.
E2E Networks shares surge up to 15% in trade following NVIDIA's announcement to collaborate with E2E Networks to deliver advanced AI factories. This marks the stock's biggest single-day gain on record.
Shares of Dilip Buildcons back in early trade. Company emerges as lowest bidder for a 700 crore EPC project. Order book continues to swell, now at 30,000 crore mark.
Orubindo shares fall after CNBC TV18 accesses details from the Form 483 issued to the company's Unit 7. The regulator observes that there are microbiologist is responsible for sample collection, was found to have falsified sample collection data.
And Engineers India is in focus as the company is set to meet on February 26 to consider and approve a second interim dividend for FY26. Shares pair early gains to trade with marginal cuts. Good afternoon. Thank you for tuning in to Mid-Cap Radar. The markets absolutely flat on the Nifty, but it has recovered from lows of the day. The mid-caps, they are outperforming the benchmarks with gains of around 0.2%. It's the banking stocks which are pushing the Nifty higher. The IT pack, though, continues to languish.
Yes, in fact, let's concentrate on the entire IT space. Let's go across to the AI Impact Summit, where Amit Chadda, who's the MD and CEO of L&T Tech Services, is in chat with our colleague Shivani.
Have you seen which has actually revolutionized when it comes to originally seeing things and being present on the shop floors?
So one, it improves automation at all levels. Number two, it helps with scheduling. It helps with supply chain and raw materials. It helps with actually tracking goods within. See, when you look at a shop floor, these are huge plants. I mean, these are like, 500 meters by 200 meters, etc. So these large spaces have a lot of equipment, a lot of material. Tracking all that is huge. You can reduce wastage. You can improve profits. You can improve productivity. So we've been actually working with our clients globally in the US as well as Europe in implementing some of these solutions for them. We've been able to bring productivity improvements as well as help them deliver stuff on time for their customers.
Okay, you spoke about how productivity has gone to nearly 82% and you expect it to go up to 86%. Are there any verifiable metrics that you have seen which have led to this?
Yes, so if you look at, so the metrics we track is utilization in the IT engineering industry. And all of us almost every quarter report that. So that's the metrics to look at. Second, is a company growing without adding headcount? And if they are growing without adding headcount, that is the productivity coming into play as you look forward. So that's broadly how you look at it.
Okay. Speaking about LTTS and AI, what are the kind of, big goals that you have and you think that AI will help you, achieve them in probably this quarter or this next year?
Okay, so number one, we've already filed 250 patents in AI. I would like us to get to about 500 patents in the next 12 to 18 months if we can. Okay. Second, the company is pivoting on AI and growth. As you look forward, you can expect the company to deliver double-digit growth as we move forward, leveraging AI and the entire portfolio solutions that we've got.
But what is the size of the opportunity that you're seeing specifically in the Indian market?
So if I look at the entire AI stack, it's about $1 trillion stack. And in that $1 trillion, custom applications and services together is about 30%. That is what companies like us can look at to be able to try and work towards.
Okay, my last question to you before I let you go, Amit, is, we are seeing a lot of headwinds as well, but there are a lot of pros also for the Indian IT. What is the outlook? Where do you see the sector going this year?
So I'm very positive and bullish about India Inc. I was actually at the Senate about 2 weeks ago speaking to people in the Congress as part of the NASSCOM CEO co-chair forum. And what I can tell you is that people are very positive about India. India is seen as a scale partner for AI and technology for the world by our customers in the US and Europe. And I believe that this is our opportunity to rise and shine. We are at an inflection point like we were in Y2K. If I remind your viewers, in Y2K, people said once Y2K is done, IT industry will be over.
Okay, all right. That is some interesting commentary coming in from the AI Summit. It's a good time to get Ajit Mishra from Religare Broking for a technical check on the markets. Ajit, good afternoon. Thank you so much for joining in. What do you make of the market moves? You've seen a recovery from the lows, and if you can quickly tell us technical picks as well.
Yeah, good afternoon, Sunil. So yes, we are seeing that market is trying to rebound, but it's largely the heavy lifting is done by banking, which is continuously maintaining its positive tone when we are inching towards the record high with every passing day. At the same time, stability in the other sectors on rotational buying is also helping the market. But for any decisive trend, we need a decisive close about 25,800 marks. Then probably 26,000, 26,200 is something that the market is going to attempt. So as of now, consolidation tone is more likely with the positive bias as long as banking continues to perform. So here on the recommendation side, also the first recommendation from the private banking space, Axis Bank. So after this recent surge, we've seen a marginal consolidation around the record highs, and the stock is set for the next leg of the up move. 1450 is what we are eyeing as the immediate target. So with stop at 1330, one can go long in Axis Bank. Another stock from the metal basket wherein we are seeing continuous strength. The stock is trading at a record high, General Steel. So after this recent pause, post the consolidation range breakout and a marginal breather around the record highs, we are again seeing the stock setting for the next leg of the up move. 1275 is what we are eyeing in this up move with 1200 as a stop loss.
Okay, all right. Any specific stocks or any specific stocks within, say, the banking space or the IT space that you want to highlight?
So like Axis definitely is among the top name. PSU banks, they are doing well. So Indian Bank, wherein we can see that, this momentum continuing. At the same time, IT, I feel that still there could be possible consolidation or maybe further downticks in days to come, considering the kind of move that we are experiencing today. So for a time being now, if the view is short term, one should refrain from any aggressive bets on the IT bank.
All right, Ajit, thank you so much for joining in today. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Well, it might just be a very quiet market in terms of the frontline indices, but if you dig deep and you don't have to look too far, there are stocks such as NetWeb as well as E2E networks, which are really dominating in terms of sentiment and news today. So NetWeb is up around 10% odd. They've announced to the exchanges that they will be launching that Tyrone Camerero Spark, which is basically the world's smallest AI supercomputer powered by NVIDIA. And we do have E2E networks, which is also higher today. That stock is off the day's high, but nonetheless, it's up around 17% odd at this point in time. After the tech giant NVIDIA, in fact, announced it's collaborating with next generation cloud providers, including E2E. So as you can see, that stock is up around 17 odd% at this point in time. Both these stocks have been multi-baggers, gaining around 40% and, as you can see, 58% respectively on a 6-month basis. But that's what's taking place with both of these counters. But let's in fact move over and talk about the CDMO space. I had the opportunity to speak with the management of Laurus Labs and Sai Life Sciences from the sidelines of the BioAsia Summit in Hyderabad on what they make of the recent weakness that we've seen in the CDMO space. Remember, a lot of these companies have corrected anywhere between 40 to 70% just in the from their 52-week highs. So listen in to that conversation.
CDMO business, there will be established revenue from commercial molecules, a lot of clinical phase molecules. So the revenue coming from clinical phase molecules are very cyclical. So very difficult to quantify quarter on quarter. Even for commercial molecules, you have to see yearly numbers for CDMO companies, not quarterly numbers. Specifically, some companies are doing well, some companies are not so. It is company specific. I don't think you can attach that sentiment to the entire industry.
But there are, while you say that, CDMOs are showing lumpy quarterly numbers, there are companies which have completely cut guidance for FY26 and they're expecting FY27 to be better. So it's not maybe quarterly in terms of the lumpiness that you're seeing. Is it a growth issue for this guidance cut to come through for a couple of these companies?
It all depends on the offtake of the molecules, vendor diversification. If one vendor is enjoying majority market share and then a sponsor is trying to add another vendor. So it all depends on the de-risking from the partners, I would say.
Is it an inventory destocking issue? Because a lot of companies say that, this quarter or this year has been impacted by inventory destocking. Is that the case?
See, it is unfair for me to comment on the company specific because they know better. So I don't want to guess for that question. Yeah.
But as a trend in terms of the industry, what are you seeing?
Every company goes through inventory destocking. Depending on how much innovator will buy for launch, what market share he is getting, how much he is able to push into the market. So people go through that cycle. But I don't want to comment company specific on that.
Okay. From an industry perspective, Mr. Krishna, what are you seeing? Is this inventory destocking phase playing out for a couple of CDMOs?
So I think, people are losing the bigger picture because inventory stocking is a short-term story. I think the fundamental reality is that India is sitting in a situation where people are going from being tactical supplier to strategic suppliers, right? When you're a tactical supplier, you might have 1 or 2 molecules which have a disproportional impact. But once you become a strategic supplier, you have a much broader base. And when you have a broader base, destocking is part of the game. Commercial volumes may go up, may go down. Your development molecules may go up and down. The whole idea is to build enough breadth and build enough strategic relationships that you don't have these huge swings. You will have quarter-to-quarter swings. That's just the reality of the business. Molecules fail, things fail, but I think companies only over time can build that diversity in their pipeline, both commercial and development, that at least the swings are not going to be pronounced on. I would say it's more a product concentration issue as opposed to destocking. Destocking is only it's a nature of the business. You need a big enough portfolio to kind of adjust for it.
What I'm trying to get at is that are the long-term drivers in place for the CDMO companies and for Indian CDMOs as compared to what we're seeing globally?
Okay, the long-term drivers are better than ever, but I think the reality is the expectations are higher than ever. So I think what people are forgetting is that people are judging companies from the past from being tactical suppliers to become a strategy provider. Tactical suppliers can get one-offs, successful high-margin products, but strategic suppliers have to do a much broader range of technologies, broader range of capacities. So that actually we're in an investment cycle, and people think we're in the reaping cycle. So you have to be very careful what we wish for. I think we're the early phase of a multi-year growth cycle, but that's going to be playing out in the next 5-10 years. I don't think you can judge 1-2 years. We're just a little bit hyper because we've seen the, what do you call, biosecure XYZ. Yes. But this is a 5-10 year cycle, and I think everything is intact in terms of that cycle.
So the Biosecure Act, it doesn't name companies in specific. So is it a diluted version as compared to what was expected? And do you think that's going to play out?
So the Biosecure Act itself is irrelevant anymore. I think now is global diversification is relevant. Geopolitics is relevant. China as a competitor is relevant. So I think Biosecure Act was probably a noise factor, but now it's almost like by default, people have to have geographic diversity. I think people have moved beyond that. China is a competitor, and you cannot have 80% of your supply chain in China, which is a competitor.
Correct.
So I think the diversification is here to stay. So I think the Biosecure Act is immaterial at this point, in my opinion.
Okay, so these RFPs, which a lot of the CDMOs have spoken about, that you've seen a large amount of RFPs come through, is that now converting into tangible business and P&L?
Let me just, RFPs are being overplayed. I think people who really are building strategic partnership don't deal with RFPs.
Okay.
They deal with relationships, and they're dealing with one step at a time. I know companies have come and said, love to give market guidance for RFPs. A lot of people give RFPs for no reason whatsoever. It's really about the relationship you have with the customer. If you have a relationship with the customer, you get an RFP that's a serious RFP. If you don't have a relationship with the customer RFP, that's just a testing of the waters. So I think the market has to start moving away from the RFP numbers. I think you really have to look at the strategic pipeline you're building, customer base you're building. I think, unfortunately, we got in this whole equation of trying to measure predictive metrics, which are not really predictive. And it's unfortunately we're guiding the market in the wrong direction as well. And I think the only way we can get the market is, like I can say Dr. Chava has done, we have done. We put a lot of time in the trenches. We didn't come here like overnight. We've been questioned multiple times, why the hell are you doing what you're doing? But that's what it's going to take. This is a long-term journey. This is not like overnight win. Just because I'm in India, I'm not going to get RFPs which are going to convert overnight. It's a 10-year, 15-year journey. I think that's what the market is missing at this point.
Okay, all right. Very, very interesting comments coming in and putting everything into perspective that maybe the Biosecure Act is not as relevant for CDMO companies, and geographic diversification is something that the companies will be working with. Companies such as Cohance as well as OneSource, in fact, have seen a little bit of traction on the upside. Cohance, for example, is up around 6% at this point in time. We'll take a short break. Lots more on the markets once we're back. Stay tuned.
Fly Emirates, fly better.
Welcome back. 25 points lower on the Nifty. We are below that 25,700 mark for now. Mid caps are outperforming, up 0.3%. A lot of action in the broader markets. Godfrey Phillips, for instance, is up 16% as we speak. We have transformers and rectifiers as well, up 10%. Cohance Life Sciences is up around 7%, and HEG also adding on to the gains that we've been seeing. So a good day for mid caps and small caps so far, but we'll keep tracking the market moves for you. For now, we'll take your leave on this edition of Mid Cap Radar. Your stocks when we return.
Hello and welcome to Your Stocks live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramnan and with me as always Vinny Motiwala. Good afternoon guys. Good afternoon Vinny. I mean, it's a day where the Nifty and Sensex are absolutely flat. The Nifty managing to hold on to that 25,700 mark. The mid caps and the Nifty Bank faring better than the benchmark indices, right? So the sectors that are doing well, we've got those PSU banks, we've got the metal pack, but IT is doing badly again.
IT is doing badly again, not as bad as we've seen in the past, but still 2% decline almost is not an exciting day. Top sectoral loser for the Nifty IT. But metals, they continue to shine. We have PSU banks, like Aru mentioned. Also, holding on to strong gains. FMCG continues to see a bit of an up move today as well. 5% of gain coming in from the FMCG pack. A lot of broader end of the market names. Godfrey Phillips, Transformers, Rectifiers, NetWeb Technologies. A lot of announcements are coming in from that AI summit. And all those stocks are buzzing in trade. So NetWeb Technology, they had some launch there. E2E Networks, NVIDIA was talking about the tie-ups with them as well. And L&T and Yota. So those are the reasons that we're seeing some of these names buzzing in trade as well. But good to watch out for all this in the trading session.
Absolutely. Lots of action. So we'll have to wait and see what else happens at this AI summit and other big announcements, right? But meanwhile, joining us today is Chandan Taparia, Head Derivatives and Technicals Wealth Management, Motilal Oswal Financial Services, and Lancelot Dacuna, the Chief Executive Officer of ValueX Wealth Connect, to answer all of your stock queries. So let's just get straight to it. Our first query comes in from Mohit. He's writing to us from Mumbai, and he holds 25 shares of Raymond Lifestyle at 1,278 rupees. He wants to know the long-term outlook on the stock. You know, he's currently making a loss. So, Lancelot, let me come to you first. What do you make of, the long-term prospects of this stock?
Raymond Lifestyle is basically the Raymond suiting business. It has strong brands like Park Avenue and almost 1,600 stores operating. But, considering that the current situation as far as the growth and profitability is concerned, there are a lot of new brands that are coming in terms of B2C. And Raymond's Lifestyle also has a B2B business, which actually got impacted mainly by the US trade deal. But maybe now they will get some relief. But if you look at the financials, it has been a difficult period for the company, and it's not likely to change in the near term, because there's a lot of domestic competition happening as well as global competition. And the stock is trading at about 60 times its earnings. So it looks difficult, from this perspective. Maybe if there's a correction in the stock, that would be a good time to enter the stock at that point.
Okay. So maybe then they can look to average also, right? Maybe
Yes.
when there's a correction. That's
Yes,
when
when
they can
there's a
look to
correction.
average and then continue to hold for the long term. Chandan, your view on Raymond Lifestyle, what should the viewer do? And if averaging is an option that you're suggesting, Chandan, at what levels and where to enter from?
Yeah, thanks for having me. Good afternoon. So the trend of the counter is negative. It has been making lower top, lower bottom on the monthly and the weekly scale. However, it has been consolidating from last couple of weeks, but major trend is negative. So my suggestion is try to exit on any bounce back move. Keep the technical levels in mind. As of now, I don't suggest, because trend is negative and it's very tough to catch the counter, which is continuously on the downside. So one can follow the key support near 895 and try to exit on bounce, and in that scenario it can bounce to 1020 to 1050 kind of levels.
Okay, better to exit the stock. Levels is mentioned by Chandan as well. It's a bit on a downward trend. It's a bit of a concern there. Near term, obviously, the challenges Lancelot mentioned as well. But let's move on then to the next query. Oswald Ashok is writing to us from New Delhi. He is holding 1,999 shares of Geo Financial Services. Average price is 332 rupees per share. Currently, the stock is at 263, so making a bit of a loss on here. Wants to know if he should hold the stock for a time period of 6 months, another 6 months. Lancelot, your view on the fundamentals for Geo Financials. 6 months is the time period they want to hold for. Does it merit holding, or maybe get out of the stock now?
So, Geo Financial is a stock that holds a lot of promise, because it's the holding company of the entire financial services gamut, of the Reliance Group. And they have very good tie-ups in different spaces. Like, for example, they have BlackRock as a tie-up with them for the mutual fund business. And they would be entering most of the spaces, in the digital mode, which means that the cost of operation is far less, and the cost of acquisition of customers is also far less, because they can use the telecom platform to be able to access customers there who would like to participate in the financial services business. But if you look at valuation, the stock is very high. Even at this level, it's trading at almost above 100 times earnings. And yes, over the long term, if you look at maybe 5 years, 10 years, yes, the company should grow. But in the near term, like in the next 2-3 years, it'll be very difficult to generate returns from an entry at this level because you may not be able to see the earnings sustain or justify the high valuations for long. So if there are some periods when the earnings do not grow or there's negative surprises, there could be a serious correction in the stock.
All right, the stock could see some serious correction, but Chandan, he's holding this at 332 rupees. Are there any key levels that he should watch out for? Should he hold it for another 6 months? What's your view?
Yeah, so the immediate trend is negative. In fact, in last 6 months, it has seen a corrective move from 340 to almost 240 kind of level. It took some support in this month at lower zone, witnessed some recovery of 3 to 4%. But the concern is the follow buying. And it has been holding below his key moving averages. But when he's ready to hold for slightly bigger time frame, then I think price can come. As of now, trend is negative, but we can hope for some bounce. In that scenario, it can go to 285 to 300 kind of levels.
All right, so the trend is negative. Let's move on to our next query then. Navendu Sharma is writing to us from Patna with an investment query. He asks if he can invest in MediAssist Healthcare at current levels. Lancelot, if you could tell us, what do you make of this stock? I mean, it's been on a downtrend in the last year, but right now they're at 417 rupees.
So, MediAssist basically is a third-party administrator for most of the insurance companies, and they assist the companies in terms of settlement of claims and managing expenses as far as the insurance, the medical insurance business is concerned. The stock actually trades at almost 50 times earnings at this point in time, even at this price. And if you look at the kind of growth that may be expected, we have seen the quarterly earnings dip a bit. And even going forward, because IRDA is trying to make medical insurance a little bit more easier for the customers, I think there would be pressures on margins going forward. While the overall revenues may grow, margins could be under pressures. Given the high valuation, one should probably wait for a longer period before one can look at entering the stock. Maybe a correction would give an opportunity to enter, but at this price, it's pretty expensive.
This price, it's pretty expensive to enter MediAssist. That's a view on the fundamentals. On the technicals, Chandan, MediAssist right now, does one start entering at these levels, maybe average later? What's your suggestion and what levels?
Yeah, so trend of the counter is negative, but on daily chart, it is bottoming out. The counter has turned from its 52 weeks or in fact a lifetime low near 385. So there is no doubt about the major trend that is negative, but short-term point of view, the counter is bottoming out. So I believe with the support of 395, this stock can head towards 445 to 455. So short-term recovery can be seen in the counter.
The short-term recovery can be seen in the counter, the levels you mentioned as well, so they can look at entering if that's the view over there. Let's move on then to the next query. We have Sriram, who's writing to us from Chennai. He's holding 50 shares of Oil India, and this is at an average price of 172 rupees per share. He wants to know the one-year view on the stock. 172 is what it at. He's holding it, so he's making a profit of 451 is the buy price, the current market price. So he's making a good profit on this one, Lancelot. What's the view now on Oil India from here on? Should he just book out his profits or better to hold on and he could make more profits going forward?
So I think if you look at the valuation of the company, Oil India is, is reasonably valued. It's trading at basically 12 times earnings. And Oil India is engaged in the business of exploration of oil, including, renewable energy sources, and has been oil and gas is going to be a major focus area as far as India is concerned. So you will see more business coming their way. So I think given at this price, since the valuations are relatively low, one should just stay invested and you would get reasonable returns even by way of dividends and payouts that would happen over time. So you should probably just stay invested.
All right, you're saying that he should stay invested. Chandan, what's your view? I mean, he is making a profit on this. Any key levels that he should watch out for over the next 1 year?
Yeah, so major trend of the counter is positive and it really rallied well in last 4 or 5 years from 2021 to 2024. But from last 2 years, it has been consolidating in a range. Just couple of months back or week back, it headed to 524, but now again corrected. So that attracts the risk reward ratio as well. and the client is holding the counter from long time, so I suggest to continue to do with the same. We are positive on the all India and all exploration companies, so with the support of 420, it can head towards 500 to 555, so one can stay with the position, or those who are looking to add more can look to buy the opportunity for 15 to 25% upside in next 3 to 6 months.
Okay. Keep an eye out on those levels over there for Oil India. But on that note, we're going to step into a very short break. We'll come back with more of your stock-related queries on the other side. Welcome back to your stocks on CNBC TV 18. Let's keep it going with those stock-related queries. The next one for today has come from Rajesh Thakkar, who's writing to us from Mumbai. He wants to know the short-term as well as long-term view on Suzlon. It's an investment query. Lancelot, what would you suggest? Suzlon Energy, is it a play that one should look at in terms on the renewable side as well? Okay. So as of now, before I come to you, Lancelot, we have some important update coming in from E2E Networks. They said not entered into any new negotiations or agreements with NVIDIA. Today announcement is about existing agreement company has with NVIDIA. So yes, that agreement was there with NVIDIA, but it is in terms of GPU announcements. NVIDIA spoke about L&T and E2E networks that, talking about Blackwell, which they're already building in terms of GPUs. So the important update is it's not a new agreement. It's a continued negotiation that is there. And L&T, do not forget, had acquired 21% stake in E2E networks as well. So that is the update coming in there. Clarification, it's not a new agreement. The agreement was already there. There's a newer announcement updates that is coming in there, not a new agreement. But okay, Lansart, your view on Suzlon Energy?
Yeah, so if you look at the wind energy business, it has been growing in the country because basically supported by the government's move to move more into renewable energy sources, given that we are facing climate change and global warming. So that has been a boost for Suzlon. But if you look at their returns and the earnings that they've been able to grow, it has been very, very slow growth. And probably one of the reasons is that because wind energy gets disbursed during a particular part of the day, and the operational issues in terms of generation and storage of are challenges which the company has to overcome. So given that it trades at almost 8 times price to book, its return ratios are a little expensive. I think it may be better to move away from the company and look at others in the power space, which are maybe in the distribution side or in the power generation side. Those could give you better returns at this current price.
All right, so move away from the stock is what you're saying. But Chandan, the stock has been falling 9% over the last 1 year. What's your view? Any levels that they can enter the stock, or you think you should stay away from it?
So it has been making lower top, lower bottom on monthly chart, corrected from 73 to now 45. The good part is this really started from 40, 42 rupees, and then it headed to 86 kind of level. So again, in terms of risk reward ratio, the counter has come to the key level. So I think let it correct by further 10-15%, and then with support of 41 can look for a swing towards 50, 52 kind of levels.
All right, so let's move on to the next query then. Rekha is writing to us from Riyadh. She holds 3,000 shares of Knowledge Realty Trust at 118 rupees. Her investment horizon is 2 to 3 years. She's currently making a profit, and she wants to know if she can add more shares at current levels. Lancelot, let me come to you. What's your view on the stock?
So, a real estate investment trust basically is a pass-through to the rentals and the real estate profit that is there. And if you look at the current price, compared to the book value, it's trading at almost 20% premium. So over a period of time, this premium will narrow down, and it's not really like an appreciation on the share per se, because it's basically taking the rentals and providing you with some fixed income. So it needs to be looked at more in line with a fixed income instrument. And if the yields that are being provided are 7%, will be similar as most other fixed income yields. Profitability can come only if you're buying it much below the book value. And since the book value is about 100 rupees and it's trading at 106, I think you are paying a premium. So you shouldn't add any more at this price. Maybe if the price corrects, then you can buy, but definitely not for appreciation, but more for a dividend kind of return.
Okay, let's move on to the next query. We have Mahi, who's writing to us from Jaipur. She's holding 500 shares of Aarti Industries, and price is 440 rupees per share. She wants to know if she should continue to hold or sell this one. So right now, it's not much higher than her buy price. Chandan, what should she be doing with this stock, Aarti Industries?
I think one can hold the position after the corrective move of last 3-4 years. Now it looks quite attractive in terms of risk reward ratio. It has bottomed out with support of 340, 345. In fact, just a couple of days back, it witnessed a major momentum post its earning, and I believe now the trend is positive with bullish price pattern that is similar to Poland flag on the daily chart. In fact, on the weekly scale as well, the counter is surpassing its falling supply trend line. So getting a sign of recovery in the counter with the support of 440, I believe it can head towards 500 on immediate point of view and 575 to 600 on positional point of view.
All right. So we've got a final query for today. Raj Doshi writes to us from Mumbai. He holds 500 shares of Hindustan Copper at 340 rupees. He's currently making a profit on the stock, and he wants to know the long-term view on the stock. So Lancelot, what's the fundamental view on the stock for the long term?
While business has been growing in this stock, and you've seen both revenues and profits grow, mainly driven by the price increase in the metals. But when the stock is trading at 83 times its earnings, and while you cannot directly correlate the price of copper to the profitability of this company, because there would be a lot of input costs that would also rise in line with the rising, with the expenditure that needs to be incurred on excavation of the copper ore, etc. So I think the market is or the price valuations are very, very high, and one should probably stay away for and maybe buy it in a correction, and that would give you a better option as far as the risk reward is concerned.
Okay, so right now they should sell it then, right? Or continue to hold it?
You can continue to hold it because the the momentum is on the upside, but at some point in time one should look at don't add any more at this point in time. If there's a correction, then one can look at adding.
Okay. Chandan, your view on the technical front for Hindustan Copper? What should the viewer do? They want a long-term view, so long-term targets.
Yeah, so we are quite positive on Hindustan Copper, and in fact, it really did well in last couple of months. If I look at the price behavior of last 6 months, rallied from almost 230 to 750 kind of levels. But in the recent past, it witnessed corrective move led by correction in the precious metal. But major trend of the counter is positive. It has been holding well above even its short-term moving average, that is 50 and 100. So I think one can continue to hold. In fact, those who are looking for fresh buying, they can accumulate Hindustan Copper on any small decline. With the support of 550, this time it can head towards 625 to 650.
All right. So continue to hold the stock. That's the advice coming there. But Chandan and Lancelot, thank you so much for joining us on the show today and helping us answer all of those queries. But with that, it is a wrap on this edition of Your Stocks. But do remember to email us your queries and we will address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
So the final close isn't very much to write home about. The S&P was up about 0.1, the Nasdaq was up about 0.14.
For the first time yesterday, Infosys shared how much generative AI or new AI services contributes to the top line, and that stands at 5.5%.
Importantly, Harjeet comes with experience from Unilever, the Hershey's company, and he's also worked at Metro, Cash and Carry.
It is absolutely flat, nothing on the Nifty, blinking red and green, undecided.
But some workloads are going to go to like personal AI devices.
Expect big announcements with respect to data infrastructure here in the country.
The market is flitting between red and green for the frontline index. It's been lowered by the IT pack. Over the last few trading sessions, if you notice, ITC has been doing well from its low.
Appropriate controls were not exercised over computers or related systems.
We have built platforms to adopt the responsible adoption of, let's say technology like agentic AI.
Prime Minister inspired us to involve the students in responsible use of AI.
Like, I agree with the minister. We believe sometimes the bigger the disruption, the bigger the opportunity for us.
Actual revenue contribution from these technologies is still in very early stages.
Market recovers from morning lows with the mid-cap index up nearly 150 points.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Rima, and the markets are at the high point of the day. So the Nifty is up close to around 60 points. We had an intraday pullback, but that's got bought into. And the big boy, Reliance Industries, as well as the Nifty Bank, both of them have moved up as well. That's what helps, really, because they have done the heavy lifting in today's trading session. And the good news is the broader markets continue to outperform. So the number of stocks outperforming are close to, or advancing, are 1,650, more than the number of stocks declining. Pretty good trading sessions, Rima.
Indeed, I think that's the big story, right? The mid-cap, small-cap index is up close to about 0.4%. We have an advanced decline ratio. So barring the IT pack, where the IT index is down 1.7% as we speak, Infosys taking a knock, and there is pain across the entire sector, the rest of the market is holding up pretty well, which is why you've got the Nifty as well, inching towards the 25,800 mark, and advanced decline ratio, which is positive. We'll talk more about stocks. Let's quickly tell you what we've lined up on the show today. It's a zigzag trade, but now up on Dalal Street. The broader markets outperformed. The Nifty has risen to the day's high, but the IT pack continues to reel under pressure. PSU banks, metals continue to eke out gains. Tech counters continue to dictate headlines. Wipro, Tech Mahindra, Infosys, HCLTech among the top Nifty laggards as AI disruption fears plague sentiment. Muted moves even as brokerages mount bullish takes on Infosys following the tie-up with Anthropic. Hotels to cigarette conglomerate ITC perks up following a bullish note from UBS, a buy rating even as they cut the target price to $395. The rationale behind that coming up on closing bell. And after this splendid spike earlier today, E2E network comes off intraday highs. This is as the company clarifies that no new agreements have taken place with NVIDIA. NetWeb Technologies, on the other hand, continues to power on following the launch of their Make in India supercomputing system. Details on closing bell. But for now, let's position yourself for the last 1 hour of trade. Mitesh is back with us as always. Mitesh, encouraging signs in the last 30 minutes?
Yes, very much. And, I have been highlighting this point that the Bank Nifty is the one which is making fresh highs at all-time highs, which is clearly showing strong outperformance. And that's why the Nifty is not weakening. So I think right now I have a buy on Punjab National Bank with a stop at 125 for targets of 135. Sorry. And the other stock on which I have a call, that's a buy on Petronet. Petronet is something which has recovered well in the last few days. Looks like the short-term trend is changing on the upside. So buy here with a stop at 300 for targets of around 314, 315.
Okay, all right. Mitesh, what about the Nifty Bank? What are the levels you're looking at there? Because that's clearly become a buy on dips. Any weakness is getting bought into. Where is it headed?
The first target which I had was around 61,500. If you remember that day on which the Trump-US-India-US deal was announced, 61,400 I think was the opening, and 61,500 was the intraday pivot made after that. So I think 61,500 is nearly done. Beyond that, I think 61,900 was 62,000, and then even 62,400 is on the cards.
Okay, that's the call coming through on individual stocks, the Nifty Bank. Let's quickly talk about IT because that continues to see pressure. Firstly, maybe we'll just talk about the AI contribution of the Indian IT companies. It still stands, it's still in very early stages. Infosys yesterday called out 5.5%. For TCS and HCLTech, it's 6 and 4% respectively. Right? There are two ways to look at it. Girish Pai says it's disappointing. AI has been around for a long time, but still your AI contribution is only 4, 5, 6%. Shouldn't it have been more? Yeah. But on the other hand, there are brokerages like UBS says, but look at the headroom to expand from here on. If it's only 5% now, there is significant headroom, so the potential is there. Brokerages are unequivocally bullish on Infosys. Lots of notes came out overnight post the AI Analyst Day. We just checked on Bloomberg. 52 analysts track Infy, 38 of them have got a bullish call. And if you see the target price, say for something like a JP Morgan, the target price is as high as 2,050. And currently, Infosys, I think, is closer to the sub 1,400 marks, a significant upside from current levels. 5 quick reasons why the brokerages are bullish on that. One, they believe the AI opportunity is large. Infy quantified it at $300 to $400 billion. In that, particularly, it's the data modernization. Companies, enterprises have legacy systems. If you want to apply AI at scale, you have to first modernize it. So that is the second big tailwind. The third one is the partnership with Anthropic shows that the company is taking the right steps to stay relevant in the AI ecosystem. 4, if you just look at the near term, the macro tailwinds are better. FY27 is likely to be a better year than FY26 across for the industry. And the fifth reason is the valuation comfort, because the stock, if it's trading at 18, 19 times forward multiple, it's cheaper than the long-term average multiple for Infosys, which stands at close to about 20 times. That is the big fear. But look at the way the stocks are reacting. Yesterday, we had that one mini rebound where stock at one point was up 4%, but ultimately closed with a gain of 1.7, 1.8%. And today, Infosys is down again another 1%. It's picked up from the day's low, but still down 15% from, in the month of February. And this is a global pain. The global ETF for software is down 20% on a year-to-date basis. And finally, we have to talk about jobs, because in the first 9 months of FY29, that's the June, September, and December quarter, the top 4 IT companies' net headcount has declined by 700. It's come on account of TCS and the restructuring, but at least as of now, it appears on account of the macro slowdown and the AI disruption, the net headcount decline, then the cut to the jobs is more than the gains that are likely to accrue. So that is a disappointing picture for the economy. Siddharth Khemka is now joining in, Head of Research, Wealth Management and Motilal Oswal Financial. Siddharth, what are you advising the clients? Is this a falling knife? Can one catch it or just completely avoid it? Value is emerging. What is the view now?
So yeah, I think, hi Rima, good afternoon. So if you look at IT services have been volatile over the past months, less to talk about earnings, but more about the narrative shift around the AI disruption. And what we are believing is that markets are currently pricing in the lowest long-term FCF growth assumptions for the sector in nearly 2 decades. So definitely valuation-wise, very comfortable. However, the timing and the extent of the AI-led disruptions, that remains a key unknown. And hence, what we believe is that definitely there could be some disruption to the traditional IT services, which constitutes about 15-18% of some of the large IT tech services companies in India. But what we also believe is that historically Indian IT companies have rebuild themselves to the latest developments, be it in terms of cloud computing, consultancy services, and they have come out of the past several issues. So clearly, near term, there is not much clarity and the volatility can continue. But for the long term, and especially not for the faint-hearted, people can start looking at it, but purely from a high-risk perspective. A sector which used to be defensive has now become a high-risk kind of a sector from a long-term perspective.
Got it. Any input set on E2E? Earlier this morning, you had some comments coming in from NVIDIA, and the stock was up 20%. Now, I think around 20 minutes ago, E2E has come on the exchanges and said there's nothing incremental. What they announced earlier, that's the, that's the business they're getting with regard to the, the deal that they've done with NVIDIA. But nothing new. And the stock, I think, has fallen 10% post that clarification. Difficult day for, some traders, investors on E2E. Sharp fall is what we're seeing from the day's high. Still up 10%, but from 20%, now it's up 10% post clarification, because they're saying there's no new agreement with NVIDIA. What they announced in the past, that's what it is. Sid, any view?
Hi, Nigel. I think so. We don't have any coverage or view on E2E, but what we are seeing is that a lot of companies, they are now started announcing, especially given the India AI Summit, and a lot of these global AI companies are there in India. They are tying up either for using of their services, like we saw in the case of Eternal, or for example, the case we are making for the Indian IT services, where Infosys has partnered with Anthropic and pointing towards positioning itself as a platform-led enterprise-grade opportunity, not just a productivity tool. So there will be mixed kind of reviews here. Some would use it as a tool, and some would use it as an input for their business services. So I think a lot of buzzword for AI, but we definitely need to know where the actual usage is and where the productivity kind of goes up sharply to benefit the company. So some of these smaller names, I think, clearly news driven. In this space, I think largely one should focus on the larger names where there is more stability, more quality in terms of long-term.
Okay, let's talk about ITC that's holding up today and outperform. Manglam joins in. Manglam, there is a UBS note. What does it say?
Well, so over the last 10 days or so, ever since post-budget clarification had come that there was no relief on taxation in cigarette hikes, and that exactly took place. We reported that, there was a 25% price hike that took on Godfrey Phillips products, and then there was another between 17 to 20% sort of price hike that came in on ITC. And now the brokerages are doing their channel checks as well. And these companies, they have a wide portfolio at multiple price points and multiple lengths as well. So as and when inventory at the dealers gets replenished, there will be fresh news coming in on price hikes, because the company is doing it in a manner that does not impact their earnings or volumes materially, so in a very dynamic manner. And that exactly is what UBS has written as well. They're saying that there is a range of imminent price hikes which are now arriving. The premium cigarettes, which are 84 length, they are expected to be priced at 24 rupees per stick versus 17, so which is pretty much covering the entire spectrum of tax increases. Then you have the steepest tax increase in that one, 64 from 6 rupees goes all the way up to 7 rupees. 69 Gold Flake, which is a volume driver, which is currently around 9.5 rupees, should be around 12 rupees per stick. And Gold Flake is also that much. It's clear that, as per UBS, that price hikes have been fully passed on premium cigarettes, whereas they have been kept minimal in the price-sensitive segments of 69 and 64 cigarettes. The reason for that is to keep both volumes as well as EBIT impact to the minimum. Because if you increase the price on the volume drivers, then that could have an adverse impact on the overall volumes of the company. And if you do not increase it as much on the premium ones, then there could be an impact on the EBIT. So these companies are taking these dynamic price hikes. And remember, ITC has corrected a fair bit from the top as well, trading at around sub 20 times in terms of valuations. So all these factors are working in favor of ITC, and as a result of which Godfrey Phillips and BSE Industries too.
Got it. Okay, all right, Manglam, thanks a lot for that. Sid, what do you make of ITC?
I think... hello?
Yes, Sid, go ahead.
Yeah. So ITC, while the price side news is definitely supportive in the near term, what we believe is that the sharp hike that the government, especially in the tax cut excise duty effective tax hike that the government has done, that is likely to exert some pressure on cigarette volumes, and also likely to revive the illicit trade. That is a risk to the overall volume growth as well as earnings from the cigarette business, which has been the core cash generator for ITC. So we have downgraded the stock to neutral after this government hike the taxes on cigarettes, and we believe that over the next 2-3 years we'll see how this price hikes as well as the illicit trade that picks up, and how the volume can see some decline, meaningful decline over the next 2 years. So definitely we remain underweight on ITC. We believe that's a risk that is definitely worth looking at some other stocks in the dividend yield segment, other than looking at ITC.
All right, I wanted your view, Sid, on Paytm. You know, PhonePe IPO is indicating a valuation of roughly around $15 billion. And that would mean it trades at around, 37 to around 43 times the annualized first half of the year revenues. So that's trading at, close to around 40 times, ballpark. Paytm is trading at around 19 times, despite PhonePe being EBITDA negative, while Paytm is EBITDA positive. Macquarie has written a note, and if you look at it in the last two trading sessions, the stock is up close to around 6%. Your view on Paytm, Sid, from here? It's at around 1,200 rupees. It's already seen a bit of a recovery from the lows. Do you back this valuation argument with regard to trading, the number of times it's trading on sales?
Yeah, I think, Nigel, if you look at Paytm, we have been positive and constructive on the name, largely because of the core business that is doing very well. The past issues with regards to RBI that are mostly largely behind the shareholding pattern that has improved a lot. And also the fact that there has been news flows recently about the company getting an RBI approval for the wallet business. I think all these point to a strong, steady business growth. Valuations, if what the street is suggesting the valuations for PhonePe, then definitely Paytm is at a discount compared to PhonePe, and we believe that there could be a case for further growth, especially given that now the company has achieved the profitability that has been long enduring the business. So overall, we believe that there is definitely growth next 2-3 years that can support specifically the valuations. So what we are valuing it as about 8 times FY27 sales, which should give a target price about 1275, and we remain positive on Paytm.
Positive on Paytm. Today, all the data center stocks are all fired up. We'll talk more about NetWeb, but even a company like Orion Pro has a gain of 4.5%. Anantraj is surging 2.5%. So that's a space which is excited. But on NetWeb, there is news. The company has launched supercomputers powered by NVIDIA's Blackwell chips. Vinny, what more details do we have?
Hi, absolutely. So they've launched this morning. That is called Tyron Camarero AI supercomputers, and there's something called a Spark as well. Now, this is launched at that AI India Impact Summit, which is going on in New Delhi. This is the world's one of the smallest supercomputers, AI supercomputers. So that's interesting there. But both these products are going to be made in India. They'll be powered by NVIDIA's Grace Blackwell architecture that is there. Do not forget, the company already has a tie-up with NVIDIA. Plus, that AI opportunity that is coming in from NetWeb Technologies, that has kept the street excited about this company for a while, because look at the stock move, right? In the last 1 year, the stock is already up almost more than 140%. And post this announcement today itself, it went up as much as more than 10%, and now it's holding on to gains of 7%. Just to highlight, the AI systems contribution for the company in Q3 accounted to around 64% of their business in Q3 FY26, while for 9-month FY26, it was around 47.6% contribution that came in, and that's seen a sharp increase versus what one has seen last year. So it seems like the street continues to be excited about companies that do see the data center as well as AI opportunity.
Got it. All right. Sid, what do you think of it?
So unfortunately, again, NetWeb, we don't have coverage, so we'll not be able to comment on that.
Okay. All right. Any view on Hindalco? The stock has corrected, I think, close to 6-7% from the recent peak. They're having a little of trouble because of the Oswego fire that we saw. So cash flows will get impacted, EBITDA will get impacted, but 70 to 80% is what they expect to recover. However, now the problem is that Mr. Trump is talking about possibly going a little bit easy on the tariffs on steel and aluminium. And in the last few quarters, actually, Hindalco's got hit because tariffs were impacting them. But now the Midwest premium had moved up to such an extent that actually from this quarter onwards, it would be a benefit for them. Unfortunately for them, what's going to happen is, if in case this tariff comes down, then the Midwest premium that moved from around $800 per ton to around $2,200 per ton, that will start cooling off again, which in the sense will not be very good for them. What's your view on Hindalco at 890 rupees?
Yeah, Nigel, I think if you look at Hindalco, they have been benefiting out of the favorable pricing and resilient India aluminium business. However, that has been overshadowed by the headwinds on the overseas subsidiary. And as you rightly said, there are a lot of other developments which are happening. Novelis faces almost 150 to 200 kilotons of volume decline over the next 2 years, which could potentially also impact their free cash flow generation, stressing working capital as well as elevating the net debt. So overall, what we believe is that when we are neutral on Hindalco, while the domestic business remains strong with strong profitability, that is only just cushioning the muted overseas performance and the project costs overhang for Hindalco. So maintain neutral on Hindalco as of now.
Some of these capital market players have also made a good comeback. Edelweiss Financial up 5%, JM Financial has a gain of 4%. BSE is also higher by nearly 2.7%. So that's a space which is holding up pretty well. What about PSU banks? Siddharth, we've seen considerable strength in many of these PSU banks, and even today, many stocks like PNB are higher in trade. What would your top pick be?
I think if you look at PSU banks, SBI, that has been the best bank in terms of numbers, especially after the quarterly results. They have reported, even upgraded the guidance going forward. So that is a big positive for them. Valuations definitely are doing a catch-up with some of the private peers, but I think still there is a lot of room given that there is expectations of NIM improvement, the credit growth that is likely to benefit. So overall, we believe that the earnings could see a strong growth going forward. Credit growth guidance has been raised to 13 to 15% for SBI. Valuations comfortable, as well as the credit costs remain pretty low. And with an ROA of about 1.1%, ROEs of almost 16%, we believe one can look at SBI as a top pick. Currently, we have a target price of 1,300 on SBI. Post results, the strong has seen a sharp rally. So I think limited upside, but definitely one should buy on dips if there is any market opportunity.
Got it, Sid. Thanks a lot for joining in, giving us all of those details. Well, wishing you a good rest of the day. Well, time to slip into a short break. On the other side, Alok Agarwal of Alchemy Capital Management will be joining in. Stay tuned.
Welcome back. 30 minutes to go to wrap up trade, and the Nifty is still just shy of the 25,800 mark. But banks are picking up some steam. So now the Nifty Banking Index is up close to about 350 points. No expiry today, but what are the F&O trends?
Well, Rima, the Nifty is holding up. The Nifty Bank, as you mentioned, that's in perfect form. And as Mitesh told us, that's headed even higher from year on. The problem is the tech index, that's lost its form a little bit. So that's not doing any good for the Nifty itself. However, Reliance Industries has seen a good recovery from the low. So you have now higher percentage of stocks actually that are moving up, which explains why the Nifty is up 60 points or thereabouts. The PCR has moved to around 1.2. That's moving gradually towards the higher end of the range. That's because we are having put writing yet again. 25,700 put, the premium's down to around 88 rupees from around 135. 25,750 put, the premium's down to around 100 rupees from around 157 rupees. So aggressive writing is what you're seeing on both those two strikes. In terms of reference levels, I think today's low, if you look at it, it's around 25,600. And going by the writing, you're seeing at the 25,750 put, well, the 25,600 mark becomes important on the downside. On the upside, though, the 26,000 mark, that becomes extremely important in terms of a resistance mark. Moving to stock futures then, you have Bharat Dynamics seeing a bit of a short squeeze in trade today, stock up 2%, open interest lower. BSE has seen a correction in the last few trading sessions. Now, fresh buying is what we're seeing on BSE. And PSU banking names, they seem to be the flavor. Whether you look at metals, PSU banking names as well, both of them actually cooled off in the last few days. And you're seeing now PNB has come in for a bit of a short covering bounce, but tech has again becoming a bit of a shorting counter. So you have Wipro, that's down close to around 2%, and open interest has swelled up. So net, the Nifty is holding up. The cues are such that if you defend lower levels at around the 25,500, 25,600, the odds are that we should see a bit of a bounce and hopefully trend higher, but we'll need the Nifty Bank to be in top form, and hopefully the Nifty IT index gives up its recent underperformance. That said, let's welcome Alok Agarwal, Head of Quant and Fund Manager at Alchemy Capital, who joins us on the show. Hi, Alok. Good afternoon. Good to see you in. How are you all feeling about the markets? Let's get a couple of simple data points out of the way. How much of cash are you all sitting on? And have you all deployed any of that cash into tech?
Hi, Nigel. Good afternoon. As a matter of policy and the way we run our strategies, we don't really take cash calls. So hence, we don't have any cash. But in terms of deployment into tech, we still don't see too much of growth visibility in that sector as of now. And hence, we are staying away. We have been underweight for quite some time and continue to stay underweight on that sector.
Complete away. At what point does one start looking at IT sector? Does it start looking interesting? Not buy, but at least start analyzing for a potential buy.
Yeah, this has been quite an entry. But when we start looking out for growth opportunities out there, barring a few select mid-cap IT names, bulk of the sector, it's difficult to really find that growth visibility. When I say that growth visibility is about like at least a good, decent double-digit kind of a growth in the earnings, that's difficult to find through. So the turning point would be when we start seeing those growth numbers accelerating into the double digits form. Then the price movements have already been quite attractive, and then the sector becomes attractive. But in the absence of that growth, it's difficult to form a positive view on the sector.
Double digit looks far away. Even the long-term average for the IT sector in terms of growth has been 7-8%. It's only been few pockets when we've had double-digit growth, which was that post-COVID digitization, digital boom. But other than that, the long-term growth is 7-8%. And in the last 2-3 years, the revenue growth for these companies has been 2-3%. So IT is a complete avoid. And as of now, you're not looking at it, at least till growth picks up substantially. What else do you like now? What are the recent changes that you made to your portfolio?
Among the recent changes, what we have observed has been one of the sectors that we had been underweight on is the one that is now turning a little more on the buy side. That is a lending segment. So on the lenders side, especially the banks, we have been noticing for the last nearly couple of years, both the loan growth, the system loan growth, as well as the deposit growth, these numbers were lagging. They were not really coming out at good numbers, or whenever they threw some good positive numbers on the double digit side, they did not really stand there. But now we are seeing some sustainability in both the deposit growth as well as the credit growth. And hence our positioning has been turning more positive on the lending side. Within that, the preference has been first for PSU banks, then for small private banks, and then for the large private banks.
Okay, all right. Alok, if I remember correct, Trent was a stock that you like, right? Trent, Dixon, they had some weightage out there. Both those two stocks have come off the top, quite drastically. Good time to enter. Would you all be looking to double up?
Trent and Dixon were part of the portfolios of amongst the top holdings towards the early part of last year. So in some of the funds it got exited last year, and some of the funds we still continue to have. And yes, especially in the EMS space, Dixon is promising of further good growth. The guidance has been good. The execution of the company has been good as well. So after the correction, the risk reward looks far better in terms of for Dixon as compared to Trent, because there they need to really ensure that the same store growth in the sales has to come off much better than what they have been already delivering. But yes, within the two, Dixon looks like a much better risk reward at these points. But again, these companies are those which are trading at higher valuations, and we need to really trade with caution, because they need to really throw up a good growth numbers for these kind of valuations to sustain.
You all had silver also in your portfolio? You all were quite bullish on silver. We've seen a correction.
Yeah, silver has seen a correction. We have been bullish on metals, first preference being the precious metals, followed by the industrial, the non-ferrous side, and now turning a little more positive on the ferrous side as well. Silver saw a big correction. It was a record-breaking correction from the highs of nearly $122 to the lows of mid-60s. But nevertheless, this kind of movements do happen in industrial precious metal like silver. But the long-term story remains intact in silver. Both as a precious metal as well as the end use for the industrial side, being the best conductor of electricity. It's been 5 straight years of the silver material being in a deficit, and this year also is expected to be in deficit. And if you look at the various exchanges numbers as well, the inventories there are at possibly multi-decade lows, nearly a decade low plus numbers. So we do remain positive on silver. And the rest of the pack is not just silver. On the industrial metals, the non-ferrous side, we are quite positive.
So, but when silver dipped and you saw the sharp correction from 120 down to 60, 65, were you all buyers? I mean, how aggressively are you looking at silver?
No, in fact, we have been bullish as well as overweight on the silver side and the related stocks as well, right from last year. So yes, some of the profits got eroded when the silver had that correction. But wherever we could buy and had the position to buy that, we were buyers in the correction.
Okay. All right. Alok, if I remember correctly, tech, you're saying you're not too enthused, but some of those product companies you'll have in your portfolio, if you could correct me on that. And some of those stocks actually have come off the top. I think you'll have exited some of those as well. After the recent correction, do you think some of these product companies will relook into?
Yes,
Okay, we can't hear you. Alok, we'll try and reconnect with that, but can't hear you. Do you know which were the product companies that they own?
I wanted to confirm about it. I think one of the companies that you had mentioned as well was what Alchemy had in their portfolio. So, I think Orubindo is one of the stocks which they exited, if I remember correctly. So, we'll try to get Alok back. Do we have him? Alok, you were answering the query on product companies, and we were just wondering. I think you had Orubindo at one point of time. You had it in your portfolio some time back, and then you all sold out. Small portion.
Yes, so we had some of those positions, and these companies had actually delivered good returns as well as were throwing up good numbers on earnings as well. We had booked profits in a number of them. But yes, after the correction, some of them have started looking attractive again. We have not yet added, but yes, we are looking at them quite positively. But yes, at a certain point, we might turn buyers in them as well.
A great conversation, Alok. Thank you very much for joining in. We will slip into a break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you calls from Mitesh, some BTST calls coming up.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
A very good-looking screen, actually. The Nifty is now holding about the 25,815 odd mark. So good going on that one. Cipla is a stock that has actually moved to the high point of the day from the frontline names. But it's that time of the show where Nimesh joins us to tell us what is he picking up on D Street Chatter. Nimesh, take it away.
And Angelina, decent recovery from the intraday lows, but again, it's largely led by the financials. And within financials, I understand there is a very good buying interest in the PSU bank stocks. So the PSU bank index is up nearly 2%, and all this, PSU bank stocks are buzzing in trade on the back of FI buying. Tech again is down today. The IT index is lower by 1.5%, and the street is completely divided on IT right now. There seems to be selling from large institutions, but I understand in the last couple of days, some insurance companies bought as well into the Indian IT names. So again, mixed in terms of feedback from institutional investors. Selective buying continues in the mid-cap names, so that index is again up today. But I guess today's large flow seems to be positive and towards the PSU bank names.
Got it. What about individual stocks, Nimesh? What are you picking up? Some spicy, juicy news?
So the first stock on my list is Persistent. Under pressure in line with all the IT names, but for Persistent, the sense is there could be a big corporate development around the corner. A potential overseas acquisition is the buzz as far as Persistent is concerned. We saw what happened to Coforge after that big acquisition they did. Now, there is some chatter about Persistent as well. So watch out for that space very closely. The second name is Leela Palace. Again, now that the earnings season is over, the block window is open for many promoters and corporates, and looks like there's going to be a large block in Leela Palace very soon. The Brookfield owns a little over 75%, and there could be potential sellers there. So that's the second name. The The third name is Paytm, 197 Communication. It's been buzzing in the last couple of days, up almost 5-6% in the last few days, largely on the back of HNI's buying. I understand some HNI interest is back at current levels in Paytm. And the last is Union Bank. I spoke about big buying in PSU bank names. Union Bank stands out within that list. Aggressive buying is what my sense is. So expect very high delivery volumes in Union Bank. And that's largely because of large flows from larger FIs in that particular name.
Got it. Thanks a lot, Nimesh. Nice and neat list is what Nimesh fills us with in terms of what is he picking up. Let's go across to Mitesh Thakkar, who joins us. Mitesh, a good-looking screen. You know, the bulls are raising the bat yet again. They're saying a century is what we have. The Nifty Bank is saying, Brian Lara sort of knock 400 runs on the screen and still looking good for more. Your view, take some money off the table, have a good Wednesday evening, have a cold drink, a drink, whatever you want. Or do you think we're good for more, so you'll trail your stop loss and fill us in with 2 picks as well?
Yeah, Nigel, I think, I would suggest holding on to long positions, and even on the calls for tomorrow, I have 2 buy calls, the BTST and CG Power. We'll keep a stop at about 703 or thereabouts, and look at a target of roughly around 730, and a BTST and Colgate or Colpal with a stop at about 2184 for targets of 2240.
Okay, got it. All right. Thanks a lot for that, Mitesh. Well, the Indian IT sector, that remains in focus over fears of AI disruption. We spoke to the IT Minister Ashwini Vaishnav and TCS MD and CEO, Mr. Krithivasan, on the potential and likely impact of AI on the tech industry. Let's listen in to what they had to say.
Over the coming 2 years, we can expect about $200 billion investment in the AI infra layer. And simultaneously, we can expect more than $17 billion in VC funding for the startups and deep tech, especially deep tech startups, in solutions, in applications, in the way AI would be used.
There's so much happening, and there's no need to panic. You have to think, sit back, relax, and think properly. There's so much of more work to be done. Every time there's a disruption, the work expands. And the good companies will participate, take a forward-leaning approach, invest in that, and they should be able to increase the pie. It's again based on a larger scheme. We believe that you will be able to participate more in the AI ecosystem if you operate across multiple layers. We are looking at participating right from the infrastructure layer. There's an infrastructure layer, there's a model layer, there's an application layer, then there's the intelligence layer. We want to increase our participation in each one of those layers. That's why you see we participating with TPG, then signing up with AMD. We also signed up with some of the design companies. So that's the overall plan.
We also spoke to Sunil Kaul of Goldman Sachs for a perspective on the Indian IT sector. Let's listen in.
If you look at what has happened in the market in the last few weeks, I think there has been a relentless selling and indiscriminate selling of the software companies, because global investors are basically questioning the terminal value of these companies. And as we know, software adoption at the enterprise level is pretty complex, right? There are winners and losers and different cohorts, and somebody has to provide the cleaner data sets for these AI models to work. Somebody has to drive the enterprise adoption. In the US market, the real issue is not just the terminal value, but the margins for these companies are also at record highs. And so in the next few quarters, until we figure out who is kind of winning, how the business moats are, what the pricing power for these different sectors are, probably there are still going to be uncertainties around this. And so we are not advising clients to buy into the global software companies yet. If you look at the Indian software companies, obviously they have also been under pressure, down 15% or so over the last month or so. Over the past year, given the selling we have seen in Indian equity markets, software companies are down 30%. So we are not expecting absolute sort of large downside from current levels. And in that sense, you can say maybe the stock prices are bottoming out. But our general sense is that, look, the Indian software companies, when you look at it from a relative perspective, they are still a bit more expensive than the global peers. And if anything, that valuation gap has widened because the global peers corrected more than what Indian software companies recently have corrected, right? And so relative returns, they may still be underperformers. And when we look at the Indian equity market relative to other sectors, we still think some of the domestic pockets are much more compelling. So we're still underweight the broader sector.
All right, time to slip into a short break. On the other side, Mayuresh Joshi is waiting for us. We'll throw some stocks at him and ask him for some advice. Don't go anywhere.
Welcome back. Pushing up towards a 100-point gain now on the Nifty, comfortably perched above 25,800. 10 minutes to go. Mayuresh Joshi is now joining in on the last leg of the show. Mayuresh, barring the IT pack, the rest of the market is starting to look encouraging. The advanced decline ratio has been positive. IT continues to get bludgeoned. But outside of that, you are seeing positive signs. How are you all reading the markets now?
Afternoon, Rima. No, I think after the trade deal announcement, just right after the budget, I think the sentiments have turned for the better for the markets. And if you complement that with how the earnings have been for the quarter gone by, for a large part of the market, leaving aside a few misses, earnings have more or less been in line with estimates. So it makes us believe that as we head into FY27, a base case scenario for a 12 to 14% corporate earnings growth probably seems to be on track. On top of that, liquidity probably seems to be very, very strong. And nominal growth GDP assumptions in the budget probably a little bit conservative in our opinion. So I think if all things fire and on all cylinders as we speak, with inflation expected to remain a little bit benign, and earnings and investments and consumption expected to improve, leading to a significant multiplier effect. I think markets might be looking good in FY27 from a macro and a micro perspective as well. With abundant liquidity into the system and RBI expected to support growth, I think the support that is probably needed from the central bank also probably seems to be one big enabler in terms of macro and micro enablers going forward. So I think might be the year of qualitative leadership mid-caps as we head into FY27.
All right, interesting one. Mayuresh, I was speaking to a seasoned fund manager 10 days or so ago when the market was a little bit jittery. And he said, Nigel, I've never seen the macros in such good shape. And the mood is absolutely at the low. So both of them at opposite ends of the spectrum. And it appears some part of that has corrected itself. Mayuresh, I wanted to ask you about these power equipment makers. Now, the fear is that since projects are getting delayed, the import restrictions will actually be eased and Chinese imports will come in. Some of these Chinese equipments for power, for coal as well. BHEL could be a stock that's actually very nervous because of that. What is your view on this import fear as well as a stock like BHEL?
Afternoon, Nigel. So I think if you probably look at the capacity in terms of how the Indian power equipment sector is probably positioned as we speak, the installed capacity is close to 505 gigawatts. The industry is obviously transiting big time as we go into renewables. I was at the Ambit conference yesterday, and again, BESS as a theme is something that is catching up very, very strongly. Government policies, Nigel, like the draft National Electricity Policy, targeting per capita consumption of 2,000 units by 2030. Data centers emerging as a key enabler demand driver, expected to reach almost 6 gigawatt hours of capacity by 2030. And the PLI schemes, specifically the 8,000 crore semiconductor mission and the PLI schemes are probably complementing that. And therefore, if you probably put all these events into account and probably look at the power equipment part of the business, in general, I think the expectations in terms of the entire India energy stack over the next 5 to 10 years, with nuclear capacity also expected to reach 100 gigawatts, needing almost 9 lakh crores of investment. Our own sense is that this is an interesting theme as we head into the next few quarters and years. There will be competition, but again, I think our players are probably very well equipped as we see. Traditionally, I think the slow-moving order book is probably getting away. The expectations in terms of it catering largely to all these aspects that I probably spoke about makes it a huge contender. However, I think the near-term concerns might just play on the price. But I think stocks like Cummins India, as an example, is something where our belief is both the data center aspect as well as the entire power equipment part of the business might play out very, very positively on his balance sheet. So out of the lot, I think Cummins India is something that we remain very, very optimistic about.
Okay, that's Cummins India. Mayuresh, you said you were at the Ambit conference yesterday. Any other data points that you'd like to highlight which were interesting to you?
So I think interesting set of companies that Ambit had in its conference, and a large part of the buy-side analysts were also there. And the general mood, as I just mentioned, I think the general mood was that of optimism. A lot of companies probably exhibited a large part of their earnings trajectory actually improving as we head into the second half of FY27. And they've seen all these enablers that the central government is probably doing either through PLI schemes or the macro environment turning very, very positive, being strong enablers for growth beyond 27 as well. So I think we met a large amount of companies across sectors. The takeaway was that a large part of these company managements believe second half of FY27 is where I think the growth should come back, and it should be a structural change as we head into the next few years.
Okay, what about Orubindo Pharma? There are some details out about the Unit 7. The observations are out. 9 observations have been issued to Unit 7. Now, the question is whether there are data integrity issues and whether this, matter is going to escalate. What is your analysis of this? Because the street, analysts we spoke to seem to be a bit divided. There's a bull and bear camp on this.
So Rima, again, I think if you probably look at the observations prima facie, I think some of the observations seem to be critical in nature. And therefore, I think how the resolutions will come through, specifically for Unit 7, which is a critical unit for Orubindo Pharma, is going to be extremely critical. Now, we all know once the FDA probably has these observations in place, even if a quick resolution has to happen, I think the quickest resolution might still take some element of time. And therefore, I think one should probably presume that whatever was expected to get launched out of Unit 7 might need to get diverted to other units, or the expectations in terms of the revenue accretion happening aggressively in terms of new launches, exclusive launches, might just get delayed or deferred, creating that amount of impact in terms of revenue and EPS estimates as well. So yeah, I think a few observations are critical. So let's see what the management probably comes out with.
Okay, all right. Hold on, Mayuresh. Let's get you a soundbite that we got earlier. U.S. Trade Representative Jameson Greer says that Trump administration is open to making some adjustments to steel and aluminium tariffs. Let's listen in.
Well, on steel, remember, we've shipped 300,000 million metric tons more this year than we did the year before. We've produced more than Japan. There was some reporting over the week about adjustments there. I mean, you may want to sometimes adjust the way some of the tariffs are applied for compliance purposes. I'm not giving you double talk here. We've heard stories of companies that have had to hire extra people for compliance. We're not trying to have people, do so much bean counting that they're not running their company correctly. The president's tariffs on steel and aluminum have been very successful, shipping more steel than ever, opening up new steel lines, new aluminum smelters announced. So clearly those are going the right direction. They're going to stay in place.
Mayuresh, what do you think? HSBC, I think, came out with its note today. And Pinakin Parekh is the analyst out there who writes on metals. He believes that these concerns are overblown. And if I remember correct, I think the target price on his note on Hindalco was 1,200 rupees. The stock has corrected 970 to 900. Buy or not?
Little bit overmoon, in my opinion, as well. And therefore, I think if you probably look at the business construct for Hindalco, I think the domestic business probably seems to be on a very strong footing. When it comes to Novelis, in terms of overall business operations, the applications are multifold. And a large part of the expectations in terms of the hit taken because of tariffs or otherwise, and the one-offs that happened in terms of the plant closure, I think that probably had a hit in terms of numbers on a consolidated basis. However, aluminium prices are perking up as we speak. But generally, I think, Nigel, as a theme, our belief is that ferrous steel companies should do relatively better over the next few quarters. Pricing is back. As I said, we met a few end user companies yesterday, and their belief is that the prices have been hiked, specifically for HRC and CRC as products itself. And therefore, I think Q4 pricing, volumes, margins, absolute EBITDA per ton and relative EBITDA per ton should be better for most steel companies. So I think steel as a space is somewhere where the rating rankings leadership probably remains a little bit more sacrosanct as we speak.
Paint companies, just 2 days back, we had Indigo Paints, and I think they were telling us that I think November, December, January, they had double-digit volume growth. October was a tough month, but after that, things have picked up. But there was this Macquarie note which came out recently where they said that they expect a moderate pace of recovery to pan out in the second half of this calendar year, and therefore they expect some earnings downgrades. What are your channel checks throwing up on paint companies?
So two things. One, I think demand is slowly and steadily coming back. That is one. Second, I think in terms of the organized players, obviously competition is still having its challenges thrown around across either the leadership players or the second-rung players as well. And therefore, I think pricing remains extremely competitive as we speak. However, I think this should smoothen out, in our opinion, over the next few quarters. And as demand starts coming back slowly and steadily in terms of mirroring the 1.52x GDP growth. So if 10 to 12% volume growth is something that one probably presumes for FY27, with input costs remaining moderate and pricing probably expected to remain a little bit more, the competition intensity expected to go down a tad bit. I think numbers should start showing some element of improvement. But let's see how things play out. At this juncture, I think we are seeing at least a time-wise or a consolidation that is happening for paint stocks.
Okay, Mayresh, we'll come back to you and connect in markets forward. For now, we're just counting down to today's close, wrapping it up. The Nifty ends above 25,800. The Nifty Bank was the star performer. The Nifty Bank ending with a gain of about 0.5%. And then you had support coming in from Reliance Industries as it edged up 1.25%. So support came in from the Nifty Bank and Reliance Industries. But on the flip side, IT continues to feel the pain. The Nifty IT index ending lower by over 1%, and you had large cap IT names weak in trade. So TCS corrected 1%, Infosys 1.5%, HCLTech, Wipro, LTI, Mindtree all down and out. So IT continues to remain the weak spot in trade. But outside that, metals made a bit of a comeback. I think they were under pressure for the last two trading sessions, but today the metal index rebounded. Tata Steel up and about, Hindalco gaining 1%. HDFC Life was your top Nifty gainer. Strength in ITC, price hikes on the annual, and ITC was one of the big stars. And you also had moves in some of the other smaller cigarette-related companies like Godfrey Phillips. Bajaj Auto, M&M gaining. Axis Bank, Nestle India also higher. On the way down, ONGC, Eternal. Outside of that, the IT names were weak in trade. Mid-caps had a good session. Mid-cap index up 0.5%. Small-cap index also up 0.5%. And the advanced decline ratio ending marginally in favor of the gaining side. But we'll take that. 2,400 stocks advancing for 2,100 stocks declining. That brings us to a close and closing bell. But don't go anywhere because Markets Forward will prep you up for tomorrow's trading session. Stay tuned. Markets end in the green for the third straight session, ending near the day's high. The Nifty settles above 25,800. Broader markets outperform.
Shares of Indian IT companies fall in trade. The decline comes amid a global sell-off in software stocks after Anthropic's new launch, reviving concerns about AI's disruption across the sector.
Mid-caps outperform with select stocks seeing sharp moves. E2E network surges after the NVIDIA tie-up for AI factories. Orubindo Pharma slips on serious US FDA observations at one of its units. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I am Reema Tendulkar, and with me is Mangalam Malu. And Mangalam, another good session. Barring for the pain the IT sector is feeling, the rest of the market held up well. The rest of the market held up well, actually added to the gains as well that we've been building on over for the last two trading sessions. The good part is on Monday, we crossed the 20-day moving average. Today, we crossed the 50-day moving average as well. So now all eyes will be whether we sustain above these levels and go past that 26,000 mark or not. For that, the IT pack has to do its bit, because today it was under pressure. Yesterday, it supported the frontline index, but the IT pack was down about 1.5% for the index, though there was recovery from the lows. Two things that did extremely well in today's trading session, particularly in the second half. We had the Nifty Bank, which held out for the bulls, so ended about 0.6% higher. And the second one was Reliance, another Nifty heavyweight, ended at the high point of trade, and that explains why the market moved higher towards the end on the frontline index. The mid-caps as well did fairly better. The index was up around 0.5%, with advance decline firmly in favor of advances at around 1650 versus declines at around 1300. Okay, let's also tell our viewers what we've lined up on the show today. We'll start with the top movers of Shakers. Sudarshan joins in. IT stocks, Orubindo Pharma, ITC buzzing in trade. What's driving them? We'll get you all the news and analysis coming up, and then the top corporate voices of the day. But first up, it's over to Gaurav now. He's at the big wall with the top movers and Shakers of the day.
Well, yes, if you look at movers today, let's not forget about the Nifty metal segment, because yesterday, for the last 2 days, in fact, we saw Nifty metals were actually suffering, but today we saw some bounce back, especially the names like Hindustan Copper, Lloyd Metals, Jindal Stainless, Tata Steel were some of the top gainers. Apart from that, let's not also forget about PSU banks, because as Mangalam mentioned, Nifty banks was up, and the main reason, if you look at PSU banks index as well, it is up for the third consecutive day. If you look at constituents like PNB, IOB, Maharashtra Bank, Union Bank, all of these banks were up in trade. And in fact, if you look at the index itself, none of the constituents were in red. Other than that, let's talk about the cigarette names in the likes of ITC and Godfrey Phillips. If you look at Godfrey Phillips, in fact, it actually hit its upper circuit at 20%. And the reason being that there is talk that the price of cigarette is going to get increased. NDL Ventures, if you look at this company specifically, now this also hit its upper circuit, and the reason being that CCI approved merger with Hinduja Leyland Finance, and that is the reason why actually stock reacted in a positive way, because market has taken it in a very positive way, given that the CCI has now given its nod. On the flip side, if you look at Nifty IT, now there is AI summit which is going on, and yesterday we saw Indian IT names were actually up in trade, but today we saw some fall in these names in the likes of Persistent, LTI, Mindtree. If you look at Wipro, Infosys, all of these stocks actually were down more than 1%. If you look at some pain stock, there also we saw some pain point building up. And if you look at the reason, Macquarie recently wrote a note where they said that there will be some moderated pace of recovery in second half, and they believe that third quarter EBITDA miss was one of the reasons why they have cut down their target price. And as a result, if you look at these stocks, they also suffered some kind of pressure in a day-to-day. So all in all, it was a day for gainers and losers. Although Nifty has ended at a higher note, we also saw some losing side, specifically from the Indian IT names in a day-to-day.
Right, Gaurav, thanks a lot for that. So those were the list of all movers and shakers in today's trading session, but IT continued to be the flavor of the day today on the downside on account of an AI-led uncertainty. But Reema, is it overdone?
Well, it's hard to say if it's overdone. It's really now up to the companies to execute on it and how quickly they can do. As of now, the AI revenues for the IT companies is not very large. Infosys said yesterday it's 5.5%, which ties in with what TCS and HCLTech have also quantified. So overall, it's about 4 to 5%. Brokerage is largely bullish, though, on Infosys. 38 out of the 52 analysts who track Infosys have a buy call. And there are 5 key reasons we can think of when you compile and look at the brokerage calls, why they're bullish. One, the AI opportunity is there. But as I said, it's up to the companies now to execute. Infy said the AI-first services services opportunity is $300 to $400 billion by 2030. Two, data modernization is indeed a tailwind. If you have to use AI at scale, enterprises need to clean up their legacy systems in order to use the AI tools. So that's a big, big opportunity. The third one is the tie-up that Infosys had with Anthropic is a step in the right direction. Just in the near term, FY27 is going to be better than FY26. And there is that valuation comfort also because stocks are trading now after the correction lower than the long-term average multiples. But that said, there is a disconnect between what brokerages are saying and expecting and what the market is telling you. The index, the Nifty IT index is down 15% in the month of February. Individual stocks are getting hammered, mid-caps also. And it's pretty close now to its 52-week low, less than 5% away from its 52-week low. And the pain is global. It's not just domestic. If you look at the global software ETF, iShares, that's down nearly 22%. And the other problem is also on the jobs front. We were just taking a look in the 9 months of FY26. The large 4 IT companies' total headcount is down by more than 700. It's an account of TCS, but at least as of now, on account of the macro weakness and AI disruption, there has been a net reduction in jobs rather than a net accretion. We'll find out what happens in the future. For now, the takeaway seems to be there is an AI opportunity, but can we capitalize on it? And to what extent? We had a chat with Sunil Kaul of Goldman Sachs and Kenneth Andrade of Old Bridge Asset Management to understand their views on the IT sector, where we're headed. Listen in.
I think there has been a relentless selling and indiscriminate selling of the software companies because global investors are basically questioning the terminal value of these companies. In the US market, the real issue is not just the terminal value, but the margins for these companies are also at record highs. And so in the next few quarters, until we figure out who is kind of winning, how the business moats are, what the pricing power for these different sectors are, probably there are still going to be uncertainties around this. And so we are not advising clients to buy into the global software companies yet.
This is not status quo. This technology change or this automation is not status quo for a lot of businesses. And I think that's what the markets actually are reacting to. So from a standpoint of just IT services, it's not very clear how companies will adapt and how fast they will be able to adapt. But there will be a lot of uncertainty on how these businesses will meet any kind of growth trajectory, at least in the near term. One thing I must say is completely in favor for these companies is that historically they are quite comfortable in terms of where their valuations are. Extremely comfortable in terms of where their valuations are. But with all the uncertainty around, I'm not too sure that will be the best part of the marketplace to be in.
All right. So to take this discussion forward, Mayuresh Joshi of William O'Neill and Shrikant Chavan of Kotak Securities join in. Mayuresh, a difficult question once again. What happens to IT? Because on days, it's oversold. Some news of tie-ups come by and it improves. And now, as we speak, there is some fresh threat which is coming in as well. So how does one look at this?
Afternoon, Mangalam. No, I think it's a catch-22 situation, right? IT revenues, AI revenues, still a small portion of IT companies as we speak. But again, as Rima explained it very nicely, I think the expectations in terms of having a very clean data set, and that is what we were discussing because we internally had an AI summit at William O'Neill over the last couple of weeks. And the entire perspective was that clean data probably needs to be presented so that it can be analyzed and deciphered in the manner that one needs to. And therefore, I think IT companies should come back in focus. But they also should be upping their game in terms of creating those niche expertise across layers, whether it's agentic AI or otherwise. We probably presented itself in terms of competition. Having said that, I think what happens in terms of pricing, what happens in terms of new order wins, at what price and margins do they come in? Is there some element of intensity happening on that front? Is there an accelerated CapEx spend that probably happens in terms of not just upskilling its own employees, but also ensuring that they probably are in the right areas and therefore spending in terms of either organic or inorganic growth to probably stay in lieu of competition is going to take some element of toll in terms of margins as well. And is the street ready for that in terms of what they were delivering in the past? And some changes, if that, if any, might happen going forward, which might lead to some element of de-rating in terms of forward multiples. And that is where the confusion lies. Our own sense, Mangalam, is that it's a wait-and-watch approach. Let's see what developments happen. But till that point of time, structurally, I think the price damage is largely done for the sector as a whole. It might just go through a time correction and price correction as well.
All right. Thanks a lot for that, Mayuresh. We'll come back to you for more, and Srikanth as well. But shares of ITC rallied after a UBS report came by on cigarette price hikes. Remember, we had been talking about how price hikes were imminent out here after the near 30 to 40% increase in taxation that came by, which would result in these companies increasing their prices by anywhere between 25 to 30% as well. And that's exactly what is taking place. It's been carried out in different batches, given the different lengths and different cigarette parts of their portfolio as well. And the UBS note that came by, they have a target price of 395 rupees. They've cut their target from 420 to 395. But given the price correction that we've seen on the stock already, they maintain their buy rating. And at the same time, they say that distributor checks do indicate that the price hikes are now arriving for, say, something like the 84mm cigarette. There has been an increase from, 17 rupees to 24. That's the steepest price increase. On the others as well, you have, the 74mm, which has increased from 64mm has increased from 6 rupees to about 7 rupees. And the 69mm as well comes up for you, where there is about 9.5 rupees per stick. They expect the price out here to increase to about 12 rupees as well. So all these factors mean that the company has been dynamically increasing their prices. On premium cigarettes, it's been a lot more, but on the volume-sensitive cigarettes, it's a lot less, which implies that the impact on both volumes and EBIT would be minimal, and that exactly tells you why maybe there could be some positive move on the stock going forward as the street digests the impact of these price hikes and the tax hikes as well. And it's not just ITC. ITC is obviously the market leader, but when ITC does that, the impact of that can be felt on names like Godfrey Phillips and the others as well. Godfrey was up around 20% too. So ITC up 2%, Godfrey was up 20%. Srikanth, ITC from its 52-week high, it's seen a big correction, but from its lows, it's slowly building on some momentum, 9-10% off its lows, recent lows. Do you think it's tradable?
So while looking at the pattern of ITC, it is like it was under a lot of pressure. It was falling consistently. But since last almost 10-15 days, if you see the technical pattern of it, then there has been like some consolidation, and eventually the stock has broken its upward boundary. So while looking at the entire sell-off and now there is a consolidation and recovery, I'm of the view that it's a pullback move that we are witnessing, and up to 345, 350 is not ruled out. We can see this particular upward activity. There we should look for taking or reducing some positions. But at these levels, yes, even at these levels, we can expect at least 3 to 4% sort of upward activity in the near term.
3-4% upward activity in ITC. Let's talk about Orubindo Pharma that fell in trade after the US FDA issued observations for one of its Telangana facility. Manufacturing unit, Unit 7. Ekta joins in with the key highlights, the key observations, and what the analysts made of it.
Well, yes, the Orubindo stock was in focus in today's trading session because the details of the Form 483 or the observations which were issued to their company's Unit 7 have now been made public. Now, the observations ranged anywhere from the equipment and the utensils not being clean, which is basically an observation with regards to drug manufacturing, as well as appropriate controls not exercised over computers or related systems, and complaint records, etc., being deficient. Now, analysts, however, have a different view when it comes to these observations which have been issued. So, for example, one set of opinions is that the observation such as number 6 points to data integrity. The 6th observation in particular says that the microbiologist potentially falsified sample collection data. Hence, the view is that one cannot rule out an official action indicated status, which is basically indicative of the idea that this particular unit could be under the US FDA scanner, or maybe even a possible warning letter in the future. The bull case with regards to this is that the observations seem more procedural at this point in time, no serious data integrity or patient safety. The official action indicated status, however, cannot be ruled out at this point, but a possibility of voluntary action indicated status is also a likely outcome. The escalation to something as serious as an import alert is highly unlikely. Now remember that this particular unit manufactures oral solids, and in the recent past there have been 2 units that have been inspected. So Unit 7 as well as Unit 3, which was inspected and issued 11 observations. Unit 3 is already under a warning letter, and the street would be watching out for that very closely as well in terms of an outcome. Both of these, Unit 7 and Unit 3, according to analysts, comprise of around 33% of Aurobindo's total drugs which they have filed for in terms of the US market.
Mayuresh, I already asked you about Orubindo Pharma, so let me ask Shrikant then. What is the call on Orubindo Pharma and any particular pharmaceutical stock on which you'd like to share your views?
Yeah, I think like most of these pharma companies have spent a lot of time within the broader range, and base part is that most of these companies are very close to their immediate resistance level. Yes, today because of specific news flow, some weakness in Orubindo Pharma, but otherwise if we consider the entire long-term pattern of it, then I'm of the view that gradually it is heading higher, and eventually it will start sustaining above the mark of 1200 or 1250. So there also I am of the view that it's an opportunity for medium-term investor or positional investors to take some long position. But in next, if we have to take the view on this sector, then eventually maybe in next 2-3 months of time, we are going to see upward breakout in this sector, and we can see trending move in almost all the pharma companies. So for the time being, it's a consolidation period, but it's an opportunity for positional investors to invest into it.
All right, and Mayuresh, is there any other pharmaceutical stock that you like?
So Strides Pharma is something that we've kept on our radar, Mangalam. I think strong performance every passing quarter that we've probably seen. The US business, both in terms of absolute numbers as well as expectations of few key launches, might keep the US business on a very strong footing. Outside the US, the rest of the world as well as India, I think also probably seems to be very decent. So I think EBITDA margins compared to the rest of the pack, expectations of few key launches over the next few quarters should keep revenue growth and earnings growth in check. And the rating and rankings just look fine. So this is one stock we've kept on another.
All right, Mayuresh, Shrikant, thank you so much for joining in, giving us your views on a whole host of stocks and sectors. We take a leave here, take a short break, come back. You don't go anywhere, because on the other side, we'll get you all the top corporate voices and what they said here on our channel. Welcome back. GV Prasad of Dr. Reddy said that most regulatory issues over its weight loss drug in Canada are resolved and a launch is likely in May. This was in an exclusive conversation with CNBC TV 18. He said that the company expects double-digit growth in India to continue. Listen in.
There is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch.
Any kind of site
So
inspection?
usually they may want some information, things like that. There's no inspection outstanding. It is just more information. Information requests we get, and then we submit the information.
How big or how lucrative a market would Canada be?
So Canada, for the initial time when we will be alone in the market for a few months, will be very significant. After that, competition will come in, like any other market, and then we'll start seeing price erosion.
Okay, so let me understand this. When you enter the market initially, assuming.
We are assuming. That's an assumption,
Yes.
and we could be wrong. But as far as we know, we believe that we are close to being the only one being approved in the next few months. Somebody may follow after that, and then new approvals may come in. But we believe that we will have some time alone. That would be a nice period for us.
What are we working with when it comes to the emerging markets? Turkey, Brazil, China, all of them?
So we plan to launch in whichever market we have access to, where the patents allow us to launch, and also where we've registered the product or where we have a partner who's registering our product. So we've done a number of registration submissions. We are awaiting approvals, and as soon as they get approved, we'll start launching.
If you had to prioritize the markets at this point in time in terms of how lucrative they are for semaglutide, what would they be, including India?
In the near term, Canada is the biggest opportunity, but that's subject to many things.
Yes.
So if it works out, if it plays out, it could be a sizable market. India, the sheer volume will be high because of the number of people in this country. But at the same time, India will be a very competitive market. There are at least 25 others who are going to launch on day one here.
All right, that was Dr. Reddy's, but we did get a bunch of corporate voices of the day as well. Wakefit Innovations, the stock was up 20% this month. The company expects steady margin improvement led by better capacity utilization in their furniture business and operating metrics. They also said that their furniture segment is likely to add 400 to 500 basis points to their margins, even as competition remains intense in the mattress segment, for which they have to increase their ad spends, and the growth estimate was revised downwards to just near 20%.
TVS Supply Chain says that supply chain costs account for nearly 8 to 12% of the overall market. The company tells CNBC TV 18 it will evaluate opportunities with Italy's ALA Group on a project-by-project basis following an MOU to tap into India's $28 billion aerospace and defense supply chain market. Well, with that, it's a wrap in this edition of Markets Forward. Thank you very much for watching. We'll be back with more news and updates on the other side.
and welcome to Business 360. I'm Arundhati Ramanan, and here are the headlines that we're tracking for you this evening. Markets end in the green for a third straight session. Nifty ends above the 25,800 mark. All sectoral indices except IT eke out some gains. Stocks listed on the Nifty IT lose a market capitalization worth 32,000 crore rupees. There is no need to panic over AI, says TCS CEO Krithivasan, adding the fear-mongering is overdone, expects the company to straddle the arc from intelligence to infrastructure, also hints at potential acquisitions. That's an exclusive. US chipmaker Qualcomm believes India can become the fastest-growing AI nation in the world. President Cristiano Amon highlights India's ability to leapfrog technological stages as he pledges $150 million for AI startups. That's another exclusive. The US government is open to changing the enforcement of tariffs imposed on steel and aluminium, says Trade Representative Jameson Greer. 50% tariffs were imposed last year in a bid to curb imports from China, but many companies have agreed to the duties are complex and costly. French President Emmanuel Macron wraps up his Mumbai visit and heads to Delhi to attend the AI summit. The finance minister of France says there is a lot of French investments in India, but not enough Indian investments in France. Urges Indian companies to invest in engineering, research, AI and other sectors. G.V. Prasad of Dr. Reddy says most regulatory issues over its weight loss drug in Canada are resolved and a launch is likely in May. Expects double-digit growth in India to continue. Hints at potential acquisitions in consumer healthcare. That's another exclusive. Government's telecom department nudges Adani-backed Navi Mumbai airport to allow telecom companies to deploy network infrastructure at its premises. The intervention from the government comes after telcos flagged that the airport authority had denied them right of way to deploy infra. Representatives from Noida's Galgotia University booted out of the AI summit after a controversy over RoboDog. The university tried to pass off the RoboDog made in China as their own innovation. We will come to that and much more in just a bit, but first to the market action of the day. Market registered its third straight day of gains. The Nifty 50 closed above the 25,800 mark, with Reliance, ITC, Tata Steel, Axis Bank and L&T emerging as the top contributors. All sectoral indices except IT eke out some gains. Indian IT stocks snapped a two-day winning streak after Anthropic launched a new model, rekindling worries surrounding the AI disruption. The Claude 4.6 is Anthropic's second major release in less than 2 weeks and will serve as default model for its chatbot and co-work productivity tool. Several brokerages are, however, upbeat on top Indian IT companies on the back of a host of the ups to leverage the AI opportunity. So where do Indian IT companies feature on the AI pecking order? Reema Tendulkar is here with all of those details. Reema?
Thank you very much for that. Indeed, generative AI, advanced AI may be the buzzword right now, but the actual revenue contribution from these technologies is still in very early stages. Now, yesterday, Infosys at the AI Investor Day said the generative AI contribution stands at 5.5% for the company, which is pretty much in line with TCS at 6% and HCLTech at nearly 4%. But remember, the definition of AI revenue may vary across companies, which makes direct comparisons tricky. But the question is, how will you read this number, AI contribution at 5%? Would you be disappointed because AI has been around for some time, but still the revenue contribution is 5%? Or will you look at it as a half glass full and say, well, it's only 5%, which means look at the significant headroom for expansion from here on. Now, brokerages is still bullish on Infosys. In fact, overnight, a lot of calls came through. We analyzed them. There are 52 analysts, out of which 38 have a bullish call, 12 of them hold, and 2 of them have a sell call. Global brokerages like JP Morgan, Jefferies, UBS, HSBC, CLSA all reiterated their positive call. For JP Morgan, the target price stands at 2,050. For CLSA, it's 1,779. And the bullish stance by these brokerages rests on 5 key drivers. One, the AI-first services opportunities. That is expected to expand sharply. Yesterday, Infosys said it's a $300 to $400 billion opportunity by 2030. Secondly, data modernization is emerging as a key growth driver. Enterprises need partners like Infosys and others to clean, organize, and modernize their legacy data before you can actually deploy AI at scale. Third, even Infosys' collaboration with Anthropic, the strategic partnership, does show that the company is taking steps to remain relevant in the AI ecosystem. Fourth, just talking about the near term, here and now, FY27 macros are looking better, which means FY27 in all likelihood is going to be better than FY26 for all the IT companies. And finally, fifth one, the valuation comfort. For Infosys in particular, it's trading at 18-19 times forward multiple, which is cheaper than the long-term average multiple of about 20 times. So the message from the brokerages is clear. They're bullish, but it is disconnected with what's happening in the market. The Nifty IT index continues to see pain. It's down 15% in the month of February alone. And it's now very close to its 52-week low, less than 5% away. And this is not a domestic story. If you look at the global ETF for software, that is down 22% on a year-to-date basis. But that's about the numbers and the markets. The other worrying thing is on jobs. Now, yesterday, Nandan Nilekani said that on account of AI, 92 million jobs will be lost, but 170 million jobs will be created. But if I just look at the Indian IT companies, in the first 9 months, more jobs have been lost than created. The headcount for the top 4 IT companies is down by 700 plus in the first 9 months. It's on account of TCS and the restructuring that they did. But the question for the economy remains that if on account of AI, we do see a decoupling of revenue and jobs, then what happens to job creation? Back to you.
So the IT index, they're still feeling the pressure. Thank you so much for those details, Rima. From equities to the commodities market, oil prices improved marginally on uncertainty about a positive outcome from US and Iran's indirect talks. However, reports about rising output from Kazakhstan's primary oil field limited gains. And back home, the India AI Impact Summit has been extended by a day till the 21st of February following a large turnout. The summit has also entered the Guinness World Record for the highest number of student pledges within 24 hours for responsible use of artificial intelligence. Union Minister Ashwini Vaishnav received the honor. Speaking to CNBC TV 18, Vaishnav said that the venture capital firms have committed $17 billion for India's deep tech ecosystem. Meanwhile, TCS CEO K. Krithivasan dismissed fears of an AI-led disruption in the IT industry. He said there was no need to panic because AI will help expand the scope of work. Take a look.
Over the coming 2 years, we can expect about $200 billion investment in the AI infra layer. And simultaneously, we can expect more than $17 billion in VC funding for the startups and deep tech, especially deep tech startups, in solutions, in applications, in the way AI would be used.
There's so much happening and there's no need to panic. You have to think, sit back, relax and think properly. There's so much of more work to be done. Every time there's a disruption, the work expands. And the good companies will participate, take a forward-leaning approach, invest in that, and they should be able to increase the pie. It's again based on a larger scheme. We believe that you will be able to participate more in the AI ecosystem if you operate across multiple layers. We are looking at participating right from the infrastructure layer. There's an infrastructure layer, there's a model layer, there's an application layer, then there's the intelligence layer. We want to increase our participation in each one of those layers. That's why you see we participating with TPG, then signing up with AMD. We also signed up with some of the design companies. So that's the overall plan.
On to a CNBC TV 18 exclusive. US chip maker Qualcomm believes India can be among the world's fastest growing AI nations. Speaking to my colleague Shireen Bhan, the company's president and CEO Cristiano Amon highlighted India's ability to leapfrog technological stages as he pledged $150 million for AI startups. Amon added that India's AI opportunity lies in deploying tech at scale across its vast population and industries.
How the entire economy of Asia is going to get developed. I think India has an opportunity to be one of the fastest growing AI nations in the world.
We do have the talent. That's our biggest advantage. But you truly believe that AI is going to be the fastest AI nation?
I think you're going to have different models going to be developed. There's going to be global models. They're going to be Indian models. They're going to be available. But then the real value is how quickly can you deploy this across industries? How many people can you reach with the technology? How many different things? And I think that's the opportunity for India.
So you've just announced a special fund for India to invest in AI-specific companies. Take us through that.
Look, we have a long history here in India. We have a significant part, I think, of Qualcomm also here in India across multiple locations in Bangalore, Hyderabad, Chennai, Noida. We'll continue to expand, of course, Delhi, Mumbai. We have been here into every transition of wireless, and Qualcomm has been as enabler. We are an enabler of companies. I think we provide technology, we provide chips for companies to develop their products, their applications. And we believe that we've seen how that has developed over time in India, the number of startups here. And because we believe so much in the potential, I think, of the country, and how AI is going to be transformative, we are announcing, a new fund for a ventures team to invest in India startups and founders. They're really going to be building this future of AI alongside us, and I think we're excited. I think it's another step in our journey with India.
And it's not a small number, 150 million.
It's significant for startups, especially for companies that have a good idea, have a vision, and want the funds and support. And the other thing that goes beyond the funds is when we invest in some of those companies, we also help them with the Qualcomm ecosystem, access to our engineering capabilities, our development platforms, our chips. And I think when I was in the breakfast, I met CEO of companies that were actually started when a few years ago when we're just starting, and they're now becoming significant companies. I think that story is going to repeat itself with AI.
NVIDIA is expanding its footprint in India by partnering with venture capital firms to support the country's fast-growing AI ecosystem. In a statement, NVIDIA confirmed its collaboration with VC firms, which include Peak 15 Partners, Z47, Elevation Capital, Nexus Venture Partners, and Accel, to identify and fund startups across the country. The move follows increased interest from venture capital investors in India's strong public listings market. NVIDIA currently supports over 4,000 Indian AI startups through its global startup program. Large language model developer Sarvam AI has unveiled its first homegrown foundational models that it says is tailored to India's languages. The Bangalore-based company announced two models at the AI Summit in New Delhi, Sarvam 30B and Sarvam 105B. These models are built to be used through voice commands and are accessible in 22 Indian languages.
So we have been releasing models already, which do very well on Indian languages. We are far ahead of other models in terms of the nuances that language brings in, and India is, of course, a hard benchmark in terms of AI for languages. But the other thing is, we also want to be super competitive on other tasks, like, for example, math and programming and calling tools, etc. So we want to build for all of that, but Indian language is a specific focus.
Representatives from Noida's Galgotia's University were booted out of the AI Summit after a controversy over a robo-dog. The university claimed that the robo-dog made in China was their own innovation. The robot showcased by the university as Orion was recognized as the Unitree Go-To made by a Chinese robotics firm. Speaking on the controversy, METI Secretary Krishnan emphasized that only authentic work should be showcased at such events.
It's essential that a code is followed there. Our intention is never to encourage somebody to, plagiarism or anything of that kind cannot be, misinformation cannot be encouraged. So we don't want a controversy around this. We don't want controversy around exhibits in the expo. So I'm not getting into whether they are right or wrong. We just don't want a controversy.
On that note, it is time for us to head into a short break. But coming up, the U.S. government is open to changing the enforcement of tariffs imposed on steel and aluminium, says Trade Representative Jameson Greer. More on that when we come back. Stay tuned. Welcome back. You're still with us on Business 360. The Telecom Department has asked the Adani Group to allow telecom companies to deploy network at the Navi Mumbai airport. The department has said that the Telecom Act mandates non-discriminatory processing of right-of-way applications as the airport qualifies as a public entity. Remember, telcos have alleged that the airport operator asked them to utilize its own exclusive in-building telecom network at high charges. French President Emmanuel Macron has headed to Delhi to attend the AI summit after wrapping up his visit to Mumbai. France's finance minister has said that while French companies have invested in India, there have not been enough Indian investments into France. Speaking to CNBC TV 18, he urged Indian companies to invest in engineering, research, AI and other sectors.
Well, we can certainly do better on both fronts. Exports and imports, they're okay, but, you know, we're down the list of trade partners and we should be doing much better both directions, and this is one of the places where it should happen. But also in terms of investment, there's a lot of French investments in India. There's not enough Indian investments in France. We have great energy that's low carbon and cheap. We have fantastic engineers. We have great infrastructure. We have fantastic social model. So Indian investment should come to France and help French business grow, as French businesses have come here to help Indian business grow. There's a lot of win-win to be done.
Google CEO Sundar Pichai met Prime Minister Narendra Modi on the sidelines of the AI Impact Summit in New Delhi. In a social media post, PM Modi wrote that they talked about the work India is doing in AI and how Google can work with Indian students and professionals in this field. Pichai is expected to deliver the keynote address at the summit on the 20th of February. His visit comes months after Google announced its plans to invest $15 billion to build an AI data center in Visakhapatnam. On to a CNBC TV 18 exclusive, Dr. Reddy's Laboratories MD GV Prasad has said that most regulatory issues surrounding the company's weight loss drug in Canada have been resolved and a launch is likely in May. Following this, the company will look at expanding into other markets as well. Speaking to CNBC TV 18, he said he expects double-digit growth in India to continue. Prasad also hinted at potential acquisitions in the consumer healthcare segment.
There is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be a timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch.
Big or how lucrative a market would Canada be?
So Canada, for the initial time when we will be alone in the market for a few months, will be very significant. After that, competition will come in like any other market, and then we'll start seeing price erosion.
Okay.
Air India and the Lufthansa Group have signed a memorandum of understanding to set up a framework for a joint business partnership. The agreement will cover Air India and Lufthansa Group's carriers and subsidiaries, including Air India Express, Swiss International Airlines and Austrian Airlines, among others. The airlines plan to fly more passengers between India and Europe and collaborate on areas like scheduling, route planning and IT infrastructure. Shares of Ola Electric rebounded in trade today. This after the company clarified that the Bombay High Court stayed an arrest warrant issued against CEO Bhavish Agarwal in Goa. In a statement, Ola Electric said the High Court held that the Goa District Consumer Disputes Redressal Commission had exceeded its jurisdiction while issuing the warrant. The commission had issued the warrant after Agarwal allegedly failed to appear before it in connection with a customer complaint regarding an Ola scooter. U.S. Trade Representative Jamieson Greer says the United States is open to tweaking how its broad tariffs on steel and aluminium are enforced. Speaking to CNBC, Greer indicated that while the core tariffs would remain in place, the administration is considering changes to ease compliance burdens for companies. He also claimed that the tariffs on the two metals led to the opening up of more shipping lines in USA.
Remember, we've shipped 300,000 million metric tons more this year than we did the year before. We've produced more than Japan. There was some reporting over the week about adjustments there. I mean, you may want to sometimes adjust the way some of the tariffs are applied for compliance purposes. I'm not giving you double talk here. We've heard stories of companies that have had to hire extra people for compliance. We're not trying to have people, do so much bean counting that they're not running their company correctly. The president's tariffs on steel and aluminum have been very successful, shipping more steel than ever, opening up new steel lines, new aluminum smelters announced. So clearly those are going the right direction. They're going to stay in place.
And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV 18.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money, your weekly personal finance date with me, Surabhi Upadhyay. Now, 2026 has been anything but straightforward for investors, especially equity investors. The year has had its share of noise, its share of events. And when you're looking at market returns so far, just about a month and a half down into the new year, then the variance is huge. At the index level, the Nifty will tell you that it's only down by about 1%, 1.5%. But look at sectors. The IT index has been absolutely thrashed, down 14, 15% already. But then PSU banks have been doing very well. Overall, PSU stocks have done well. The CPSE index has been an outperformer. The metals rally is still continuing. On the flip side, again, there doesn't seem to be too much of conviction with FMCG. The FMCG index is down 6%. So in a market which is showing such massive divergence within how sectors are performing, within how stocks are performing, what are mutual fund managers doing? What are mutual fund portfolios looking like as we look at the entire universe as of now in the middle of February? Well, that is the very important analysis that we are going to focus on today. And to help us demystify this entire concept, we have with us Himanshu Srivastava, who is the Principal of Research at Morningstar Investment Research India. Himanshu, thank you so much for joining in. And I want to tell all our viewers that I think a lot of the analysis that you see on the Morningstar website about mutual funds, about what's happening in the portfolio, the way that fund is positioned, a lot of that is being done by Himanshu and his team. So Himanshu, first of all, thank you for taking out the time, getting away from your computer screen and coming to our studios today.
Thank you, Surbhi, for calling me. It's really a pleasure being here today.
So Himanshu, the idea really came because I was also going through your recent note where you've looked at mutual fund portfolios to try and figure out really what is the positioning. So let's look at this. For mutual fund investors, it's been a very tough 12, 15 months already.
Right.
They have been patient. They've not made too much of money. So in this difficult period, let's talk about first what you observed over the last 12 months, over 2025. How are mutual fund positioning portfolios and how are they really coping with a market that became very challenging?
Right. So when we look at the market being challenging, for example, for the year 2025, we have to look from the perspective that how the markets were before that. We have seen a multi-year rally in the markets post-COVID. We haven't seen much of a correction or significant correction in the markets. So 2025, when we look at it in comparison to previous years, it looks like a challenging year because investors didn't get a chance to make much of profit, much of gains. But when we look at from the overall perspective, it was a year of consolidation.
True.
Market is never a one-way street. It's always two-way. So when you have good years, multiple years, then there could be a chance where there will be profit booking, where there will be some consolidation. There will be some impact from the global as well, and that is what we have seen. So it was not a collapse. It was consolidation. The markets were volatile, but that's the nature of the market. One would expect it to be volatile, and how you use that around that. So, I think.
So go on.
I think one of the key highlights here is the role of the domestic investors, which have played a very good stabilizer role against FIs, where we have seen a lot of money moving out. Right?
No, absolutely.
The other aspect, and which is a positive one, is the emergence of large caps again. Right? So the markets were largely driven by mid and small caps for a long period of time. This time, large caps have actually done well and showed their importance, how important they are.
So what you're saying right now, what you're describing right now is what the market did, what stock prices did.
Right.
And yes, absolutely. It was a challenging phase for mid caps and small caps, and they were falling more than large caps. The question is, what did fund managers do in this time? Were they also moving away from mid caps and large caps? Have we seen Indian mutual funds now concentrate more of their holdings in large caps, or were they actually doing the reverse? They say you should actually be buying good stocks when the prices are falling.
Right.
So did Indian fund managers do that?
Right. So I think what we have observed among the Indian fund managers is that they are using a very calibrated approach, right? In terms of market segment, when we look at large cap, mid cap, small cap separately, then large cap definitely have increased in terms of exposure in their portfolios. Right. Mid cap.
This is across the board.
This is across the board. I'm considering some of those categories like diversified ones, where the managers have the flexibility to move around large, mid, and small caps.
Like the flexi-cap
category, for example, right? ELSS category, for example, focus category, for example.
Right.
In those categories, what we have seen is large cap exposure is definitely higher than mid caps and small caps. But when if you look at from the risk reward profile perspective, large caps have a very different risk reward profile compared to mid and small caps. Now, when you combine mid and small caps, then large caps can be 50 to 52%, but mid and small caps are not falling behind. Right? They are around 48% or 47%. So that is a balanced approach, wherein you are trying to use large cap as an anchor into the portfolio so that it provides stability, but at the same time, you don't want to miss out on opportunities in the mid and small cap space, right? So that if there is an alpha generation capability, you are able to capture it. So you're not going aggressive, but you are not overcautious.
So that ties into the point that I was asking, that throughout 2025, as mid-caps and small caps, SMIDs as they're called, as they kept on correcting, fund managers also were kind of loading up on the opportunity.
Right.
So you're saying diversified funds are fairly well balanced between
fairly well balanced
large caps and SMIDs. Got that point.
Yeah.
Now, overall, in just terms of risk profiling, again, because it's been not an easy year to get returns, I don't know if there's a measure to this, but just overall risk in diversified funds, did you notice the level of risk or the level of aggression come down, or did it go up? I don't even know if there is a straight line answer to this, but how do you describe it?
So when we look at the portfolio, I think the level of risk, what managers are trying to do is to curtail being over aggressive, adding more risk to the portfolio to generate higher returns. So there is a calibrated approach. For example, a lot of managers are bringing their portfolio slightly closer to the benchmark index, so they are not exposed to benchmark risk. So where they are expressing their conviction, they are trying to express their conviction in the way of stock picks, being selective, trying to build exposure in some of their high conviction stocks, rather than expressing their views on the sector front. They're not trying to take a sectoral risk that could add volatility to their performance.
Big, bold sectoral calls that, okay, let's go full up on cyclicals, full up on consumer. Those calls are not coming in.
Those calls are not coming in. The major calls are taken from the sector, from the stock perspective. And the sector, they are trying to analyze where the benchmark is, right? And based on that, they are trying to understand, then based on their macro view, where they can be slightly overweight, where they can be slightly overweight. The overweight and underweight positions are in the range of, say, ±2 to ±4%, which is a reasonable deviation from the benchmark index, but not very aggressive deviation.
Okay, so from what you're saying, that now as we look at 2026, I mean the rest of the year, number one, we've understood that portfolios are well balanced between large caps, mid caps and small caps. There's a fair amount of each of these categories in the portfolios. Mutual funds are not skewed too much towards any one particular market cap category. We've understood that point. Now, in terms of sectors, you're saying that most of the funds are being balanced and they're close to benchmarks. But if a mutual fund, actively managed fund, is being close to the benchmark, then is it really playing its role? Then isn't it just being very, very safe and behaving more like a passive fund than an active fund?
So I think that's the role of the active managers to do. I think one of the major things that the role of the active manager is to contain risk as well. At a time when there's no need to take higher risk, where the risk could be high, I think being slightly defensive is not a bad idea, because ultimately when there is a better positioning available, they will be able to expand themselves. They will be able to take bold calls. Right? It's not that all the managers taking defensive, but on a broader scale, they are slightly more cautious towards the risks that are there in the industry, and they are actually watching that, so that when an opportunity comes, they can build exposure wherever they want to.
That's an important point, right? You don't have to be bold all the time. Everybody doesn't have to be bold all the time. Smartness is also in knowing when you need to be conservative. So you're ready for that leap when the opportunity arises. That's a point well taken. Okay, Himanshu, now we want to talk about sector positioning. Like you're saying, most diversified funds are pretty close to the benchmark, but still there is a little bit of up and down here and there. I want to start by talking about what else but IT services. Like I said, after a fall of 12% last year, Nifty IT, it's again down 14%, 15% this year. So it's mayhem. What are fund managers doing in this mayhem?
So IT is a very, very surprising sector. And more surprising is there are managers who are having a very divergent view towards IT. Some of the managers are really focused towards the global risk that this sector carries in the current scenario. So, and they are trying to stay away from the IT sector, where they are underweight the benchmark, right? But there are certain valuation conscious managers who are finding it a good time to invest in, where they are more positive on the digitalization aspect, and they are having a slightly overweight position of building exposure, given that the valuations have fallen so much. So it's a very divergent view. You know, there are certain set of managers who are valuation conscious. They are finding it an opportune time to build exposure, but there are certain sectors who don't want to carry that global risk into their portfolio. So they will be building exposure in somewhere else and cutting down on the risk that is currently seem to be very, very prevalent in the IT sector.
So Himanshu, give us some names, some examples of funds where fund managers have decided to go and buy this dip and show some faith.
Right.
And then there would be other funds, I'm sure, where
Right.
people are saying, I don't want any IT. I don't care about the 15-20% drop. So any examples?
Yeah, so Nippon India Multi-Cap Fund or Kotak Large Cap Fund, these are some of the funds which are not really having a high exposure to the IT. They are using a calibrated approach.
Okay.
They're not going overboard on the IT sector.
Okay.
On the other hand, Mirai Large Cap, where they are seeing better valuations, in the past so far, they have been slightly overweight in the IT sector.
Oh, okay. So, different approaches,
Different
right?
approaches, yeah.
So,
absolutely.
Mirai and the fund manager in this case perhaps feels that it's time to get in and snap up some bargains. So, different views, very
views.
clearly divided views on IT.
Based on the style, based on the manager's style. Some of the managers don't like adding global risk, so they are avoiding. But valuation conscious manager, it could be an opportunity if they are seeing decent growth going ahead, maybe slightly long term. But if they see that this is a temporary blip and not the long term trend, then they will look at as an opportune time to build exposure there.
One more sector that I want to talk about specifically, because it's a sector that's been in the headlines, and that's commodities, in particular metals, right? And again, 40% increase in the Nifty Metals Index in 2025. Gold rising, silver rising, copper rising, aluminum rising, everything was up. So what did the fund managers do? Were they loading up on commodities and metals, or is it showing up in portfolios?
No. I don't think, the way we have looked at the portfolio, not many managers are actually loading up to this metal sector, largely because of the cyclicality. This is a very cyclical sector. This adds a lot of risk into the portfolio, right? It's very difficult to predict because it's not one of those sectors which is very domestically linked. It's linked to the global factors as well. So at this point of time, at this stage, what we have noticed is that a lot of managers are not actually using this the global risk into their portfolios.
Oh, okay.
Right? So they are very cautious towards metal sector. They are closer to the benchmark, slightly overweight, slightly underweight, but not adding too much of a position into the metal sector, given the cyclicality. I think
fund managers are staying away from risk.
Yeah.
The people who are willing to load up on risk are retail investors. They are rushing to gold and silver ETFs.
Yeah.
We are getting queries saying, how can I buy into copper now? So, it's the retail investor that's very happy to take risk.
Yeah.
And fund managers managing millions and millions of rupees worth of investments are being far more
I think
prudent.
From the investor perspective, we need to look at investors. A lot of investors don't really understand the risk aspect and how they can play out.
Sure.
A lot of in the recent times, what we have seen post-COVID, there are a lot of new investors which have come in. They have not seen the downturn that we have seen in the past like 10, 20 years. So I think the pitfalls could be really aggressive. So understanding risk-reward profile and understanding your own risk appetite is really important. Taking risk without knowing that whether you are able to take risk. Right.
They only ask about returns. We forget about the risk-taking ability.
Risk-taking ability,
right? That we remember later when we see a lot of red in the portfolio.
You would like to do bungee jumping, but whether you are capable of doing bungee jumping is a different question altogether.
It's all about Instagram. If it makes for a good reel, let's do it, right? But investing is not the same. So that's a short point that we always debate and discuss here on Let's Talk Money, that you need to think about these things very carefully instead of just following FOMO. On that note, let's take a quick break, but we've only just started with our sector analysis in terms of mutual fund portfolio positioning. We'll discuss a lot of other interesting themes, financial services, consumer stocks. How are fund managers looking at some of them? Back with it in just a moment.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week it's a full research session, a deep dive into how mutual fund portfolios are looking as we speak right now, middle of February 2026. Himanshu Srivastava of Morningstar is with us to help us go through this analysis. So Himanshu, we've discussed a lot of interesting sectors, right? IT, where there is a split house. Yeah. There are those who like IT, there are those who are completely staying away. Commodities and metals, generally fund managers are staying away. I want to ask you about financials. Because more often than not, I think 9 out of 10 people in the market will tell you, experts, and we speak to experts all the time, that you must invest in financials. Nobody says don't invest in financials. How are mutual fund portfolios positioned on banks, NBFCs, and the like?
Yeah. So structured growth, right? Financial services is a very structured growth story. So obviously managers have to be there. The other thing is that it's a very heavy weight in the benchmark index. Right. So it's very difficult to deviate to overweight or underweight with that within that sector. Obviously, managers will take a call whether they are looking at good opportunities, so they will slightly overweight, and they are slightly underweight. Now, as of now, what we are seeing is that the managers are slightly neutral to slightly underweight within that sector, right?
Okay.
But then
so
there are
explain
divergences.
that. No, I want to take a second so that viewers understand this because it shouldn't get confusing. That while almost all experts are unanimous and they like financials, they say that financial stocks, bank stocks, NBFCs are good to invest in. Himanshu is saying that overall mutual funds are a little underweight on financials. So explain the concept of being close to the benchmark, and then why are you saying that financials are underweight? Just the concept.
Absolutely. So if you look at financial services sector in the benchmark index, it's roughly around 33-34%, which is a huge exposure to a single sector.
So out of the Nifty, 33 to 34% of the constituents of the Nifty are financial stocks, banks, NBFCs, insurance, so on and so forth. Right. So the total Nifty weight, about 33% comes from financials. Right? So if you're going to be close to the benchmark, then you anyway need to have 33% financials in your portfolio.
Absolutely. So that's a huge exposure, right? Over and above that, the manager may top it up based on his conviction. They may take overweight position or underweight position. As of now, what we are seeing is that the managers are neutral to slightly underweight. Right? Now, within that also we see divergence as such. Like some of the managers are overweight and some of the managers are underweight. For example, Nippon India Multi-Cap Fund. Given the valuation concerns, the manager is slightly underweight the financial services sector. But then if you look at HDFC Mid-Cap Fund, right, there's a completely bottom-up stock picking style where the manager is selective in some mid and small cap stocks and the overall exposure to the financial services sector is slightly overweight. Now, the overweight position or the position of a sector is different in each and every index. For example, it will have a different exposure in the small and mid cap index. It has a different exposure in the large cap index. So a manager will map its exposure based on the index of that particular category. Right? A large cap category may have, say, 33-34% to financial services sector. But in the mid and small cap index, it could be slightly lower. So accordingly, managers match it and then top it up with their conviction level.
All right, got that. So that's a lot of interesting sectors, financials, IT, and metals and commodities. Now you tell us. I've asked you 3-4 sectors already. But is there any sector that's standing out now where mutual funds are really taking aggressive positive positions?
Right. Consumer cyclicals. Autos. Right? So there's a lot of traction that we have seen in consumer cyclical sector at this point in time. Almost all managers we have seen are slightly overweight between plus minus 2 to 4 percentage points. So that's a good, strong position. And I think that could also reflect the GST rationalization that has happened. That has also pushed the overweight position. Largely, managers are more looking at the consumption pattern.
Right? And these companies have delivered good numbers. Sales have been really good for the auto space.
Absolutely. So I think consumption is something that is building up.
So when you say there is, there is more positivity building up on consumption, auto is one part of it. What about FMCG? There are other pockets of consumption as well. Do you see it elsewhere?
FMCG, I think FMCG valuation also takes a lot of precedence. The FMCG stocks which are there, they typically carry high valuations. So the managers are there, but may not build exposure as exponentially as they want to because of the valuation concerns. So I think our valuation plays a lot of role in the FMCGs, but auto was slightly underweight or not performing well for a long time, and then it picked up. Then it turned around. I think that is the area where the managers were able to capture a lot of opportunities.
Anything else you want to call out? So consumer is one space where autos in particular, where there's positive sentiment building up and people are taking, people are putting their money where their mouth is essentially. Any other sector, any other interesting sectoral trend that you want to call out?
So I think one of the trends that has continued is like a lot of managers we have seen are staying away from highly regulated or valuation heavy sectors like utilities and energy.
Okay.
Utilities, we have still seen some of the managers taking exposure given that they are also considered as some defensive exposure, but energy has been perennially underweight.
Okay.
So this is another trend that we have seen in the portfolios of fund managers.
Okay, all right, got it. Very, very interesting. And my God, it must be difficult because I don't even know how many total funds, how many funds are under your coverage actually, Himanshu? Equity funds?
Means almost the entire universe, but as in we have different kind of coverages. As an analyst coverage, we cover roughly on 90 to 100 funds.
90 to 100 funds, and to look at all of those individual portfolios and see what's in, what's out. Hats off to you and your team.
Thank you.
So as we're coming to final thoughts, Himanshu, what is the advice you'd give out to investors? Because it's not easy, right? In the same year, you've had one sector crashing 15-20%. You've had one sector rallying 40%. So unless you are in a good mix,
right,
you are going to miss the rallies and you will definitely land up with the crashes, the bad apples.
Right.
So what is the advice to mutual fund investors?
Stay put.
Okay.
The idea is to stay put. These are short-term trends and market investing is long-term. I think the more investors are sticking to the basics of investing.
But stay put in what kind of funds? That's the biggest question.
I think that will define based on the asset allocation, the risk profile that they have. It's very difficult for me to tell that you invest in this fund and you don't invest in that fund, until I understand the basic profile of an investor.
Okay.
Right? I think when I talk about basics, not just basics, it's about basics of investing. You do your asset allocation, you understand your risk appetite, how much exposure you should have in large cap, how much in mid cap, and how much in small cap. That becomes very important.
So is it a good strategy to remain invested in diversified funds? Or would you say that this is the year to be in large cap funds or mid caps or small caps? I mean, how should you think about breaking up that investment?
So I think diversified funds should be a part of your portfolio because that is where the managers can take active call where they are seeing opportunity and where they are not seeing opportunity, they can overweight and underweight their allocation, large, mid and small cap, right? So they should be a part of your portfolio, but then that should also tally up with your overall asset allocation and risk profile.
Fair enough. Golden words, and they never go out of fashion, always make sense. Thank you so much. This was very, very interesting, Himanshu, and so much of analysis and nuances in terms of how mutual fund portfolios are shaping up in 2026. We hope to have you more often on this show. Thank you for joining.
Pleasure.
Thank you for joining.
Thank you.
Well, viewers, hopefully you found this conversation interesting. It was different, but the idea was to give you a sneak peek of flavor into what's going on with mutual fund portfolios. Keep sending us your feedback, comments, queries. Tell us what more you would like us to discuss. We'll see you with another theme next week.
Let's talk money. Tata AI Conclave, powered by CNBC TV 18.
Well, we do have N. Chandrasekharan right off the flight from Mumbai. Thank you very much. I said one of the problems that AI hasn't been able to fix yet is the Delhi traffic. So that job going to TCS now to try and address that. But Chandra, thanks very much for joining us. There's a lot of hyperbole around AI, the disruption it's going to cause, what it does to Indian IT services, and so on and so forth. Let's get the elephant out of the room to start with, and let's address that issue. The floor is all yours, and I know everyone is waiting to hear from you on that.
Straight.
Straight.
See, there is no question that AI is a fundamental technological change. So I have called it as a civilizational change. The way to look at AI is it's the next infrastructure change. If you go back in history, the steam engines was a big infrastructural change. Electricity was an infrastructural change. Internet was an infrastructural change. AI is the infrastructural change of intelligence. It is the infrastructure of intelligence. So whenever there is a infrastructure change that happens, always these questions arise. What does it mean? What is it going to change in the world? How do we adopt it? Will the world be the same? Will businesses exist? Who will get the lift? Who will go down? These questions have always existed whenever such a big fundamental infrastructural change happens. And AI is no different. But the point to learn from history is whenever an infrastructural change like this happens, it unlocks opportunities. Steam engines made coal very efficient. So we should use less coal. Actually, we start using more coal. Because there is a latent demand that gets created and that is never serviced. But the technology gives you that power to meet that latent demand. So it creates so much more opportunities. So we ride the wave. What AI is going to do, it is going to change the cost structure of diagnosis, translation, basic analysis, which will unlock so much more opportunities, so much more things to do which we have not been able to do before. All that will get done now. I am now broadly talking about across industries. I'm not talking only about IT services. I'll come to IT services. I knew, but I thought you will give me some space.
I will, the market may not, sir. I will, the market may not.
So the first point is that. The second point is whenever there is abundance of labor and there is high growth rate, cost goes down and the services demand volume goes up significantly. That's what will happen with AI. Cost will go down for the reasons that I said, but the demand will go up. Now coming to IT services, you should look at IT services as a big enterprise business. In this enterprise business, context is important. So, for example, if there is a phenomenal invention that happens in a refrigerator or an air conditioner, you as a consumer see that, and then you get super excited. You will just throw your current refrigerator and put the new one. That's not the way companies work. Companies have context. Companies have processes, customer, supplier, partner ecosystem, IT landscape, so many products, so many interfaces to be built. So you should look at IT services companies as integrators. What do we do? IT services companies integrate a technology. Take SAP, for example. So I used to code at a time when SAP was not there, or was not as popular, or Oracle, or anybody else, or a Salesforce. We used to build everything. Why? Even before that internet time, there used to be things like web server, app server, and all that. All of those things we used to hard code. So when these packages came, first thing is, okay, all these jobs will go away because you will buy this product, you put it, all these systems can be purged. You don't purge like that. To put a package, it takes, some people have done it in 4 years, some people are still doing it. So I think the way to look at it is, it will create enormous opportunities. AI is a very, very important multi-decadal change. Every company has to figure out, has to ask fundamental questions. What is my moat? If you're a B2B business, you're a financial services business, if you're a industrial business, if you're a retail business, the value proposition is different for each industry, and the value proposition for each company will be different depending upon where they are. And they will have to figure out their moat. And where is it that they will look for productivity? Where is it that they will look for new business model? Where is it that they will create a unique differentiator? And IT services companies will work with the enterprise customers. Whether it is a bank, whether it is Barclays, whether it is AC Bunkan, or whether it is any of the 50 other companies Marcus owns, right? So, or American companies, every industry. See, you take our Tata Group, for example. I get to see both sides. I've got one side where TCS has to ride this AI wave. Somebody else will say they have to survive this AI wave, but I feel that you're going to ride the AI wave. But you take other companies. You take a Tata Steel, Tata Motors, Tata Capital, I saw Rajiv somewhere here. Or you take our new businesses, where we are putting a foundry, where we are putting a battery plant. So those companies, industrial companies, we are going AI first. So digital came later. In most of the places, we put digital twin later to manage the existing footprint. But now we're creating the footprint first. So can we be AI first? What does it mean? Can we be first time right? Can we be absolutely precise in terms of how the fab will come up? High quality, low cost. Will it be a 20% or cost advantage we will have over anybody else because we are building it afresh as opposed to fitting AI later. So it's an enormous opportunity, and every company has to go through this. And we can talk about it, and I don't want to hog the rest of the panel.
No, we started ahead of you, so you're not hogging at all. But if I could rephrase what you said, it's not going to be so easy to throw out Indian IT services companies in the mix as is being made out to be. Essentially, that's the point that you're making.
Point. The second point, actually, the more important point I'm making is IT services companies, rather system integrators, will have a greater job, greater responsibility. So when we work with Barclays, we know the Barclays context. Yeah. We know their data. See, talk about data. Data silos, you talk about it. So all the AI models are really competing. There are 4 or 5 models in the US, and there are Chinese models, and there is Mistral. There are many models coming up, Indian models coming up. But they are they work on global data, World Wide Web and all that. But when you go to your industry, there is industry-specific data. Then when you go to a particular company, company-specific data, you take Tata Motors.
Yeah.
I need to, commercial vehicles, I need to talk about commercial vehicles data, the park in India for the last 30 years. And then there is so much more data which are very specific. So there has to be models built which are industry-specific and also company-specific before AI can really help you. And who is going to do all that?
Yeah. You. But Venkat, let's address some of the issues that were raised there by Chandra.
One other point, but the companies have, IT companies have to do a lot of work.
Yeah,
like every other time they've got to equip themselves with all the skills that are required. They've got to go through that.
Execution. The execution risk. Absolutely, the execution risk is going to be the key one.
Tata AI Conclave, powered by CNBC TV 18. Tata AI Conclave, powered by CNBC TV 18.
You know, Chandra, I want to address the India issue now because we are here at the India AI Impact Summit. And you truly do believe that India is going to lead in an AI era. Why do you believe that to be the case? Will we just be consumers, or will we also lead as far as development is concerned?
I am super bullish on India leading the AI wave in multiple dimensions. First of all, Indians are big AI optimists because we have seen what a digital public infrastructure has done to our country. There are at least two examples. The digital identity, second one is a digital payment. 50% of the world digital payments happen here. I mean, none of us can live without a digital payment today. And even a taxi driver doesn't take money. Nobody takes cash. Okay, so it's dramatically changed the common man's life. And yesterday you saw, I don't know whether how many of you saw, TCS put together this event with these rural women.
Yes.
I mean, it's just incredible. These are people who have no computing experience of any kind, no basic learning experience, and see what they were able to create in those 3 to 4 hours. Yes. They have been looking forward to this event and so on and so forth. It took last 1 month to assemble all these people to bring them to Delhi. But it's just incredible what empowerment it brings. So I think within India it will change. People talk about inequality. It's the biggest equalizer. See, all these women are going to be confident. See, what makes a person successful? It is not anything, it is confidence. If we can give confidence to every citizen, and if we can put an AI tool in the hand of every citizen, life changes. So it's going to be very, very profound. Very, very profound. We will see impact in healthcare. You take healthcare. So you take ASHA workers. They were basically data collectors. They've been given a now AI tool. Now they have become caregivers. They are already doing jobs for which they are not qualified. AI makes them qualified. So they are taking away jobs from the high-skilled people. So AI fundamentally does something very, very special. It is going to kill the barriers of high-value activities. So every person can operate at a higher level. Now coming to India for the world. I think if you see the AI infrastructure, yes, there is chips, which is very advanced. There are only a couple of people make it, and it's now dominant by NVIDIA, and maybe 2-3 people will make it, and more people will come over a period of time, maybe, but it's completely dominated at one level at this point in time. Then the data centers will come everywhere. It's not going to be only in the US, it'll come everywhere because the sovereign question you raised.
Yeah.
And so AI will accentuate those questions. See, COVID time and the whole geopolitical fragmentation created a similar situation for supply chain.
Yeah.
So supply chains are now getting rebuilt nationally, regionally, where resilience is overriding efficiency. In the AI world, privacy and sovereignty will override efficiency. It's going to happen. So you will find investments happening everywhere. There will at least be in Europe, there will be a European level data sovereignty. If not country by country, there will be European level. And I have already met in the last 24 hours people who are decision makers in Europe, and they are saying the same thing. Now you come to the next layers on top. Models. LLMs are very important, but models above LLMs are important. So we are already working on building an India-specific model. It's not so much model, it's data. So we can use any LLM, but the point is you need the data which are very specific. That will not be there in the LLMs. That will happen in every country. Then there will be industries. So all those capabilities, India will play a very, very serious role. And then agentic AI, domain solutions, all those things, India will dominate because the resource is there, talent is there. And as Marcus said, and Venkat said, all those people are here. So I think it's a big opportunity. India will has a very significant role to play. So I don't want to say who will win the race, etc. I think it is for us to make it count and play a very responsible role. Very responsible role. Because we can solve many healthcare problems which can be transported elsewhere. We can solve, in other way I will say, some of our problems cannot be solved. Thank God we have got this moment. Otherwise, how are you going to solve our sustainability problem? How are you going to solve our inequality problem? How are you going to have access? So many people don't have access to the market.
Yeah.
So thank God that this whole invention is happening. It is for us to take advantage and help ourselves and help the world.
You know, Venkat, I know you have a hard stop, so let me end by with you specifically and ask you, as a CEO today, and you talked about some of the emerging trends that the bank is looking at. Agentic AI, agentic commerce, of course, is going to be the next big thing that everybody is trying to get onto the opportunity. But from your vantage point today, if you were to leave this audience with what you're focusing on, the messages that you're telling your team, I was talking to the global CEO of Qualcomm this morning, and he said, we're all gladiators, we have to keep reinventing ourselves every day. What are you telling your team?
A few things, and I'm happy to stay. One is learn as much as you can, as quickly as you can. Right? If you don't have the skill set, at whatever level in the company you are, including the CEO, then it's not going to help you. The second thing is decide what are the limiting factors in getting AI implemented. And typically it is data, it's compute. The third thing is once you've got that, let's decide what are the important issues which we can address. And there will be a little bit of top-down, where we think of important business processes that we want to address across the company. I think there will be a fair amount of bottoms up, and I've seen success in this, where we have hackathons, where people come and they look at their little process and they make it better. But innovation comes from thousands of such improvements. And so I think that, by the way, will accomplish the learning and the adoption. And so that is what I have to say. You have to unleash it, you have to give the infrastructure, you have to give the capability, and you have to see where it lands. In big companies, in regulated industries, you've got to do it with certain guidelines. But you're building this upon the work that you've done with others, you've done in the past, and you've got to work with partners who understand what that is and who have the perspective of looking across different industries. Because I think the one thing I'll say, speaking for myself, is I actually don't know what's going to happen. But I think it's going to be important and big.
Every day you turn on the screen or you open a newspaper, you've got some tech CEO talking about the fact that if you look at a screen and if your job is on a screen, it's over. We won't need surgeons anymore, we won't need doctors anymore. And this is stuff coming from tech leaders themselves. So you can't blame people for having the anxiety that AI seems to be causing at this point in time. So what is going to be the influencer equivalent of the AI era?
So I think you've got to look at it from what I said before. Every time such a fundamental change happens, it is natural these questions come. Whether who is going to lose, who is going to win, how many jobs are going to... But except that, those days there was no internet, there was no social media, there was not so much happening real-time online. So these questions were kind of very subsided. But now, minute by minute, it happens and some questions get viral, then people get worked up. That's what happens. So I think, I don't want to underestimate the possibility of AI. it's huge, but it is not going to happen at every place at the same pace. There are places where it can make, especially in consumers and citizens, it can immediately make a difference. But when it comes to certain professions or when it comes to enterprises and large-scale public delivery projects, etc., there are a lot of other issues to think about. And on top of all that, there has to be a payback. Nobody is going to allow any of these companies to raise money at huge valuations. It's not going to happen. So everything has to happen.
Are we in a bubble?
Pardon?
Are we in a bubble already, you think?
I mean, see, bubble is a strong word, but every tech goes through this cycle where it reaches a very, very peak situation where we are going to say that everything is going to happen, everything else in the life is, that's not what it's going to be.
Yeah, but
it's going to...
to that point, if I may, I one observation, and that is that if you look into these huge technological changes, I think you've had financial crises appearing from time to time, but I don't think the underlying investment has gone away.
Yeah.
The markets, the financial markets have taken a lot of pain, but the underlying investment just continues.
So each company has to, will take a call and invest. So some places it will take time. It can take a long time. For example, see, let's be clear. I did my elective in artificial intelligence in 1985. Okay, and I forgot to speak about it until a few years ago. Right? Now, my two electives were artificial intelligence and robotics. Since now it's my 40th year after I did my 41st year after my elective, right? So now it's the time we are talking about it in full gusto.
So you're getting nostalgic, aren't you? 40 years down the line. But gentlemen, before we close, and I'm going to start with you, Venkat. Do you have an AI agent, a personal AI agent? If you did, what would you get it to do?
So I wish I did. I've been reading about this. But what I would get it to do is to find me the ways in which I can spend the times on things that my time on things that matter.
Okay, Marcus Wallenberg, do you have an agent?
No, I don't, and I should because I'm disorganized. No, but I'm really curious how to apply that, and I think we will all have agents going forward.
Not yet. Chandra, do you have an agent?
No, I don't have an agent, but I spend time every day playing with AI. And
what would you get it to do for you?
I still have to figure that out, but currently I am getting a lot of intelligence. Many things that I want to ask, I ask, except asking a strategy to reply to you.
Ladies and gentlemen, thank you very much to N. Chandrasekharan, Venkat and Marcus Wallenberg for joining us here this afternoon.
Tata AI Conclave, powered by CNBC TV 18. Tata AI Conclave, powered by CNBC TV 18.
I can tell you there's only one topic of interest, of debate, and everything centers around AI, what AI will do, and what's the potential, what enterprises are doing right now, what's the gap, and where are we in that gap at this point in time. So I think, but this is a broader conversation. This is not so much about one particular layer of AI. I'm just going to, Archana, apologies for this. I'm going to quote Jensen for one bit before I kickstart.
It's okay.
Yeah, just one time. So Jensen called AI a 5-layered cake, right? He said it was energy, chips, infra, model, apps. I think out of the 5 layers, we got 3 layers right here, or maybe 4. So we'll find out. But so this is a broader conversation that we want to have in terms of what India, where does India fit in these 5 layers, and where does India have natural advantage? Where does it need to build strength? Should we build strength? Should we go into areas where we don't have a natural advantage, et cetera, et cetera? So I think there's a lot to cover here in that sense. So let me just sort of throw open the discussion. And Aarti, why don't you sort of set this up for us? Why do you think India is attractive in the field of AI, and where do you think the natural fit really is?
Thank you, Prashant. First of all, good afternoon, everyone. It's great to be here. And fantastic being here with my co-panelists. All of them are close partners that we work with, Hemi and Archana. It's great to be here with you today. So when you look at India as a destination, right? So I think the first thing that all of you will agree is the demographics, right? So when you look from a consumption point of view, right? India is the biggest market. Given our population scale, consumption of AI, whether it's on the consumer side or, so that's a big one. And the second one I would say is the complete diversity and the population scale data again. So data, the second D, so demographics data. The third one I would say is the developer community, which comes back to the talent. And this is a community which is constantly, right, raring to go, learn, and look at all the technology advancements and start building that capability at scale. So I think those 3 are big reasons when you look at, whether it's from a model point of view, consumption point of view. So I think that's a big, India becomes a very big, important destination for global companies. And I would say the most latest entrance into this space is the data center. With the focus that the government has brought in, where the AI infrastructure, rightfully so, is the foundation for artificial intelligence. So there's a huge focus on data centers and building out that capacity in India. So I think all the government policies, the focus on the India mission, plus the 3 Ds I talked about, the demographics, data, the developer community, and the talent, make India the best destination for companies to partner with us.
And of course, TCS has now gone into the data center side of things as well with that partnership with TPG. So we will see more of that build out in the coming sort of months and years.
Absolutely.
Jaime, come in here. Same question to you. I mean, just to kick this conversation off, why do you think India is so attractive? By the way, Amazon, of course, has announced tens of billions of dollars of investment, right? Both on an overall company level and also cloud and on the data side. So take it away.
Yeah, when we talk about investments, it's good to start putting facts and actions into play. We recently announced 35 billion investment across Amazon in all the different businesses in the country. In particular, data center and cloud. We announced 12.7 billion of infrastructure in the country, in India in particular. So I can tell you that's the magnitude of opportunity we see. For me, mentally, India equal opportunity and transformation. So at the end, the world of AI is really about transformation. But let me go deeper in 3 of the topics that Aarti actually mentioned. India has a remarkable talent pool, which is shown in terms of developers, millions of developers, startups that arise from India, And the fact that 50% of the population is below 25 is a huge data point because it's a remarkable pipeline of talent. But it's also about learning agility. All these millions of young men and women are arising in a world where they grow digital already, with full understanding of the importance of technology. But there's one word that really matters in the world of AI is learning agility and a culture of experimentation. Because the technology is there, but it's the people that is going to make the most. And it's so willing to understand a need, a customer need, or so an idea, and convert it into a reality by leveraging the technology. And that culture is what India talent has. And it's also a view that whatever is done for India can make a difference to the world. And that is what makes India so relevant, even from a global perspective. The second topic, and you just talk about it, is the government approach to digital data center and cloud technology. When they make an announcement to make it part of the core national infrastructure, that's a huge step forward because they offer millions of people the opportunity to have access to technology that is scarce in an affordable way. And that transforms into democratization of opportunity. When you provide access to the technology, you are, by definition, democratizing opportunity independently of location and in very different, diverse talent pools. Lastly, why we're here, our partners. Because at the end, transformation requires strategic partnerships. And TCS is a great example of that. So when you combine all that and the fact that we have been, as AWS, for many years in the country, with billions of investment in it already, we have the foundation to actually invest and help in the country transformation.
You know, the government support that Jaime is talking about, of course, is in the union budget. The government announced a 20-plus year tax break for global companies who set up data centers with Indian partners here in India to service global clients, right? That was so it's really one of the boldest moves in the budget, in this budget, and of course that focus on data centers. Ashna, come in on chips now, right? And everyone wants chips, no one's getting chips. And it's,
we'll give you all you want.
But tell us, where do you see, what is it? I mean, of course, one thing I've heard is talent, partnerships, people, the developer community, and of course the government support now, which is very much there. So how do you see, where do you see India's attractiveness to kind of sort of develop this ecosystem?
Maybe I'll frame it a little bit in terms of what is India's opportunity and where all of us can play a role in sort of supporting that vision and ambition. The country has done a tremendous job leading the world as a sourcer, not a consumer, but a sourcer of intelligence, human intelligence, right? Whether that is through GCCs, whether that's through building great software. I mean, the talent in this room, TCS is a perfect example of all the workforce they have. Amazon has a huge presence here. We have 8,000 people here in AMD working in India. So that idea of extremely smart people solving very complex problems, this country has led the way in. But the big thing with artificial intelligence and sort of the fast pace at adoption that you're seeing is intelligence is broadening to both human and artificial. And that's where the data center conversation fits in. So when you talk about data center investments and builds, that's why having an equal presence in how that evolves and develops and being an active participant and an active leader in that is key. And that, I think, should be India's ambition. And I think is what's getting reflected in everything that's getting announced. Equally, TCS's ambition, right? That's why they announced Hypervolt and the direction. Now, I think the other piece is, I would actually sort of maybe bring this to everyone's notice is when we say data center is a very historical term. Data centers were the construct of way back when I had a very passive deployment of infrastructure and it housed data. AI is all about intelligence. So when you think about these infrastructure investment builds, it's actually about how you're building very deep intelligence centers that give you the outcomes in a materially different way. And so that positioning is super important. chips are one part of the story, right? And it's a complex structure because most of us who worked a certain way our lives are sort of adapting to what this means. And so from a semiconductor perspective or a chip perspective, our approach is, and what we're working extremely hard at, is how do you actually be ready for the scale and ambition people have? And I'm telling you, ambition is changing every month. It is amazing the conversations I go into, and people have such drive, such passion. I mean, when you look at our own engineers and at the rate at which they're developing, the rate at which we're releasing new products and capabilities, that pace has beaten anything you would have probably even planned 10 years ago. So I do think there is going to be massive transformation that happens, to Jaime's point. There is going to be equally a massive call to action for the talent that Aarti was talking about, but this opportunity is India's to take. Because I think the next 5 years is going to define how every country chooses to play in the space, either as a leader or a participant. And I think that's India's opportunity.
So I think very well put by all three of you. 6,000 people in India.
8,000.
8,000, beg your pardon. I didn't know that. So that's would all of it mostly be on the design side, or
most of them are engineers.
Engineers on the design side of it. So just to take off on that point, right? Because technology is advancing so fast, and better and better chips, etc. So how does a country like India, which is coming into this journey, and there's a mission, the government mission to get more of these chips into the country, etc. The government-led effort, really. But technology is moving at a very, very fast pace. So how does one keep up? And just your thoughts on that.
Everybody's sleep deprived by default, I think. But in all seriousness, I think this is again one of the things Jaime raised is partnerships are super important.
Okay.
All of us have strengths we've played with, and when you're moving at speed and pace that none of us are used to, you want to work with people you trust, and you want to bring in the best that you can. I mean, with our partnership, we are looking at everything that Tata has, the best that they're bringing, the expertise that TCS has and their insights, and then we're bringing what we play to, right? Our strengths are designing really, really good infrastructure and compute that can span. But we're trusting our partner to tell us, how do you want to go drive this at scale? What does that enterprise adoption look like? What does success for India look like? Those partnerships are key, right? And that's exactly what AWS does as well. So for us, it's these partnerships that I think are going to be super critical. And then we each play to our strengths. And look, if you want to know about getting best and brightest, if you go to the expo floor, please go by the AMD booth. We have the next generation rack scale system on display, right? If you want to see what 2.9 exaflops of FP4 performance looks like, it is right there for you to see. So when we talk about shipping the best to India for India to see, we have it there.
Tata AI Conclave, powered by CNBC TV 18. Tata AI Conclave, powered by CNBC TV 18.
You know, Arthi, if I can just come to you, partnerships, right? So talk to us about how this is really going to play out and how will Indian, because this is going to be led by of course, there's a government effort to it. It's very core to the government, as Jaime put it as well. But at the end of the day, at the front end, the sharp end of it is going to be led by private enterprises. So will we see more exclusive partnerships between companies XYZ, like, for example, what we see in the US? Or will it be everyone working with everybody else? Just give us a sense of how this is going to develop going forward.
See, when you look at this and, we made our announcement in October with Hypervolt and, investing in AI intelligence centers, if I may call it that, here in India. And I would say in the last, about 6 months now, I think there's been focus on, I would say, 3 big areas. One is partnerships. You heard our announcement with AMD, bringing rack scale, latest AI reference architecture, Helios architecture here to India. So I think that's a great example of partnerships. So partnerships with, chip makers, and there are going to be a lot of other partnerships which are required to set up the data center. So a lot of OEM partnerships are going to become very important in the entire data center built out on top of the chips. So we're very actively working on that. Then the second, I would say, is our own internal partnership within the Tata Group, which I call it Tata Group Synergies. Because building these data centers, what are we doing? TCS is coming together with Tata Communications, brings strong communication and networking experience at scale, right, globally. We are bringing together Tata Power, which is building data centers for AWS and other hyperscalers here in India. So we have that experience. We are bringing Tata Power, right, for all the renewable and green power that we need to really innovate and build these data centers differently here in India. So that's one. And then Tata Consulting Engineers who are into EPC management. So even within the group, we are bringing the power and the strength of the group to really, build out. One is partnerships outside, extremely important. We're going to do that. Plus our own internal synergies we are bringing together. But the third one is going to be also important because end of the day, we have to create demand. So we are working with partners to create demand, working with our existing partnerships that TCS has had for many, many years. So I think our customers are also becoming partners, right? Because they then come into the, build out of the data center. So I think it's just such a sweet spot where our partners, our customers all coming together, and some of the existing partners also become customers because they are going to consume the AI data center capacity in India. So I think it's just such a beautiful synergistic play that we are already starting to see unfold, and it's extremely promising.
Jaime, you mentioned the government policy and the incentives which have been provided, but just you've seen this play out in other parts of the world where you've set up capacity in data center capacity, etc. What does India need to do apart from, of course, this is a policy now, and it's a long, drawn-out, well-thought-out policy for a number of years, right? 2 decades plus. But where do you see any bottlenecks at all? You said you pointed out the people and the partnerships, etc., as upsides. I mean, any gaps which need to be fixed in your opinion?
It's a great question. I have to tell you, I get asked that all the time. And let me start going a little bit above India for a second. Asia Pacific, Japan, and China, that is my responsibility, and then come back to India. The biggest gap is not in the technology. In India, as we said, we have billions of investment to build the most robust cloud infrastructure. The technology is here. You have 2 full regions, one in Mumbai, one in Hyderabad. You have technology that is reliable, scalable, secure, and that incorporates the latest AI technology, including Bedrock, that allows our customers to have choice of models in order to drive the best applications. So the technology is there. Key things that we always tell our customers that need action at speed, because the speed matters. First is data readiness. there's so much to do in order to have the right data, in order to let the technology make the right decisions. That's good, and that requires a lot of work, and that's where, together with TCS, we work very closely with our customers in order to allow access to that data in a secure way, providing the data to where it has to be to make the right decisions by the technology itself. The second topic is there's still, in APJC, and in India in particular, still a lot of workloads on-prem. And we are convinced that in order to have the best scalable technology, it has to evolve to the cloud. And we just talk about the importance that the government is providing to the cloud and data centers. That requires work. And that's something that the earlier we embark in the journey, the better our customers are going to be able to use technology. And we talk about skills and talent, but the other one is really a mind shift, as I was saying before, from automation to full transformation. The real benefit of AI is that it's gonna superpower human beings in context of 5x, 10x, to be way more efficient, productive. And an example of that, I actually did it with my team. We brought ideas and used technologies, our key role, that allow us to develop applications and convert that ideas into something, into an application in 1.5 days, myself and my team. This is what we're talking about. It is about enabling human beings, talented, that have ideas, and convert that into a reality. But it requires a transformation in the way leaders allow their people to experiment, allow them to actually learn from failure, and leverage the technology to completely transform. That's a cultural change that has to be led by company leaders. That's where we're investing a lot of time. Not only, as I said, the technology is there, but once you have the data, once you have the applications on the cloud, you also need leadership to lead by example in a way that allows people to experiment and continuously iterate in order to transform the experience. That's where we invest.
The second point that you mentioned, which is moving the data actually, which is on-premise to cloud. So in India, for example, where are we at? Would you have any numbers? I mean,
I can tell you we're working closely with large enterprises, and we've made a lot of progress, but there's still always a gap to be done. Okay. But the most important thing is to identify what are the key applications and the data that needs to be in the cloud. As we talk about transformation, we work closely with partners and customers to determine which applications have to be moved, and many of them that will be deprecated by new services, understanding and leveraging the technology that exists. That is the word, and there's always opportunity.
So in terms of penetration, your numbers, your estimate, 40%, 50%?
I mean, the number that Andy Jassy, our CEO, provided is that it's still 80 to 85% of the applications remain to be migrated. I can tell you at the end, I think that's a pretty good number.
So that is the demand for you, right? As you build out this infrastructure, that is the demand. I mean, that is the work. I mean, as you effort to get all this out into your data centers in that sense.
In my view, it's very simple. That's the opportunities all our customers have in order to transform the customer's experience and really provide the service that all our customers are demanding.
What about some of the other stuff? I mean, power, land, water. I mean, those kind of things. Are those issues at all as you see it? Have there been issues in other places like China, etc., that you mentioned? Do you expect that to be, I mean, problems to be solved along the way? Or is
I think, let me answer that in a very simple, as Arti mentioned, that's where our partnerships allow us to grow and invest in the different countries in order to address the different challenges that we have or the different opportunities we have. That's the value and the importance of our partners in every market where we operate.
Tata AI Conclave, powered by CNBC TV 18.
and welcome to Business 360. I'm Arundhati Ramanan, and here are the headlines that we're tracking for you this evening. Markets end in the green for a third straight session. Nifty ends above the 25,800 mark. All sectoral indices except IT eke out some gains. Stocks listed on the Nifty IT lose a market capitalization worth 32,000 crore rupees. There is no need to panic over AI, says TCS CEO Krithivasan, adding the fear-mongering is overdone, expects the company to straddle the arc from intelligence to infrastructure, also hints at potential acquisitions. That's an exclusive. US chipmaker Qualcomm believes India can become the fastest-growing AI nation in the world. President Cristiano Amon highlights India's ability to leapfrog technological stages as he pledges $150 million for AI startups. That's another exclusive. The US government is open to changing the enforcement of tariffs imposed on steel and aluminium, says Trade Representative Jameson Greer. 50% tariffs were imposed last year in a bid to curb imports from China, but many companies have agreed to the duties are complex and costly. French President Emmanuel Macron wraps up his Mumbai visit and heads to Delhi to attend the AI summit. The finance minister of France says there is a lot of French investments in India, but not enough Indian investments in France. Urges Indian companies to invest in engineering, research, AI, and other sectors. Government's telecom department nudges Adani-backed Navi Mumbai Airport to allow telecom companies to deploy network infrastructure at its premises. The intervention from the government comes after telcos flagged that the airport authority had denied them right of way to deploy infra. Representatives from Noida's Galgotia University booted out of the AI summit after a controversy over RoboDog. The university tried to pass off the RoboDog made in China as their own innovation. We will come to that and much more in just a bit, but first to the market action of the day. Market registered its third straight day of gains. The Nifty 50 closed above the 25,800 mark, with Reliance, ITC, Tata Steel, Axis Bank and L&T emerging as the top contributors. All sectoral indices except IT eke out some gains. Indian IT stocks snapped a two-day winning streak after Anthropic's launched a new model, rekindling worries surrounding the AI disruption. The Claude 4.6 is Anthropic's second major release in less than 2 weeks and will serve as default model for its chatbot and co-work productivity tool. Several brokerages are, however, upbeat on top Indian IT companies on the back of a host of the ups to leverage the AI opportunity. So where do Indian IT companies feature on the AI pecking order? Rima Tendulkar is here with all of those details. Rima?
Thank you very much for that. Indeed, generative AI, advanced AI may be the buzzword right now, but the actual revenue contribution from these technologies is still in very early stages. Now, yesterday, Infosys at the AI Investor Day said the generative AI contribution stands at 5.5% for the company, which is pretty much in line with TCS at 6% and HCLTech at nearly 4%. But remember, the definition of AI revenue may vary across companies, which makes direct comparisons tricky. But the question is, how will you read this number, AI contribution at 5%? Would you be disappointed because AI has been around for some time, but still the revenue contribution is 5%? Or will you look at it as a half glass full and say, well, it's only 5%, which means look at the significant headroom for expansion from here on. Now, brokerages is still bullish on Infosys. In fact, overnight, a lot of calls came through. We analyzed them. There are 52 analysts, out of which 38 have a bullish call, 12 of them hold, and 2 of them have a sell call. Global brokerages like JP Morgan, Jefferies, UBS, HSBC, CLSA all reiterated their positive call. For JP Morgan, the target price stands at 2,050. For CLSA, it's 1,779. And the bullish stance by these brokerages rests on 5 key drivers. One, the AI-first services opportunities. That is expected to expand sharply. Yesterday, Infosys said it's a $300 to $400 billion opportunity by 2030. Secondly, data modernization is emerging as a key growth driver. Enterprises need partners like Infosys and others to clean, organize, and modernize their legacy data before you can actually deploy AI at scale. Third, even Infosys' collaboration with Anthropic, the strategic partnership, does show that the company is taking steps to remain relevant in the AI ecosystem. Fourth, just talking about the near term, here and now, FY27 macros are looking better, which means FY27 in all likelihood is going to be better than FY26 for all the IT companies. And finally, fifth one, the valuation comfort. For Infosys in particular, it's trading at 18-19 times forward multiple, which is cheaper than the long-term average multiple of about 20 times. So the message from the brokerages is clear. They're bullish, but it is disconnected with what's happening in the market. The Nifty IT index continues to see pain. It's down 15% in the month of February alone. And it's now very close to its 52-week low, less than 5% away. And this is not a domestic story. If you look at the global ETF for software, that is down 22% on a year-to-date basis. But that's about the numbers and the markets. The other worrying thing is on jobs. Now, yesterday, Nandan Nilekani said that on account of AI, 92 million jobs will be lost, but 170 million jobs will be created. But if I just look at the Indian IT companies, in the first 9 months, more jobs have been lost than created. The headcount for the top 4 IT companies is down by 700 plus in the first 9 months. It's on account of TCS and the restructuring that they did. But the question for the economy remains that if on account of AI, we do see a decoupling of revenue and jobs, then what happens to job creation? Back to you.
So the IT index, they're still feeling the pressure. Thank you so much for those details, Rima. From equities to the commodities market, oil prices improved marginally on uncertainty about a positive outcome from US and Iran's indirect talks. However, reports about rising output from Kazakhstan's primary oil field limited gains. And back home, the India AI Impact Summit has been extended by a day till the 21st of February following a large turnout. The summit has also entered the Guinness World Record for the highest number of student pledges within 24 hours for responsible use of artificial intelligence. Union Minister Ashwini Vaishnav received the honor. Speaking to CNBC TV18, Vaishnav said that the venture capital firms have committed $17 billion for India's deep tech ecosystem. Meanwhile, TCS CEO K. Krithivasan dismissed fears of an AI-led disruption in the IT industry. He said there was no need to panic because AI will help expand the scope of work. Take a look.
Over the coming 2 years, we can expect about $200 billion investment in the AI infra layer. And simultaneously, we can expect more than $17 billion in VC funding for the startups and deep tech, especially deep tech startups, in solutions, in applications, in the way AI would be used.
There's so much happening and there's no need to panic. You have to think, sit back, relax and think properly. There's so much of more work to be done. Every time there's a disruption, the work expands. And the good companies will participate, take a forward-leaning approach, invest in that, and they should be able to increase the pie. It's again based on a larger scheme. We believe that you will be able to participate more in the AI ecosystem if you operate across multiple layers. We are looking at participating right from the infrastructure layer. There's the infrastructure layer, there's a model layer, there's the application layer, then there's the intelligence layer. We want to increase our participation in each one of those layers. That's why you see we participating with TPG, then signing up with AMD. We also signed up with some of the design companies. So that's the overall plan.
On to a CNBC TV18 exclusive. US chip maker Qualcomm believes India can be among the world's fastest growing AI nations. Speaking to my colleague Shireen Bhan, the company's president and CEO Cristiano Amon highlighted India's ability to leapfrog technological stages as he pledged $150 million for AI startups. Amon added that India's AI opportunity lies in deploying tech at scale across its vast population and industries.
How the entire economy of Asia is going to get developed. I think India has an opportunity to be one of the fastest growing AI nations in the world.
We do have the talent. That's our biggest advantage. But you truly believe that AI is going to be the fastest AI nation?
I think you're going to have different models going to be developed. There's going to be global models. They're going to be Indian models. They're going to be available. But then the real value is how quickly can you deploy this across industries? How many people can you reach with the technology? How many different things? And I think that's the opportunity for India.
So you've just announced a special fund for India to invest in AI-specific companies. Take us through that.
Look, we have a long history here in India. We have a significant part, I think, of Qualcomm also here in India across multiple locations in Bangalore, Hyderabad, Chennai, Noida. We'll continue to expand, of course, Delhi, Mumbai. We have been here into every transition of wireless, and Qualcomm has been as an enabler. We are an enabler of companies. I think we provide technology, we provide chips for companies to develop their products, their applications. And we believe that we've seen how that has developed over time in India, the number of startups here. And because we believe so much in the potential, I think, of the country, in how AI is going to be transformative, we are announcing, a new fund for a ventures team to invest in India startups and founders. They're really going to be building this future of AI alongside us, and I think we're excited. I think it's another step in our journey with India.
And it's not a small number, 150 million.
It's significant for startups, especially for companies that have a good idea, have a vision, and want the funds and support. And the other thing that goes beyond the funds is when we invest in some of those companies, we also help them with the Qualcomm ecosystem, access to our engineering capabilities, our development platforms, our chips. And I think when I was in the breakfast, I met CEO of companies that were actually started when a few years ago when we're just starting, and they're now becoming significant companies. I think that story is going to repeat itself with AI.
NVIDIA is expanding its footprint in India by partnering with venture capital firms to support the country's fast-growing AI ecosystem. In a statement, NVIDIA confirmed its collaboration with VC firms, which include Peak 15 Partners, Z47, Elevation Capital, Nexus Venture Partners, and Accel, to identify and fund startups across the country. The move follows increased interest from venture capital investors in India's strong public listings market. NVIDIA currently supports over 4,000 Indian AI startups through its global startup program. Large language model developer Sarvam AI has unveiled its first homegrown foundational models that it says is tailored to India's languages. The Bangalore-based company announced two models at the AI Summit in New Delhi, Sarvam 30B and Sarvam 105B. These models are built to be used through voice commands and are accessible in 22 Indian languages.
So we have been releasing models already, which do very well on Indian languages. We are far ahead of other models in terms of the nuances that language brings in, and India is, of course, a hard benchmark in terms of AI for languages. But the other thing is, we also want to be super competitive on other tasks, like, for example, math and programming and calling tools, etc. So we want to build for all of that, but Indian language is a specific focus.
Representatives from Noida's Galgotias University were booted out of the AI Summit after a controversy over a robo-dog. The university claimed that the robo-dog made in China was their own innovation. The robot showcased by the university as Orion was recognized as the Unitree Go-To made by a Chinese robotics firm. Speaking on the controversy, METI Secretary Krishnan emphasized that only authentic work should be showcased at such events.
It's essential that a code is followed there. Our intention is never to encourage somebody to, plagiarism or anything of that kind cannot be, misinformation cannot be encouraged. So we don't want a controversy around this. We don't want controversy around exhibits in the expo. So I'm not getting into whether they are right or wrong. We just don't want a controversy.
On that note, it is time for us to head into a short break. But coming up, the U.S. government is open to changing the enforcement of tariffs imposed on steel and aluminium, says Trade Representative Jameson Greer. More on that when we come back. Stay tuned. Welcome back. You're still with us on Business 360. The Telecom Department has asked the Adani Group to allow telecom companies to deploy network at the Navi Mumbai airport. The department has said that the Telecom Act mandates non-discriminatory processing of right-of-way applications as the airport qualifies as a public entity. Remember, telcos have alleged that the airport operator asked them to utilize its own exclusive in-building telecom network at high charges. French President Emmanuel Macron has headed to Delhi to attend the AI summit after wrapping up his visit to Mumbai. France's finance minister has said that while French companies have invested in India, there have not been enough Indian investments into France. Speaking to CNBC TV 18, he urged Indian companies to invest in engineering, research, AI and other sectors.
Well, we can certainly do better on both fronts. Exports and imports, they're okay, but, you know, we're down the list of trade partners and we should be doing much better both directions, and this is one of the places where it should happen. But also in terms of investment, there's a lot of French investments in India. There's not enough Indian investments in France. We have great energy that's low carbon and cheap. We have fantastic engineers. We have great infrastructure. We have fantastic social model. So Indian investment should come to France and help French business grow, as French businesses have come here to help Indian business grow. There's a lot of win-win to be done.
Google CEO Sundar Pichai met Prime Minister Narendra Modi on the sidelines of the AI Impact Summit in New Delhi. In a social media post, PM Modi wrote that they talked about the work India is doing in AI and how Google can work with Indian students and professionals in this field. Pichai is expected to deliver the keynote address at the summit on the 20th of February. His visit comes months after Google announced its plans to invest $15 billion to build an AI data center in Visakhapatnam. On to a CNBC TV 18 exclusive, Dr. Reddy's Laboratories MD GV Prasad has said that most regulatory issues surrounding the company's weight loss drug in Canada have been resolved and a launch is likely in May. Following this, the company will look at expanding into other markets as well. Speaking to CNBC TV 18, he said he expects double-digit growth in India to continue. Prasad also hinted at potential acquisitions in the consumer healthcare segment.
There is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be a timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch.
Big or how lucrative a market would Canada be?
So Canada, for the initial time when we will be alone in the market for a few months, will be very significant. After that, competition will come in like any other market, and then we'll start seeing price erosion.
Okay.
Air India and the Lufthansa Group have signed a memorandum of understanding to set up a framework for a joint business partnership. The agreement will cover Air India and Lufthansa Group's carriers and subsidiaries, including Air India Express, Swiss International Airlines and Austrian Airlines, among others. The airlines plan to fly more passengers between India and Europe and collaborate on areas like scheduling, route planning and IT infrastructure. Shares of Ola Electric rebounded in trade today. This after the company clarified that the Bombay High Court stayed an arrest warrant issued against CEO Bhavish Agarwal in Goa. In a statement, Ola Electric said the High Court held that the Goa District Consumer Disputes Redressal Commission had exceeded its jurisdiction while issuing the warrant. The commission had issued the warrant after Agarwal allegedly failed to appear before it in connection with a customer complaint regarding an Ola scooter. U.S. Trade Representative Jameson Greer says the United States is open to tweaking how its broad tariffs on steel and aluminium are enforced. Speaking to CNBC, Greer indicated that while the core tariffs would remain in place, the administration is considering changes to ease compliance burdens for companies. He also claimed that the tariffs on the two metals led to the opening up of more shipping lines in USA.
Remember, we've shipped 300,000 more 300,000 million metric tons more this year than we did the year before. We've produced more than Japan. There was some reporting over the week about adjustments there. I mean, you may want to sometimes adjust the way some of the tariffs are applied for compliance purposes. I'm not giving you double talk here. We've heard stories of companies that have had to hire extra people for compliance. We're not trying to have people, do so much bean counting that they're not running their company correctly. The president's tariffs on steel and aluminum have been very successful, shipping more steel than ever, opening up new steel lines, new aluminum smelters announced. So clearly those are going the right direction. They're going to stay in place.
And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV 18. Hello and welcome to Startup Street. I'm Arundhati Ramlin, and over the next 30 minutes, we're going to put the spotlight on the India AI Impact Summit. Now, the India AI Impact Summit has been extended by a day till the 21st of February following a large turnout. The summit has also entered the Guinness World Record for the highest number of student pledges within 24 hours for responsible use of artificial intelligence. Union Minister Ashwini Vaishnav received the honor. Speaking to CNBC TV18, Vaishnav said that venture capital firms have committed $17 billion for India's deep tech ecosystem.
Over the coming 2 years, we can expect about $200 billion investment in the AI infra layer. And simultaneously, we can expect more than $17 billion in VC funding for the startups and deep tech, especially deep tech startups, in solutions, in applications, in the way AI would be used.
Large language model developer Sarvam AI has unveiled its first homegrown foundational models that it says is tailored to India's languages and culture. The Bangalore-based company announced 2 models at the AI Summit in New Delhi, Sarvam 30B and Sarvam 105B. These models are built to be used through voice commands and are accessible in 22 Indian languages.
So we have been releasing models already, which do very well on Indian languages. We are far ahead of other models in terms of the nuances that language brings in, and India is, of course, a hard benchmark in terms of AI for languages. But the other thing is, we also want to be super competitive on other tasks, like, for example, math and programming and calling tools, etc. So we want to build for all of that, but Indian language is a specific focus.
We will see a lot of job displacement happen. That's the word coming in from Coursera CTO Mustafa Furniturewala. In a conversation with CNBC TV18's Ashmit Kumar at the AI Impact Summit, he adds that AI will change a lot of roles, but make them more productive.
I think one of the things, if you just step back, is to understand that, there is a lot of job displacement that's about to happen, right? And at the same time, India is at a place where about 20% of the workforce is in the AI. If you look at the global workforce of AI talent, 20% is in India, and that's the opportunity. The challenge is, as you mentioned, there's a lot of job displacement. Sure. But one of the key things with the job displacement that's happening is that the AI skills are not very relevant or impactful without the domain skills. I see this even at Coursera when, with the engineering team or with the different functions, is when we have domain experts that work with AI, that's when they're the most productive versus just using AI skills. And we see this with training as well, right? When we're rolling out training programs, yes, the AI skills are absolutely important, but that goes with the cybersecurity skills, that goes with the cloud skills. Okay. So I think AI is going to change a lot of roles, change a lot of jobs. They're going to make it more productive. I think people will be able to automate a lot of the mundane tasks that they do in all of these roles. And it opens up a lot of space for these roles to work on the more strategic aspects, overall making us all more productive. So the key thing is actually going to be how do we enable all these roles on AI versus getting displaced by AI.
So if not replacement, would you use the word disruption, that is certainly coming, especially as far as low-skill tasks, low-complexity tasks are concerned?
Yes, disruption is definitely coming, and it's already happening to a certain extent with a lot of different roles. Okay. And for that, it's a couple of things are important, right? So one is what do you learn to make sure that you enable your role with the right skills, right? Okay. And that's where curation is going to be really, really important. We have this thing called verified skill paths at Coursera, which helps you for every single function have a skill path to gain those right skills for your role, right? And then the other aspect of it is how do you verify whether you've gained those skills so that you can be successful in your job. So yes, the disruption is definitely here, but I'm excited about how we can do upskilling, reskilling at scale to counter that disruption.
Let me talk about a couple of challenges as far as the India market is concerned. The second largest for you in terms of learners. Can you tell us how big of a challenge is it when you have as many languages being spoken here? And is that a hurdle that AI agents perhaps are likely to be able to help with? Is that something that you're seeing going forward?
Yeah, so we're seeing a large amount of enrollments from India. It's our second largest country in terms of number of enrollments. We see about 4 enrollments per minute, and it's growing every year in Gen AI content, right? In terms of the diversity of languages, the dubbing example that I gave is very relevant here because, we are able to use technology to get to a more diverse set of audience and get through those barriers of language for learning. So we've never been more excited than today because AI is really an accelerant to getting through that barrier that's been hard in the past.
In conversation with CNBC TV18's Shruti Mishra, Rohan Nayak, the CEO of Pocket FM, says that AI has helped boost content creation across platforms. He also puts a spotlight on AI adoption by Indian consumers and Pocket FM's new AI-driven platform.
I feel we're just getting started. So as you know, Pocket FM is an audio series platform for bingeable episodic fiction. But what we really have been doing is expanding the TAM for storytelling. A creator today, a writer today, using our AI suite, can convert their raw ideas, just anything, a raw idea, into a structured episodic fiction story, and then convert that story into a fully dramatized audio series, all with AI. With, from, conceptualization of the story to planning the story to even like high quality AI voice to sound design, background score. And what that has done over the last 1 year is that we have seen over 300,000 creators produce with these AI tools. And not just, and the interesting thing is, these are first-time writers. So think of it like that, there are so many people who have ideas, but they don't have the time or the know-how to produce it into a high-quality story. And this has exploded content creation on platform. We believe that the 300,000 will go to 1 million by end of this year, fueling the growth from 300 crores to 1,000 crores. And I think that might just be a conservative estimate. I think it's just going crazy.
So the 1,000 crore is pretty much doable according to you.
For sure.
Okay, now let's get down to, last week, Meteor announced that AI-generated content must be properly labeled, it must be properly, targeted. How are you going to comply with this technically and operationally?
I mean, we're already complying in a way, and our teams are working on it to label every AI-generated story. So I think, I agree with these rules, and we should tag any AI-generated content as AI. So we're already doing that.
But do you think this will affect users in some sort of a way when, and how are you going to, are you going to put this right at the beginning of the audio series or, how are you going to play this? And do you think consumers are sort of not going to like it when they hear it?
To be honest, I've been surprised by the adoption of Indian consumers towards AI content. I mean, a lot of times users instinctively sometimes know, but I don't think it'll matter that much.
Okay, all right. You're now evolving from Pocket FM to Pocket Entertainment. So take us to the vision there. And when it comes to AI integration, are you primarily chasing cost efficiency, hyper-personalization, or you're looking at completely new storytelling formats?
Yeah, I mean, all of them.
Okay.
So, for instance, I think we believe that as content production, the cost of high-quality content production is almost going down to zero. Even not just audio, I mean, even video. So for us as a platform, if you think about, we're in the business of finding great stories. So if we have a great story, audio should not be the only destination.
Yeah.
It should also go into video and other formats. So that's the shift from Pocket FM to Pocket Entertainment. We'll be launching an AI video platform in the next 3 months.
On that note, it's time for us to take a short break. But coming up, the India AI Impact Summit highlighted the growing role of artificial intelligence in the real business world, especially for Indian startups. CNBC TV18 spoke with several startups that are shaping the future of AI. Stay tuned. Welcome back to Startup Street. The India AI Impact Summit is putting the spotlight on how artificial intelligence is moving from buzzword to real business, especially for Indian startups building deep tech, enterprise AI and applied AI solutions. The summit is bringing together founders, investors, global tech leaders and policymakers, helping startups access capital, partnerships and real deployment opportunities, not just conversations. Billions of dollars in potential funding and collaborations are being discussed across sectors like health, finance, mobility and manufacturing, giving Indian AI startups a serious global platform. CNBC TV 18's Aishwarya Anand caught up with a host of AI startups that are already using this technology to solve everyday problems and build scalable real-world products. Take a look.
Bharatjan is not just about models, because sovereignty is not just about models. We think a lot about the whole AI ecosystem and how do we raise that AI ecosystem. And I'll give you a few examples. We have a partnership with 9 academic consortium members and institutes. And we partner with them to do deep technical research. And that research is published in the top journals around the world. You can't build AI without that deep technical depth. The other thing we do is you can't build AI without the builders. And so we have over 100 BTechs, MTechs and PhDs across these institutes that are interning with us. So before they even graduate, before they even get a degree, they know how to build and tune LLMs. So we're building the next generation of builders. Now, it doesn't end with talent and research, you need a lot of data. And so we actually have teams of people that are on the ground and collecting data. So we have people knocking on doors of publishers, seeking out-of-date data, looking at people that have captured old books, old newspapers. We're actually going and digitizing that and we're bringing that in. I'll give you an example. We have digital heritage organizations that go out and scan old manuscripts and old books. Now these just lie there as PDFs, but they're not searchable, they're not usable. So we offer a service where we take these old manuscripts that have been scanned and we run cutting-edge recognition on it to extract the text from it. Now once you've extracted the text, it's searchable, it's usable, and all we ask in return is that we get a copy of that data for training our next generation of models. So you see that models are just one thing that we do. There's a whole lot more that needs to be done to raise India's AI standards.
All right. Professor Ganesh, coming to you now. You're launching a 7B multilingual foundation model here. How many Indian languages are we realistically talking about, and how production ready is it now?
So our 17 billion parameter model covers all the 22 Indian scheduled languages significantly well. Now when we talk about coverage, we also talk about code mixing, which means I could be talking in Manipuri and have a few words coming out in English.
Currently we have 500 odd shows in our library, which is essentially published on Dash Reels. Out of these, 30% currently are AI shows. Okay. And nobody in the world can claim that. We were the first to produce a complete AI microdrama, Raftar, in the August last year. And this year, currently, we are producing 15 AI microdramas every month. And we plan to scale it to 100 microdramas every month by end of second quarter. So that's what it means to be an AI first microdrama company, essentially Dash was being.
Now you're previewing Framio Pro here for the first time. What problem in traditional production does it aggressively solve?
So, if we talk about traditional production, there are 3 fundamental problems with it. One is the cost. When you look at the budget runs into $1 million. If you look at the timelines, we are talking about months. It takes anywhere from 4 to 6 months. And then there are certain limitations in terms of creative freedom. You can't really sort of come up with a fantasy world and bring it into the video. You need to have serious SFX sort of bandwidth, which is not available with everyone. So these are the 3 predominant limitations with the traditional production system, which we are solving using Framio Remix.
Okay, all right. You say production time drops from months to days and costs fall by 90%. So what does that mean for creators and studios in India?
So essentially our mission has always been democratization of content creation for not only for India but globally, and essentially that's what we are solving when we are launching Framio Remix.
Is AI replacing content creators, or is it actually providing them with more storytelling tools? I mean, if today AI can make all the content, what will the creators do?
So, I mean, the one fundamental thing is AI is the technology. It enables you, but it is not replacing human creativity. And storytelling has always been about creativity, you know. I mean, you can't tell the same story like hundreds of times and expect it to be as engaging as ever. So it does not solve for creativity, it solves for creation. So it empowers creators to put out their ideas into the world. So in that sense, not replacing creators or artists is just enabling them.
So it's a latency, more than anything, latency is the biggest hurdle today. You have to set multiple edge data centers in every 100-200 miles to solve this those critical workload. So it's like one is the border security, maritime, then autonomous vehicle. It can solve the problem for the drones, unmanned vehicles. So these problems can be solved through this lower Earth orbit data center. That's what we are trying to solve.
Okay, all right. Now you're calling this sovereign AI infrastructure. How is this meaningfully different from global hyperscalers like AWS, Azure, or Google Cloud? What are you doing differently than what they haven't done?
So I think different. I say the technology is the same. The problem we both are solving same. The only difference is we are a 100% Indian-owned, operated company. They are a foreign company, and given the today's utilization on computer, 90% is foreign cloud, 90% data centers are foreign company owned data centers. So that's a sovereign aspect we are bringing, because if data is a oil, this oil is refined by refineries, which is controlled by outside country and people, and the people who has control the energy in the refinery, they control the world. And that's the philosophy, that why not build for India, why not build in India for the world, and that's how what we are following today.
Okay, so now you've partnered with Agnikul for this, right? I want to understand what the partnership would entail. What is it that you'll be providing to them? If you could give us a little bit of depth on that sense.
Absolutely. So this is a discussion I made Agnikul guys, Srinath and Moin in 2019. It's long back when I started like my data center journey. Like I want to build in a space. That time we discussed, but that time is very early for the entire industry, space industry. For ourselves, we were a startup. And now this is the time. So we restarted our discussion, and they have enough capability built in-house to send it in space. And timing is right, because this critical workload which is required, earlier that was not a demand. Now it is a demand for the today's, the enterprise demand, or the government demand. Everything is there. So I think this is the right time. And fairly people explore this space in US. And why not build a made in India product and put it in this space, which is 30% cheaper than the American companies.
So see, we are already a autonomous drone delivery company. We have already made about 3.6 million deliveries in the past 2.5 years, saving about 1,000 tons of carbon emission, and largely doing this in Gurgaon, now taking to Bengaluru and things like that. At the India AI Summit, we wanted to make a difference in the world of physical AI. So what we wanted to do is we have brought in two partners with us, Arrive AI, which is building these smart mailboxes which are there, which are capable of receiving the packages. We still utilize this infrastructure in certain few pockets that we have installed, and residential townships and things like that, which are essentially there. But we have also introduced autonomous rovers into the whole picture, where everything, so the drone, the pod and the rover are in sync with each other, and it creates asynchronous end-to-end delivery without the man in the loop. So we removed the man from the loop, where the rovers are going and doing the last 50 meter, 100 meter sort of a delivery to the doorstep, and everything is working in a sync, ensuring that the product is delivered within 10 minutes, and at the same time, this is world's first.
Okay. Help me also understand this, that safety and regulations are always key concerns in drone logistics, right? How critical is Sky UTM, your AI-powered air traffic management system, in making large-scale urban drone delivery actually viable?
It's super critical from the fact that when you're flying a drone, you need to understand that there are a lot of nuances, a lot of things which can go wrong, right? Especially on the infra side of it. You have wires hanging around the building. You have lots of other issues. You might have a different amount of people flying different drones, kites, anything, any nuances can be there. And even a second of a delay to adjust things is going to result in a chaos and result in an incident. So Sky UTM becomes the platform which is helping the drones navigate safely. It is helping the drones and the drone operator understand which are the obstacles which are there, where you can fly, how can you be a compliant authority and compliant operator to fly in authorities in geographies which are typically allowed for you to fly.
And with that, it is a wrap on the special edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Qualcomm presents CNBC TV 18 Bar Breakfast with CEOs. Building Edge AI for India.
We know that it is impossible to get a house full for breakfast. Cristiano Amon, you've pulled off what AI couldn't do, but thanks very much for joining us here this morning. It's great to have you join us at the India AI Impact Summit to talk all things AI. Before we talk AI, Cristiano, I want to understand from you. I read a quote of yours, something that you tell your team, that we're in the gladiator business. We have to reinvent ourselves. Speak to me about the reinvention that you see for Qualcomm in an AI era.
Well, first of all, very happy to be here. Thank you for the opportunity to talk to you all. Thank you for coming. I think it's not only unique to AI, but I think in general, I think the tech sector has to always be reinventing, itself. Success on a particular technology in a particular era, it does not mean that you're going to be successful in the future. So you always have to move ahead of the trends. You have to invest in the technologies that are going to become relevant in the future. You have to make bets. And I think in our history in the company, that's what we always try to do.
Well, speaking of the bets that you are making, what are you most excited about at Qualcomm today? And as you look ahead, what's on the vision board in terms of green flags? What's on the vision board in terms of red flags?
I get this question a lot, and it's a very difficult question to answer because I'm excited about many things, and Qualcomm's doing many things. If I have to compare Qualcomm probably against some of the other semiconductor companies, I think what makes Qualcomm very unique is how broad I think our technology is. We're doing chips that go from below 2 milliwatts when you use an earbud that is now connected to an agent, all the way to 2,000 watts now as we go into the data center. So I think it's kind of a unique situation, and because of that, I'm excited about everything we're doing, from personal AI devices to phones, the future of AI phones and PCs and cars and industrial robotics, and of course the data center.
Well, of course, the data centers as well, which is where you now intend to focus your energies on. But, you're most excited about the edge, and you believe that whoever has a presence on the edge has the right to win. Explain why you believe that to be the case.
And by the way, I believe that it's going to be the case. It's 100% probability that's going to be the case. Look, here's the way we should be thinking about this, because there are many things that happen with AI. And let me start explaining this, thinking about consumer. There are enterprise, there are industrial cases, but consumer. I think we all been familiar with personal computers. I think we've been using them, and I think especially here in India, something that is very near and dear to Qualcomm, given our heritage in mobile. I think the smartphone is the computer that fits into everybody's hand, and that's how in India the internet develops, how the cloud develops, everything around the smartphone. But now with AI, how we interact with those computers are changing. The computer now with AI understands us. It understands images that we see, understand what we say, what we write. And you see now how those computers are going to be modified by agents. And agents, they're going to be very useful if they are contextual aware. An agent that is going to be, the agent I'm going to be using all the time may be very relevant to me. Your agent may be very relevant to you. And that's because there's unique data that happens in the edge, where the humans are, if I'm talking about consumer. The same applies for physical AI and industrial. So, in the way to think about the evolution of AI, you see a lot of activity right now to create AI in the data center. But once that AI gets created, AI is going to be everywhere. It's going to be in the data center, it's going to be in the network, it's going to be in the devices. And whoever has the ability to have the whole end-to-end is going to be very well positioned. And that's the reason I say that the edge has a very, very important role when you think about who are going to be the winners in AI. If you go back in time to the internet,
yes,
in the beginning, people thought, who's going to be the winner for maps? Was it be MapQuest? No, ended up being Google Maps. Same thing, MySpace, Orkut versus Facebook and Instagram. there's a lot of things happening. We don't know who the winners are going to be right now. There's a lot of companies doing incredible things. But when this thing gets scale, you're going to have to make it very relevant for the humans. And it's going to be what is going to be in the data center, what's going to be in the network on the near edge, and what's going to be in the edge. And everything that happens connected to the person or the machine, you have a lot of processing that's happening there. I think the best way to prove this, when you think about an autonomous driving car. If you don't have to have an instant response, you can just run the autonomy on the cloud, but you cannot do that. And I think that's going to be no different than AI. So long answer, but that's why I think the edge is incredibly important about who the winners are going to be in the AI era.
You know, I'll get back to who the winners are likely to be, but you talked about smartphones. And in the AI era that we're living in today, there are obituaries being written practically every day. Some sector is being written off. Smartphones likely to be written off, or you believe smartphones are here to stay?
Oh, smartphones are not going anywhere. Look, I always like to go back in time and see kind of what happened with technology. When we at Qualcomm create all the technology that enable you to have a computer that fits in the palm of your hand, broadband with 4G going to wireless devices, or the computing that enable you to have a high-level OS that fits in the palm of your hand, there were people that said, oh, laptops are going to be gone. Laptops are going to go away. They did not go away. You still have a laptop. I still have a laptop. Actually, the one I have is actually powered by Qualcomm Snapdragon X series.
Nicely done.
But the workload did change. The workload did change. Let's go back to the thing that I just said. Early days of social networks and Facebook, people use their laptops now. Most people are using their phones. Commerce, e-commerce, you will use your laptop to buy things online. Not anymore. The majority of the world uses phones. The laptop's the exception. So I think what's going to happen is you're going to have those new classes of mobile devices. We see smart glasses. We see things that people wear, like jewelry becomes smart. You know, of course, wearables become smart because now you carry the agent with you all the time, and the agent see what you see. In case of glasses, hear what you hear. And workloads are going to shift from phones to those new devices. So the phone's not going to go anywhere in the same way that the laptop didn't go anywhere, but it's going to change its usability. It's going to be doing a lot of processing for multiple devices. It's going to do phone things, but some workloads are going to go to like personal AI devices.
I thought you were going to be wearing your Meta glasses powered by Qualcomm.
I should have. I actually got it with me, but I should have.
But, you know, let's talk a little bit about India. And I think the objective and the mission that the Indian government has stated very clearly is the idea of democratizing artificial intelligence in India. How do we make that happen? And what do you believe the road ahead needs to look like for that to truly be a reality?
Yeah. Look, I am incredibly optimistic about the opportunities here in India. And I think just to be consistent with everything I said, I think in this conversation, I go back to the past. You know, if you just look when the smartphone, revolution started here in India, if you look at the amount of data that is consumed by a user, India is probably among some of the top in the world. And if you look at how fast the internet developed and how things leapfrog, into the future, especially when you think about digital payments and everything that is now happening with smartphones. When I look of AI, that's going to repeat itself in India, but it's going to be more powerful. The reason it's going to be more powerful is because AI has an incredible ability to empower people. The same way that connecting to the internet has fundamentally changed, I think, people access to information. I think AI is going to take that to the next level. How you get access to information, how you train yourself, how you get instant feedback about things, how you learn about things, how you do different things augmented by an agent, and how the entire economy of agents is going to get developed. I think India has an opportunity to be one of the fastest growing AI nations in the world.
The fastest growing AI nations in the world, because there are questions being asked about the fact that we're just about getting into the LLM race. We don't have the kind of compute capacity that other countries have at this point in time. We do have the talent. That's our biggest advantage. But you truly believe that AI is going to be the fastest AI nation?
Look, let's kind of zoom out, right, and see how this is really is going to play out. If you think about the phone today, right, the phone is the most cloud-connected device in the world, and it's also the biggest development platform ever created. And if you look about how, you have services, there's some global services, some India services going to the cloud, and you have this thing through phones really democratize and reaching everything. The way I think about AI, and going back to the conversation about agents being very contextual aware, I think you're going to have different models going to be developed. There's going to be global models. They're going to be Indian models. They're going to be available. But then the real value is how quickly can you deploy this across industries? How many people can you reach with the technology? How many different things? And I think that's the opportunity for India.
Well, speaking of the opportunity in India, you're putting your money where your mouth is. You've just announced a special fund for India to invest in AI-specific companies. Take us through that.
Look, we have a long history here in India. We have a significant part, I think, of Qualcomm also here in India across multiple locations in Bangalore, Hyderabad, Chennai, Noida. We'll continue to expand, of course, Delhi, Mumbai. We have been here into every transition of wireless, and Qualcomm has been as an enabler. We are an enabler of companies. I think we provide technology, provide chips for companies to develop their products, their applications. And we believe that we've seen how that has developed over time in India, the number of startups here. And because we believe so much in the potential, I think, of the country and how AI is going to be transformative, we are announcing, a new fund for a ventures team to invest in India startups and founders. They're really going to be building this future of AI alongside us, and I think we're excited. I think it's another step in our journey with India.
And it's not a small number, 150 million.
It's significant for startups, especially for companies that have a good idea, have a vision, and want the funds and support. And the other thing that goes beyond the funds is when we invest in some of those companies, we also help them with the Qualcomm ecosystem, access to our engineering capabilities, our development platforms, our chips. And I think when I was in the breakfast, I met CEO of companies that were actually started when a few years ago when we're just starting, and they're now becoming significant companies. I think that story is going to repeat itself with AI.
Qualcomm presents CNBC TV 18 Bar Breakfast with CEOs, Building Edge AI for India. Qualcomm presents CNBC TV 18 Bar Breakfast with CEOs. Building Edge AI for India.
You know, since we're talking about an AI-driven future, one of the aspects that we need to consider is the cost. And, you know, how much can we actually see the cost of compute being brought down? In your experience, and given what you are doing at Qualcomm, to be able to address that problem, because that's going to be a critical aspect of being able to democratize AI, so to speak. What should we realistically expect?
Yes, and I think that is the reason the edge, it's going to become very, very interesting. Look, in how we think about computing software, I think at the end of the day, you know, I like to say that the software will find its most optimal computer, and that's where it's going to get scale. And I think we have seen this through other technology cycles. So what I believe is going to happen is as compute continue to increases, not only you have more and more capacity to run, you know, sophisticated and very large AI models on the cloud, but you'll be able to run that in your car, in your PC, in your phone, into your personal AI devices, in our wearables, in industrial, you know, appliances. And it's like just in a few quarters, we're going to demonstrate, you know, devices on the edge running multiple hundreds of billions of parameter model. And when that happens, the surface area of available computing for you to run models is going to be significantly larger. And what we have seen with technology, scale is going to drive a significant reduction of cost. Can you imagine, for example, if we didn't have, you know, the ability to scale? I think many of the technologies now we take for granted, you know, into the smartphone. The smartphone has integrated in itself every single piece of consumer electronics technology in a single device. And if you look at the price points of some of the smartphones right now, I cannot pick of a better example, and that's going to be true for AI. That's why the edge is exciting, and I think that's incredibly exciting, the opportunity here in India.
You gave us a glimpse of what we should expect from Qualcomm. How soon before we see some of these launches?
All of those things are happening right now. First of all, the transition of what we call, you know, the next mobile platform, which is those smart wearables that you can access an agent through our smart glasses, to, you know, a smart wearable, to jewelry that are smart and pendants, is happening right now. I believe things like smart glasses that they were running at about, from the early launches, the companies that pioneered this, you have volumes in the multiple tens of millions. That's going to go into hundreds of millions very, very soon. The other thing that is happening, you started to see agents being deployed in phones, agents being deployed in laptops this year. And the other things with physical AI, you start to see development of robots, which is, I know there's a lot of interest in physical AI, but like an autonomous driving car, it's a physical AI. And you just think about how that's going to look into a robot, and that's going to be very, very similar.
I'll get to physical AI in just a second, Christian, but, you know, I want to understand from you, when we talk about the build out, and we're seeing some, you know, jaw-dropping numbers coming in as far as the kind of infrastructure, AI infrastructure build out globally, 600 billion plus and counting. That's what the large tech companies are putting down towards that end. And the question is, one, return on investment, B, are we over-indexing on the infrastructure build out at this point in time? The other side of the story is, no, we're probably not doing enough given the kind of demand that is anticipated. The last time you and I spoke, we were talking about the supply chain constraints and the supply chain risks for the story, and we're back again now talking about memory chip shortages. So how do you look at what is playing out globally, both in terms of supply and demand?
Yes, I think there are two questions in there. Maybe I'll just go to the first one. It's very clear to us that whatever we believe AI is going to be, we're undercalling it. And I like to do this parallel when the year 2000 about the internet and the .com. Whatever people thought at that time, how big the internet will be, they were definitely undercalling. The internet today is way bigger than it was at that time. And I think that's true for AI. It's probably underestimated in the long run. The obvious question that I don't have the answer to is the current pace of build-out of AI will continue? Will stay at this level? Will accelerate? Will slow down? I don't know. I think what we see, however, is everybody's playing to win. People are investing to win. Maybe everyone will be a winner. Maybe there will be a few winners. But if anything, I will just use this moment to say AI is going to be created in a data center. It's going to be used by humans, by machines. And at the end of the story, this is going to be an end-to-end story. So I think the companies that are actually understanding that and investing in that direction